What's up, guys? Alright, let's start the stream off with this. Alright, first things first. If I don't hear nothing from you all day, and I say something that strikes a nerve, don't say nothing at all. Please, let's just start off with that. Because if the only time we hear from you is when you want to come out the woodworks, when you get offended, just don't even bother, okay? We're here to make money. At the end of the day, we're not here to go back and forth. And I think a lot of that was the point yesterday, was like, yo, the only time I see you is when you want to throw around some criticism, okay? So y'all can say what you want about me. That's fine. I don't really care, you know? But I do care if the only time I hear from you is when I got to strike a nerve to be able to get some comments and some, you know, and some engagement, right? But outside of that, good morning. I hope everybody is well. We just had, again, I do not block anybody on here. You know, you guys say what you want. That's cool. I'm not here to say how you should feel, think, all that fun stuff. But there's a lot, you know, just the point being is that I'm not going to block you. Okay? You're free to say whatever you want, feel however you want, but I'm not going to block you. All right? Just like every other, you know, industry player out there, I guess you can say. But we have CPI today. Yesterday, long off Apple, ARM ended up doing what we thought. Tesla, same thing. That 180 is a little bit of an area. I still think Tesla's going to be running into trouble. You know, I haven't even looked at the chart of it yet today, but I wouldn't be surprised if we get a little upside and then it just gets taken back. The stock is struggling, but for how long is it until it, you know, struggles like this, but does not go down and just stays where it's at and slowly grinds higher? You know, how long is it before, you know, whoever has been short for that whole $100 on the stock itself, when do they start getting sweating? When do they start getting sweaty and want to cover their position? But I want to thank you guys again for joining us. Today is the day. All right, today's the day. I've had a wonderful, dude, I've just been on my game, and I'm excited about it. Because I was just going through a little rough patch there, and I know exactly how I fixed it. You know, I know exactly how I fixed it. What's up, Ray? Good morning, buddy. But I know, it is crazy. It is crazy that, you know, that's the last thing I'm going to say about that is, you know, if the only time we hear from you is when you have something to say, you just want to come out the woodworks. If I got to poke the bear to get some comments, to get a hi, hello, how are you this morning? This is what I'm watching. Yo, you know, this is going on, this, that, the third. And why do I even care what you say? You're not doing anything to help the sole purpose of what it is that we're doing here. All right, but I will. Guess what? I'm going to step up to the plate. I'm going to do the damn thing. And y'all can just keep giving your money to people in Discord while they just take your money and they just continue to flip your money while you don't get forward. If you want to donate to the stream, the link is in the description. It only goes to the stream, not myself, just like the donations before you. All those donations before you are still sitting right here in front of us. But we'll put that to work one day. Once we get there, we'll get a couple things for the stream. I do have a goal for the stream. I would like to be able to get it to a level of in which it has a little bit of respect. I need to do a lot more promoting. I don't promote the stream as much as I should. I've been really busy getting this book together, but nonetheless, we'll get right into it. I posted on Twitter yesterday what I thought the S&Ps were going to do. I mean, honestly, guys, I feel like everyone is, and look, we already broke it. So, looks like we broke this level. It feels like we want to go test the highs. I'm just going to say it right now. It feels like we're going to test the highs. This is why I put a long and a short. It doesn't mean that we can't pull back, right? Doesn't mean we can't pull back, but here's the thing. There's two things I'm going to say now. All right, two things I'm going to say. If we just continue here, it will come to a point. If for anybody that did not trade 2022, all right, for anyone that did trade 2022, what did you notice about the downsides on those moves? What they all have in common is Once you consolidate between an area for so long and you do not go higher, it is only a matter of time before you do go lower. So we may either need a little bit more time, which I think we do, or today is the day where we start the upside trend to the top end of the range. And I think we do. I'm telling you all right now, I think we're going to 425. For whatever the reason is, I don't know. Here's why. We have Bank of Canada rate decision. Do they come out and decide to cut rates out of nowhere at 9:45? All right. There's more than just CPI going on right now. You have Fed minutes. Nobody is talking about the fact that the biggest key factor to Fed minutes was the driver that balance sheet runoff was they're done with it for the most part. They're not done right now, but Powell has brought up specifically that they are talking about where they're going to cut this thing off at, and they're right at the prior highs. They're right at that prior pivot high, so it's only natural that that's where they're going to stop. So their balance sheet pretty much is going to look like a chart. That previous prior high, it got broke. It's pulling back to it. So they're going to pull back to that. It's pulling into that area. That's right around where they're going to stop. I would say 6.5 to 7 trillion is where they're done. And they're pretty much at 7 now. All right. That's just my opinion. I think balance sheet runoff is pretty much done, which means that any money that they get back, all right, or any bond security that expires will get reinvested back into the markets, not get it reinvested. Okay, that's the difference here. Does the money get put back into the markets or does it not get put back in the markets? Because the more that the Fed takes out, that is less liquidity, and that has its issues with spread. It creates spreads and it has its own underlying cause and effect. But again, we have that. We have the Bank of Canada monetary policy report and the rate decision. We also have Europe, who is getting ready to be up for a rate decision. Now, I forget her name right off the top of my head. I haven't forgot her name, but I just can't think of it right now. She has been really hawkish. She's been really holding the line that they're not cutting rates, blah, blah, blah. I think she's just doing what Powell's doing. Christine Lagarde, okay, who is their Jerome Powell, for anyone that is here that doesn't know. So I think everyone's getting wrapped up on CPI. I think this data may show next month. It comes in pretty hot. It can come in hot today. I don't know. But I think there are other catalysts that could wipe this thing under the rug and not be worried about it. Not quote unquote not be worried about it, but if I'm telling you guys right now, I think if Bank of Canada, which I don't think they do, but if they do start talking about cutting as well, CPI is kind of being under the rug. It might actually come back out of the rug because then it means, which would not happen until months from now. And what I'm trying to say is if they're going to start cutting rates and inflation is, making a little pivot high now, what does that mean when they cut rates fully and we get back to that, to wherever that number is as far as a percentage, whether it's the U.S., Canada, and Europe? What does that mean if inflation is still bouncing right now? Escalation in the Middle East. Yesterday there were talks. There was mention came on the news wire about shutting down the Strait of Hormuz or whatever it's called. That's not going to be fun, all right? That's not going to help anything. It's going to hurt, or it's not going to, yeah. So, but that's that. So let's go into the levels. The levels are very easy, guys. In my opinion, you have the bottom end of the range and you have the top end of the range. All right, I went over this last night. Yesterday, man, it was a tough day for me yesterday. I made money. I did okay, but I was really upset that I didn't watch ARM. I should have paid more attention to it. And I was a little late on my Tesla short up at 180. That would have been a really nice move for the day. Just stuffing doubles and singles in my pocket. Just loading up. That's our job. We do have this level right here as well. Right there from the pivot high of Fed Day. So right now we have broken above 520. I'm really curious what this means. This was a level, and this reversal yesterday just speaks volumes, right? This speaks volumes. What I would say is I would say that we would pull back to test this 20-day moving average, this green box. You're going to have to. Here's what I think's happening. I'm going to tell you guys right now. Here's what I think's happening. You have a spot up here that has not been touched as resistance once it was broken. All right? And that spot is right here, right around, you could call it I'm going to say 521 and 522. We got close, but since we've, you can see here, right? Look, support, it breaks down. You come up, what do? Retest it, right? Roughly 520, 522, or 521. But this does not test it, right? That wick right there, they do not meet. There's a small gap in between. And usually when we test a level, we test a level where it goes past it, doesn't get to it. So you rally support, right? You have some support right here at 521, and then we rally. And what do? Just break. The retest didn't even come in until down here at 518. If I go to a 5-minute chart, it might have been 520, if I'm not mistaken. All right, so I think the bigger picture is we're retesting that 522 area. So you didn't even test that level, but you test this level, 517. So yeah, 520. I think we need to pull back to test the level that is above us. That's just my opinion. I feel very strongly about it because every other time that we have not tested a level and either made it support and or resistance, we go back to make it support or resistance. Just like this 20-day moving average, I would be, yes, we have sat here, but you broke it yesterday. You got back above it yesterday in the same day, and you have not pulled back into that level to bring in buyers. You have buyers off of 516, and they just bought all the way up. Pull it back. Is that level still a level? This is why I think we still consolidate for quite a while, for the going into tomorrow and possibly in a Friday. All right, I think we are going to test 522. I think we're going up there to test that level. All right, that's just my opinion. I think it needs to be tested. All right, top end of the range, 522 and the top end of the range. I am not going long until I get a 20-day moving average, until we pull back, make this level support, and then we go. All right, now we can look at a 5-minute chart real quick. You can see here, you pulled back to 518, and you just went. You will eventually, if not today, if not tomorrow, if not Friday, you will pull back to that 20-day and make it support. I promise. For the most part, I promise. Because in my opinion, from what I've always seen in the markets, I've got so many hours just reading these charts, is that even if you sat here and consolidated, right, you broke the level. You came back up, pulled back, and then you just rallied past it. Generally, it doesn't have to, because you could get, Bank of Canada or somebody to start cutting, and if the market takes it well, it'll just shoot and go. I mean, it'll shoot higher and just go. But in my opinion, I think in order to start a longer term rally out and to make new highs, I think we do need to set buyers off on that 20-day moving average. I really do. The 50-day moving average has been holding like just a champ. All right, at least on the Qs. So that's that's my plan. To the downside, I'm looking at the 50-day. I'm looking at 509. Not obviously today, unless it's very bad. All right, but this level right here is the level I'm also watching. It's like, 509, that area right there. I'll put it in as soon as this number comes out. We have 15 seconds, guys. 15 seconds. Let's do it. And then we'll go over the charts. How's everybody doing today? How's everybody doing this morning? Again, if I don't hear from you, only when I got to poke the bear, then I don't want to hear from you. So it's a little higher. 3.8. It came in higher year over year, just a tad. Month over month, year over year, 3.5. Wow. That core The energy, it's showing you energy is a ripper. So 3.4, 3.5.
On the higher than expected CPI data.
That's it. So let's see what happens here. Now we see if the move gets taken back. That's a big move, guys. It's a big move. Damn, they set everybody up. But watch it reverse and go right back. See where we open up at. That's what I want to know. Let's see here. Look, the monthly value area low. Let's go, baby. Let's go. I'm with it. We got skin in the game. Look at UVXY. Oh, damn. They heard it. They trying to hurt everybody, huh? They said, let's just run it down because they know the direction. Right? That old psychop of the rip and or the dip and rip. And the market said, yeah, they didn't fall for it. They still buying puts. They still buying puts. They know the CPI is coming in pretty hot. Got to look for that test of the 20-day. I have UVXY puts. I will probably, and I have some Apple calls, which we took profit off on that exit to the end of the day. At least I did. If you guys didn't, shame on you. If you get paid, you need to take it. All right? You need to take it. All right? So this was a hedge. Yesterday, I put this hedge on. And even today, you can see we just cracked a low a day from yesterday. So it shouldn't be too bad of a, shouldn't be too bad. Let's see if this works out. We'll see if this works out here. That's weird. Okay. All right, so let's go. Let's do it, guys. Let's go into the levels. Let's get ourselves ready. We'll go back over the data. Let's see if you have. She's the man. She's the girl. Liz Ann Saunders. So plus 3.5 year over year, plus 3.4, plus 3.2 prior month, core 3.8. Obviously, it's energy, and energy will also have its effect on everything else. So there we go. We got it. The trend, it's just that's a huge pop there. I mean, we could throw in Steve Leisman. I'm going to start going into I'm going to start going into some trade ideas. If anybody has any questions, throw them in the chat. Say hello, or if I poke the bear, and then you come out.
June it popped back up above a 50% chance, only slightly
just
before
know it's
the number.
not a good look.
I'm sure
all right.
he will give us our updates.
QQQ.
Back to you.
All right, Rick, stay right there. We are going to jump into more on this data. We want to bring in Betsy Stevenson, the professor of public policy and economics at the University of Michigan. E.J. Antoni, who is research fellow with the Heritage Foundation. Joe Davis is Vanguard's chief global economist and head of the company's investment strategy.
I will
group.
probably, I'm going to tell you guys right now, I will probably start to buy some calls. I'm going to go through some charts and look and see what we got going on.
Rick teed me up. The market threw me a softball. I'm going to hit it. It's 28%, a massive drop in the probability.
So there's a test of the 50-day on the Qs.
Falling down to just 28%.
Let's go to the CME projection.
We've talked about this now. July is under 50%. And if you give me 1 second, I can tee you up with where the market is looking, guys. If you can put up that January 2025.
I'm trying to get there too, Steve.
Mine is going to have to adjust here for a second, but we were looking for. Now we're at 483, so we're just looking at 2 rate cuts this year. Just about would be the odds-on bet. So we've gotten rid of 1. And I think we're toying with getting rid of 2 of them this year. First of all, told you I thought it was perhaps going to be a high
I don't know
number.
what's going on. I think
we got the inflation.
There's probably a lot of people on this, and it's just acting up.
Down, new car prices came down. Airline fares came down. All of that was as expected, which is kind of
everybody's trying to.
A bit worrisome to me because you didn't even have it in food.
I wouldn't be surprised if everybody is on this site trying to, and it's just having trouble. The site might crash because everybody's on it. Everybody and their mother.
So,
All right.
to
Oh,
probe a
shit.
little
I'm sorry,
deeper,
guys.
Becky, to
So,
see
yes,
what
let's
the
go ahead. We'll look at
underlying
Tesla.
inflation
Let's look
problem
at some of the names we've been watching.
This is a number that is towards
Watch
the high
Coinbase,
side,
watch
and it's
Bitcoin.
gonna put off rate cuts. That's the market's view, and I think it's correct.
All right, let's
I
follow
will
up
say
with the
this,
markets again.
if
Joe,
you
I wanna
guys can
bring
hear
you
me.
just to talk about what
The
you're
Qs, the
seeing.
50-day
Is the
moving
market
average, all right?
reaction
This red box
justified
here,
when you
that's
have a
where we're
number
looking to
that's
go
a tenth of
to.
a percent higher? I mean, basically, we were looking
And we'll see if the
for
SPY can get there as well.
confirmation that this
Not
was a
sure if it
seasonal
will,
issue,
but
one-off. 3 months in a
we'll
row
see.
does not suggest that.
Well, no. In fact, I think our theme has been we would make progress on inflation this year, but it would be sticky. And we also believe the Federal Reserve is not
All right,
not
so-
nearly as restrictive as at least they think.
Listen,
And so
I
think,
agree with
I've
him.
been
I say it all the
confused
time.
and
They are
wanted to
not
watch the cut,
restrictive
and
at
I
all.
think
Look at
the
financial
data coming
conditions.
in both
They
on the
are
labor
loose
market
as
and
all
both
heck.
today's inflation reports say,
They're
just be
damn near
careful
going down to
of rate
COVID lows,
season,
guys.
there are still
You're supposed to be
embers of
tightening.
inflation here and there in the economy.
But again, the tightening effect won't be felt until later. So I'm also not dumb and understand that there could be a lag effect, if there is going to be one. If there is going to be an effect.
Look, that's a bad sign.
525,
That means that
1.3.
inflation he thinks this is typical of a late stage situation.
Let's get
where
it.
You once again have commodities running. If that's
Let's
the
get it.
case, how
All right.
can we possibly be convinced that inflation is going to
Damn,
come
that's
down
crazy.
over the
That's
rest of this
wild.
year?
That's wild. For July?
Well, I think first of all, I just want to put it in perspective that
September,
we've been
they're
in a big
unsure.
fight. We got
Still like
inflation down below
4.7.
4%.
So they're
I
still
think
saying by
everyone has
September
known
we're going to be at
that
5.
This last bit is going to be the most challenging bit, getting inflation all the way down to the Fed's target of 2%. If you go back and listen hard to what Powell has said. He said, "I'm going to hold rates longer than people expect." And what we're
He
seeing
also
is the
said a
market
lot
now
of the
realizing,
opposite as well,
they're gonna
so
have to
I don't
hold
even wanna
rates
hear
longer
that.
than we were initially expecting. And I think that's because we did actually anticipate.
I don't think
this
we go
kind of
back to test
stickiness
that
we're
range. Bang,
seeing.
so we have that there.
I don't think there's anything in this report that
You
I'm
have a
seeing that's
very
telling
nice
me
support level
exactly
right here.
why on this initial look.
All right, you're going to have a really nice support level right here.
Everything seems to be going.
This is where I would look to be a buyer, and I do not think we break this level just yet. All right, that's just my opinion. We'll see where the 50-day is and where it lines up with that level, and it does line up with that level to a T. And, guys, I got to be honest, though.
Let's talk about that.
Unless they're really going to kill this market, I think
Questions about whether
inflation
is a harder last mile problem or whether you think that there is inflation that is
man,
starting
I
to
don't
build
know.
up again
I
in
think
other
we're going.
areas.
Like, I want to say I want to buy some calls. Like, I just don't know if this is enough to like.
And that in turn could
Are they going to throw this market really in the dumps? Are they going to throw it in the dumps?
Frankly, I'm not sure why
All right,
anyone
let's
was
see
really
here.
surprised by this number, 3.5.
We're not
It's
surprised.
in line with my expectations, and it's not because I did anything.
And I think next month's going to be hotter. I'm like this guy. I figured it wasn't going to be too crazy, but which it wasn't. It's just a little bit hotter because you have to understand the forecast and the expectations are pricing that in. The expectations are higher. Forecasts are higher. All right, let's go to Tesla. I'm going to clean this chart up a little bit. If you guys have questions, please throw them below. Let's go. We'll go cover the news and then I'll go through Tesla.
Because if you look at what's happening with the money supply relative to the size of the economy, it is growing much too
All right.
fast. And as long as we have that pattern out of the federal government, we're going to continue to get these very hot inflation prints. And by the way, the first couple months of the year, these high readings were blamed on things like, oh, it's just seasonal adjustment, or it's one-off increases in this category, that category,
All
whatever
right.
the case may be. We should point out core is running hotter than headline, and both trimmed mean and the median CPI.
Do you guys
are
want to
running
listen
hotter
to
than
this?
core. In other words,
You guys let me know. 10 years going higher, screaming higher.
it is
I
the
fucking
dollar
should have got
that
those
is
Tesla
losing
puts
value,
yesterday,
not
but it was
one
too
specific
risky.
commodity,
Excuse my
item, or
language.
service that is increasing
Man,
price.
It's another rejection up there at that high that 180 high 170s. I'm just gonna go through the news. If you guys want me to read out the news and everything, so you guys have it, y'all just let me know in chat what you guys want. I'm just gonna do my thing, and I'm gonna come up with my watch list. All right.
Treasury yields too. I want to get back to Rick because I think the 10-year has seen a jump of more than 10 basis points since we got this number. Rick.
Yes, absolutely. Pre-number, we were at
so short to 436. Did we get there? 436.
Right
so I thought we would get to 436, guys. That's what I wrote down last night on the Qs. And the SPY, I wrote down. I didn't put down the short. I put 518 holds long off the 20-day. But I think the 50-day is the SPY where I wanted the SPY.
2024, which is very important. Going back, probably now towards October of last year.
510.
And what's also interesting is the curve is not steepening on
I knew it,
number.
guys.
It's
Man,
getting
I felt
more
really good
converted
about
by the
Tesla.
tune of
I did.
3 basis points. What does
This
that
is going
mean?
into a
That
little
means
bit of
the
a
drop
possible
in the
support area
short-end
where the
rate
20-day is if we get a reversal.
Rise in the short-term rate is more aggressive. So that means it's the Fed implications. It's what Steve Leisman talked about. What's under review in the marketplace is having a bigger push in short-term yields. The Fed does not like to see that. And as far as all our guests, all I can say is I don't understand, and I agree with, I think it was EJ, I don't understand how all these
They're not
economists around the world,
tightening.
all these smart people can say we're making progress.
Right, they're
We're
not.
making progress on inflation.
They're not. It's not
pretty
tight
much
enough.
Really comfy, at least based on CPI readings right here.
Betsy, you want to take that on? I mean, look, this is not 1 month of data. This is not one data point that you can write off as being a one-off. I mean, this is a number of points. And yes, you're right. We have seen a stronger jobs market under all of this. There are other issues that point to a stronger economy. But the inflation issue is persistent.
You know, I think that most economists, if you've been listening, have been saying that bringing down inflation in goods was going to be easier than bringing down inflation in services, that service inflation was going to lag, because what drives service inflation is the fact it is labor costs and people looking around and realizing, oh, prices have gone up. Now my wages can't buy as much as they used to. I need you to make me whole. I need you to give me a raise. And we're seeing that stickiness in services. And what we want to make sure is that that doesn't create a wage price spiral. I don't think we're at a wage price spiral, but at the same time, it's getting down all the way from, I really do think it's a last mile problem. And I know this is a really unpopular thing to say, but you know, inflation in the threes is not that bad. And I think we have to, you know, take it at the right pace
on top
and
of
try to get it back down
inflation we
too.
saw at
Not
this
that
point.
bad.
Betsy, it is. I'm sorry to interrupt. It's just inflation in its threes is not that bad unless you stack it on top of the massive inflation that we saw for the couple of years leading into this. That's where you get it. It's not that prices not only don't come down, it's that they continue to build on 40-year highs in terms of inflation.
I completely understand that people are very unhappy about the level of prices, and that having had a history of higher inflation recently, after a many-decade history of people just not being used to inflation, has left people incredibly unhappy. But we also need to be careful in thinking about how hard we go at trying to bring inflation down. You know, I think that the Fed is doing what they need to do. There are lots of people who've been screaming that they should cut for a while. They're holding. And I think that we need patience to get this last mile done.
The 10-year note now yielding above 4.5%.
You're just not paying attention to the data.
Well,
the annualized inflation rate last month was 15.5%. 15.5%.
Yeah, but EJ, here's the problem. The problem is that just because you're right now and inflation has stalled doesn't mean you were right before. We have made extraordinary progress in bringing down the inflation rate. That is incontrovertible if you look at the year-over-year rate and what it was. The bottom line right now, inflation has stalled. A Federal Reserve with a hard 2% target cannot cut into this environment. It is locked in by its rhetoric. It's locked in by its policy because inflation has indeed stalled at this level for whatever reason. It could be a matter of the money supply. There could be some one-offs. I'm not exactly sure, for example, what's happening, why motor vehicle insurance is going up by 2.6% on a monthly basis, which is a very high annualized rate.
That's just a rolling impact as those higher, as state by state, as insurance companies are allowed to raise their rates month by month, you're going to see that roll in as people's premiums turn over.
If that's the case, though, Becky, that's a one-off effect as it works through the system.
Effect that can play out over the course of a year.
Right, but it won't necessarily keep going. At some point, all of these states are going to come in ostensibly towards the beginning of the year. If that's a one-off, that's not my problem. My problem is you have the energy, the commodity prices are higher. There's the concern that those filter into core measures of inflation. The Fed hawks who are out there. Or that you then get into
the wage price spiral, as Betsy was mentioning before.
I don't think we're there with that. I don't see wages pushing inflation at this point. But what you are seeing is you're seeing the effects of a hotter economy. The danger right now is this, and I'll stop here, is that the Fed has gotten away, the U.S. economy has gotten away with bringing down inflation with growth being relatively high and unemployment remaining low. That has been counter to the theories of how inflation can and often does come down. The danger right now is the Fed views this as, hey, we really have to slow this economy. We can't keep going with unemployment below 4% to get back to our target.
Sure. If you look at the dual mandate and figure, as Alan Greenspan always said, that you take care of the employment picture by making sure you take care of the inflation picture first, that would certainly necessitate that. And if you're talking about, okay, we don't have to get to 2% this year, this is not even on a track to get this down the road, which is why they wouldn't be able to cut into that. Rick, what are you thinking again as we continue to watch? The 10-year's now above 4.5%, and last I looked, the 2-year was knocking at 5%.
The most important thing hasn't been discussed yet. We have a 10-year note auction today, 30-year bond auction tomorrow. We've learned in the last 48 hours that our budget deficit's now all the way back up to $1.1 trillion. The cost to service our debt, I do believe that the last check we've written for basically a half a year was approaching $500 billion to service our debt. That's all we need to say. Inflation has stalled. Interest rates go higher. The deficits are going higher. Government spending ignores all of this. I can tell you something, that most likely we're going to see 5% in a 10-year this year.
Yeah, I heard somebody just earlier this morning suggesting that maybe you see 5% before you see 3.5%. It didn't seem nearly as plausible as it seems at this moment with these huge jumps. Again, if you are following along on the radio, let us tell you about what's happened to the U.S. equities futures. Dow futures are down 400 points. That's a swing of 450 points from when we got this number 17 minutes ago. S&P futures off by 61. The NASDAQ indicated down by about 229. Joe, let's get back to you and just take a look from a trader's perspective, from an investor's perspective. Yeah. Is this something that is a knee-jerk reaction? Is this a complete overhaul of how you look at things? Because we're still talking about a pretty strong economy in a lot of other areas. Does inflation eclipse all of that?
Well, again, I think you have to certainly keep it in consideration. I mean, I think hearing all the perspectives just the past few minutes, I think what we will continue to see is a reorientation in the financial markets and, respectfully, of policymakers that rates are going to remain higher for longer. Now, again, this is from a firm, Vanguard, that we've done research for 2 years, arguing that rates were not going to test the global financial crisis era, that those days are behind us. And for a number of reasons, we're going to have a higher interest rate environment. That's good for fixed income investors. The equity market is fighting. I think it craves lower interest rates. I think we're seeing some of that reaction potentially today, the adverse reaction to that. But when you zoom out, rates are going to be higher, and the Federal Reserve is not as restrictive as they think. They are restrictive. But again, so I think what we will see is a reorientation, if this data continues, of cuts being continued to be priced out. That need not be the horrible thing for the economy. In fact, it would be a reflection of the fact that growth is holding up, but inflation, there's still room for improvement. Progress made, but room for improvement. I think that leads to where the bias we're seeing in the bond market today.
Okay. Joe, Rick, Steve, Betsy, EJ, I want to thank you all for being with us on a pretty wild ride as we look through those hotter than anticipated numbers for CPI, both on a year-over-year and a month-over-month for headline and for core. We'll talk more about that in just a little bit.
Okay, meantime, when we come back, we're going to get you up to speed now that all of this has moved around on some of the top stocks that are moving in the pre-market, in large part as a function of this. We're going to ask former Federal Reserve Governor Rick Mishkin on how Jay Powell and the rest of the current slate of Fed members may end up looking at this new CPI number and what kind of maneuvers they may make. And then we want to tell you about what we've got tomorrow on tap, because we have a big exclusive interview with Amazon CEO Andy Jassy. It's going to happen live in our 8 a.m. hour. We're going to discuss the state of the consumer, Amazon's investments in artificial intelligence, what's going on with AWS, and so much more. A rare interview with the CEO of one of the most influential companies in America. Squawk Box coming right back after this.
BC Pro.
Just a little more than a half hour to go till the opening bell on Wall Street, and things have gotten decidedly more interesting in the Maoist sense of this entire thing. Down 387 points right now for the Dow futures, down by 60 points for S&P 500. The NASDAQ off by 230. Dom Chu joins us right now. He's got more of the market reaction to that inflation data. Where is this playing out? Where are the stocks that are getting hit hardest, Dom?
Yeah, and Becky, to your point, even with those downside moves that you were talking about, that's off the pre-market lows. So there's a little bit of volatility happening right now. As for the front lines of where people are going to see this most in the marketplace right now, given that sharp jump in yields, we are seeing the ripple effects, of course, in the most consequential parts of the stock market, which are those mega cap technology-oriented names, right? So let's show you the biggest stocks by market cap in both the NASDAQ and the S&P 500, and that's Microsoft, Apple, NVIDIA, Alphabet, and Amazon. Each of those stocks is down roughly about 1% or so. Again, NVIDIA has been maybe a focal point just given the fact that we've seen it pull back by more than 10% off its recent record highs. But this is where you're going to see a lot of that underperformance play out so far right now, and specifically some of those mega cap names. So we'll keep an eye on those. Also, some of the more interest rate sensitive parts outside of mega cap technology from a valuation perspective are in the home builder names, ones tied towards maybe the health of the mortgage market and whether people buy or sell more homes. D.R. Horton, Lennar, Pulte Group, three of the biggest names out there, each off by roughly 3%. Home Depot, from a home improvement type standpoint, is down about 2%, and that's driving a lot of the downside force in the Dow right now. And the Dow Jones U.S. Home Construction ETF, ticker ITB, is also off roughly 3.5%. So keep an eye on the home builders. Also now, watching another key part of the market that's rate sensitive as well. Check out what's happening with some of the big banks that are going to be reporting earnings throughout the course of the week. You've got JP Morgan Chase off 1%. Bank of America, Citigroup, Wells Fargo, PNC Financial, some of the more traditional lenders that have more money center operations around securities also as well there. So keep an eye on those. And by the way, Andrew, if you want to look further, check out what's happening with gold prices and Bitcoin as well. They're showing some signs of volatility on that inflation print as well. I'll send things back over to you.
Okay, thank you for that. Meantime, joining us right now for a deeper look at how the Fed will be looking at the new CPI data, former Fed Governor Frederick Mishkin. He's now a Columbia University professor and a CNBC contributor. I'm going to read you this. This is Jason Furman, who's just taken to Twitter, our old friend at Harvard. He says, overall, it's a mystery to me why anyone thinks the Fed might cut rates in June. The labor market data is screaming a cut isn't needed for one side of the mandate, and the price data is screaming that it could be dangerous.
One word, the lag effect. Because if you cut, this is what I'm talking about. This is the stuff they're going to say. Yeah. Yeah, I'm going to disagree with that, all right? Because they talk like they know what's going on. Yeah, everything seems cool right now. But then what are you going to do? Just wait until things get bad to start cutting? Then you're too late. Then you don't know what kind of problem you're going to have on your hands. So, yeah, the labor market is tight. You know, the government's spending a lot of money helping this kind of stay afloat. There's a lot of other reasons. And you just, again, I say this all the time, is that COVID changed the way that we live. There are so many other things out there that one can do to make some money, okay? From ride shares to just anything. You know, there's a lot of entrepreneurial things going on, and there's stimulus. Stimulus is still working its way around the country. That money is still a-flowing. So I think to say, though, that just because everything is good and that's why you don't need to cut rates is it makes you sound foolish. Not anybody here in the chat, but the guy on CNBC who's saying that. And listen, over tighten, I would love it. I think it's beneficial to everyone that we get a pullback in asset prices so we can buy them at, reasonable levels. And let's not talk about what that may do for housing costs. I mean, I think the world, at least in the United States, in my opinion, we need a pullback. We could really use a pullback. We could. I think it would do more good for the future than harm.
There's a 3 cuts going. We had somebody on, by the way, who said there was going to be a rate cut starting in June and it was going to happen every month for the rest of the year, which I now is completely disbelievable. If it wasn't disbelievable, when it was said.
A little bit nutty in the sense that that would mean that we basically have a depression or another financial crisis, but I don't think that's in the cards. But we still do have a very strong economy.
And so, therefore, you think now, in this calendar year, as we get into a presidential election come November, that the Fed is going to do what? We're also watching the markets, by the way, we should mention, fall off. What do we got? The Dow off over 400 points right now. You got Bitcoin, by the way, that's fallen to the extent that's sort of a indicator of speculations coming down to about $67,917.
So the bottom line here is the economy's hit a point where in fact it's good news in some sense, but the Fed has to do its job. And in fact, the Fed has always said they would risk a recession in order to get inflation under control, and I think that's the right thing for them to do. They have to be tough. Unfortunately, the progress that was being made has seemed to stall, and sometimes you gotta say
Okay,
tough
let's
cookies.
keep this
That's
monthly
just the way
going,
life
guys.
sometimes
Just
is.
give me 10 more minutes. I'm
This
just
is
going over a
unusual for
couple
the Fed to
things,
have to
and I'll
deal
get
with
right
these
with
kind of issues
everybody.
when always they're always tough decisions.
But if
to
you have
make.
any charts,
But I think
anything
the
you guys
bottom
want to
line
throw
now
in the
is they're gonna
chat,
stay the
anything you
course
guys
that
want to
is
look
they're
at,
gonna stay the course unless things
now's
start
your
to get a lot
time.
better.
Throw it in the chat,
Okay,
and
here we
we'll
go.
go over
Thank
the
you for
chart.
jumping in here, with this break.
Sorry, I didn't know that was on. Again, if you guys have any charts you guys want to cover or look at, throw them in the chat below. And if not, and if for some odd reason I say something and you get offended, or you get struck, and that's the only time we hear from you, I don't want to hear from you. All right. So that's the goal here, is to help all of us all make some money, find opportunity. All right, I'm working very hard to do that. Yesterday, ARM, Tesla, Apple, opportunity after opportunity after opportunity, and yet I do not hear a thank you or anything, but they will be quick to bash. That's just people nowadays. They will be quick when they get triggered. They will be quick to come out the woodworks. But hand them some free money. You ain't gonna hear nothing. You won't hear nothing. Crickets. Anyway, I'm gonna be doing me, and that's all. That's all. If the only time I hear from you is when you get rubbed the wrong way, then just keep it to yourself. All right. So I have Tesla right now. I have a few others like TSM. I'm looking at. I think once we open up here, I think you could get a sell-off right off. See, I feel like they're going to do it now. They're going to do that pullback now. Where are we? What is this? 145.35. Tesla, TSM. Oh shit! I gotta do all of them. I forgot about that. Dang it. Okay. So that's my bad. All right. So, yeah. Let's see. You're probably gonna pop off the open. I think so. So I'm thinking, if we get this opportunity down here at like what is that? 144.50. From 144 to like 144.50. That level is obviously right there at 145. You get 145, I would assume. Wait. Hold on. Let's see here. So there's yesterday's close. If we open up here, I want to see if I can get short a quick pop. All right, I would look for a short on a quick pop if we're here. This is why I want to know where we are in accordance to where and when we open up. It does have some more room to the upside. I am looking at this level here. I'm not long or short this name. I preferably long. It is a name like Apple and Tesla and Taiwan Semiconductor. They've been relatively strong. All right. So don't think that I'm just automatically saying short. Now, there's a game plan behind it. What's your game plan? All right. My game plan would be, if I say that I want to look for a pullback right off the bell, maybe that's the trade. Maybe that is the trade. Look for that pop. Take the short on the pop, quick little scalp, whatever you want to call it, unless it comes in with some volume, and which I doubt happens. But take profit at the support level, get long, and ride it higher. Just trade it. Trade the chart. That's all it is. I know it's sometimes people and myself, sometimes we can make it a little bit more complicated than it has to be, but it's not that hard. It really isn't. If you know what you're doing. If you know what you're doing. If you don't know what you're doing, it's going to be a nightmare. It's going to be a nightmare. And the only way to learn is to ask questions. And if you don't ask questions, we don't know. We just assume that you do know everything and you guys know what you're doing. We may get a shot here What's the market's doing? Are the market's pulling back right this second? Yep, they're trying to. They're trying to double bottom down there. I felt like the market, that 510 level on the SPY is where it's at. I think I'm going to just keep my UVXY call on. It'll probably be down. It might be. I don't know. I think that's a pretty crazy move here for what took place, right? I felt like UVXY should be in the money by now. But we'll see what happens. We'll see what happens. All right, so like I said, here's that pullback, right? They pulled it where? I just said this for Taiwan Semiconductors, 145. Yes, we see that level. But I think this one's going to be fun. This one's going to be fun because, it's a slow mover. It's not it's not going to whip around on you. It doesn't have a lot of volatility with it. And at the same time, if you're a person who does trade volatility versus, trading a stock that doesn't, you could get out way too early because you can't sit through you just can't sit through it. Just like I traded Palantir the other day, and I could not sit through it. It was just moving too slow, all right? I need continuation. I need follow through. I want to get paid. I don't want to just sit there and watch paint dry. It makes, at least for me, it can cause you to just do other things. And, I want to be moving and grooving with these names. So understand that if you're ever in a stock that has volatility, or if it does not have volatility and you've been trading stocks that are volatile, see how you act. See how you are and take notice of how you are and some of the things that you do while you're in that name. All right, because I think a lot of traders don't pay attention to how they act and how they perform in accordance to the different names and the different volatility of the names. All right, because some move a lot bigger, better, and farther than others. Tesla, or let's just say Coinbase, is an animal compared to Google or Amazon. They have their days when they have an increase in volume, but for the most part, or like Coinbase and Palantir. Palantir is like you just have to sit and just wait and just wait and just wait. So TSM though, depending on where we open up, guys, I would look for. We'll have to see where we open up, because if we open up down here at 144, 145, then yeah, we could look for the pop right off of the bell and look for that run to high a day pre-market highs. And then up there, it feels like you have a lot of sellers up there. I'm going to be honest. It feels like you have a lot of sellers up there. And I will say this, you do have a major headline risk trading this name. One news out of China about doing laps around the island with or you get a news with that they've sent a fleet of, of things to Taiwan, to the Taiwan Strait. It's going to have its effect. So, but that's that. We'll see where TSM opens up. Baba has been hitting the scanners. Let's go look at Bitcoin real quick. I do need to hurry up, so it's 9:08. Let me stay focused, stay focused, stay focused. And again, I hope you are having a wonderful morning. All right, nice consolidation. So I said last night on Twitter, I had mentioned, I thought, in my opinion, that 70 or that 68, was it 69 or 68? It's either 69 or 68. I said I felt like it had to hold. Okay, so you've already made this support level, so it was like right there. I thought, yeah, because you see here, right, at 68, do you guys see how there is no support? It is just resistance. You guys see that? Yeah, you could look at this little area. I mean, I didn't really get there. It just, or there was something. I need to find it. I need to find it.
Because I know what it is. I know what NVIDIA does. I know that the Blackwell is multiple times better than what Intel's doing. I know that Google.
Yeah, we're below it. So I said it yesterday that I thought that it had to hold. I still think we get a pop here. I still think we pop off the bell in some of these names. You have a little bit more downside to go. Outside of that, I think we do get a nice little bounce. Get a little bit more downside, maybe like 66. No big deal, right? That's still a consolidation. Man, I want to know where it is. I want to know where that level is that I pointed out. Now I just can't seem to find it. Yep, walk it up. Bitcoin's just walking it up. All right, so we'll see what happens with Bitcoin. But anyway, it's down. I would look for a bit of a reversal in the near, like today into tomorrow. As far as the daily chart and long-term trend, like a week or two, consolidation or at least a pullback to the 50-day by the beginning of next week. All right, by the beginning of next week, I would assume, if not the end of this week. So I'd give it, I'd give it about a week and a half to see if, you get down below or at that 50-day moving average for Bitcoin. Traded Roku yesterday. Lost a little bit of money. I had a feeling I should have just held it. Now those, I knew it. I should have just left the other half on. So now they're in the money. Roku is in the money. There was news yesterday about Google coming out with a, see look, your TV just got better. New updates from Roku Pro Series. Okay, I guess they're not talking about it. Buys, we're at the healthcare company. Buys Roku, Palantir, Spotlight, Roku, Game Pause, Netflix price target raised to Wall Street high. Oh shit, I didn't know that this was playing, guys.
Cloud CEO, take a listen.
Yeah, I don't know. There was news yesterday. They're not reporting it here, but that's a nice resistance zone right there. Look at that, right off of that level.
The other one does not have any AI expertise, so they only offer third-party models. We blend both. We have our own models, and we have the expertise.
I think Roku has more room, guys, to get back down to $59.50. $59.50, $60.
Point of view.
Told you he's going to do 50 billion. Yes, I told you he's going to do 50 billion. People are like, wow, what does that mean? Well, it means that he's doing very well. He's taking share, but there's a lot of
taking share. There's an awful lot of share to
There's
take,
a lot of share.
I mean, that's the point. You can't have an environment in which the hyperscalers, Amazon, Microsoft through Azure, and Google Cloud all are beneficiaries.
We're in the
of course,
second inning of the whatever.
Of what's happening in terms of generative AI.
Well, I mean, I hate baseball.
Apple and Tesla are doing the same thing. They have this wedge being put in here.
But I do think that
Just
the cloud
just
is
a descending
such
wedge.
demand, and they're only about 80,
The only thing you need with that is volume, and we haven't quite got it yet. We'll see what happens today. I'm still watching this level down here at 168, that high 168, 169 level.
Well, you start picking at things when you see things overdone, but you must know what they are. Okay, you must know.
Man, I wanted to see it hold there. I think Apple has some more room to the downside. I do. You got to look for 168. 168, I guess 166 is what I have here from way back when. Let's see if it can hold these levels. Let me see here. Let me see. I'm going to tell you whether I think it can. Damn, that sucks. Yeah, I think Apple is gonna head down to 168, 167.50, and kind of just wick down on these lows. This is an opportunity, in my opinion, to start buying some if you haven't. On every time these things drop, don't load the boat in one area, all right? Because ultimately, I do think Apple is testing or could test this range down here at 155. One could only hope. This is a big inverse head and shoulders. It's coming back around. Came back around like Lil Wayne, Carter. So, it's 155 versus 168. I'm going to start buying this. All right. I'm going to start buying it again for my long term. I'm just letting you guys know right now. All right. This is not financial. I'm not telling you guys to do that, but if I got to nibble when prices are like this, I will nibble. I don't know why I didn't talk about it earlier. All right, I gotta hurry up. All right, so Apple, I'm still watching 167 or 168, 167 level. Did Microsoft finally break down? Kind of. I want to see Amazon and Google because they were setting up, like they've been really strong. They've been really strong, at least. So here's Amazon. So it looks like it was telling us, like I was talking about this ascending wedge, right? This is a trend reversal signal. This is a signal for a trend reversal. And what do you have there outside of this? You have, for the most part, I mean, I guess you would say back here, volume is to the upside. You only have really this day. So that would leave me to be neutral. But the pattern in and of itself is, setting up for a trend reversal, not continuation. But let's see here. This could be a really nice test here. You have this gap fill that you have down here, 181. This could be a really nice long here. I gotta be honest though, I think I'm going to personally wait for like 181, 180 area. I think this level needs to be tested again at 180. I mean, it held it really nicely, and that's what I was talking about earlier with the SPY. When you just leave a level and you don't test it, it's just a matter of time, more than likely, that it retests it. You come back in for a retest. Guys, I would look for, what is this? Wednesday, Tuesday, Monday, Friday, Thursday. Last Thursday's high, yesterday and Monday's low. I would look for that. A bounce back to that area on Amazon. That's what I'd be looking for. I'd be looking for a reversal here. Unless they really open this thing up, guys. You got to be careful. Because if they really open this thing up, it don't matter what the chart tells you. They're just going to scream this thing to the downside like they did. And they have more, there's more data coming out. So we'll see if we take this move back. All right, at least, the SPY, I think the SPY is down a little bit too much, but I would like us to test the 50-day. I think you do get some dip buyers to step in, personally. So Amazon. So Amazon, I would be. Let me just get my charts straight right now. Let's just get that out of the way because I don't know why they're doing this. I don't know. See how they change up on me? It's so weird. Right? And a lot of the patterns are different too. Some are wedging much higher than others, and sometimes that's just the way it is. So what I would do is I would look for a bounce. I would look for a bounce on Amazon, and that's going to be my game plan. I'm going to look for a bounce back to like 184.20. I don't know if so there was news on Google, okay? I think there was a price target upgrade or something. Let's see here. There was news, I thought. Market chatter loses appeal of 49 Russia fine. Crushing Google chips. News help explain why. Fed's inflation. I don't know where I seen it. As small browsers gain market share. I'll have to go back. I'll have to go back to I'll have to go back online. Digital stock CNBC's final trades. Google, I would look for. Let's see, we're at 156.50. That's a nice level that you're holding down here. It's a really nice double bottom there. This stock has been so strong, and if just, yesterday I was a little shy of it. I mean, if you didn't catch the long right off the bell, I mean, there was a trade to the downside. Um, and that's, this move was bigger than the up move, and it didn't pull back as much. Like, you see this upside move and how it pulls back right here, pulls back, and you just get that little extension. I felt like the downside move. Like, look at these little bear flags. They don't retrace like a quarter, if not, almost half of the move, and then go back down. That's gonna, if you're trading options, you're not gonna make no money that way. But anyway, I was short-minded Google yesterday, but this is a nice setup. I think today with this pullback allows for a more bullish setup. I have to say, I really think so. Let's see here. So we have 156.60. Bang. All right. So that's that. So what I'm going to do is
Bastion, business travel with Phil LeBeau. Of course, that was an interview earlier on Squawk Box. The airline did post quarterly results that were above analyst estimates. It is forecasting strong summer travel demand. I thought that was interesting, Jim. It was a question we asked so often during the course of the pandemic and since then. Would business travel ever get back to the level? He's saying dollar-wise, I believe it has. Maybe not quite as many passengers.
Well, there's
still.
a stock goes up $2.50 when Phil interviewed Mr. Bastian, and I'm saying Delta's really on its game. There are actually a lot of dispersion among the airlines about who's doing a good job, and obviously there's disarray among the Spirit, JetBlue. It's not clear whether United just is momentum. Southwest Air is unfortunately really bad, and Delta has shined here, and that's because it's really well run. And I applaud Mr. Bastian. He's done a great job. That stock will be down today. That's the kind of thing I'm looking at. Okay, so it'll be down today, and all the analysts tomorrow will come out and recommend it because it turned out to be much better than expected. Yeah. It's got a good model. And by the way, pilots are being laid off.
Say again?
Pilots are being laid off.
Pilots are being laid off.
Remember what we had? We had a pilot shortage that ended. That's a good example of what can happen if you take rates higher and not everybody does well. So that's where the economy is working, and where it's not. David, can we just talk about the idea that there's no price cutting in insurance, that there's nothing. Your healthcare insurance has gone up. There's no competition among those companies. It seems like there's no competition among auto insurance.
That's what I say all the time, man. There is no competition with school loans and/or healthcare because the government's involved and they're promised their money.
And the fact that we have to be able to
So that means they can charge what they want.
that have come here legally and illegally in the last 3 years. And those are the things that, I don't want to get too political, but those are the things that are going to create an issue when it gets to the election. Those are the things people get mad at and blame the president.
Or inflation overall. Again, we're running at whatever 3.5% or more a year.
We've dealt with 4,
but that's off of 19 to 20. I mean 21 and 22, which were brutal years for inflation.
Sell stocks.
All right, get ready. You got a mad dash coming up. We're going to get back to talking about some stocks here as we count you down to an opening bell. Of course, if you see in futures, we're going to have a far lower open based on that CPI print that was, as we like to say, hotter than expected.
I can tell you're so scared.
Erasing perhaps many hopes that had already been dashed to a certain extent that we would get rate cuts in the near term. More Squawk in the Street after this. There's a look at our the 10-year note.
I don't know why they just came on to just say, here's the 10-year, we'll be back.
2-year in comparison. So that has had a little bit of a steepening effect on the yield curve. But there it is, 4.483, obviously a significant move higher based on that CPI number. And there's a look at your 2-year. I mean, Jim, you talked about your 5%.
Yeah, well, I told you, the Fed's stuck.
All right, opening bell coming up.
I wonder if we have a we have an arm on our hands here with Baba. Sorry, I meant to go on the what's up, Basic? Good morning, bro. That's what I'm talking about. That's what I'm talking about, baby. I'm ready, bro. I'm ready. I'm with you, man. I am ready. I'm looking at Tesla, Baba, Taiwan Semiconductors. I think we could probably get Baba to pull back off of the bell. Look for a bounce off the bell, and on that bounce, see if we can't get a pullback. See if it tries to bounce off the bell here. What I would say is, let's see where we at real quick. We have 1 minute 20 seconds. Start with 74.45. Okay, so we're above the 100-day moving average. Yeah, so I'm going to look for a pullback. All right, I'm going to look for a pullback back down to the 50-day moving average, which is at 73.50. My target on this, my target on Baba, man, I like 72. I just want to get a pullback to 73.50. All right, pull back to 73.50. My entry will be right off of the bell, more than likely. We'll see if I want to trade it. All right, 73.50. That's where I'm looking at for Baba. All right, pullbacks to 73.50. See if we can get a bounce off the bell. See if you can get a quick bounce off the bell, and then we look to take that back down to 73.50, 72.20. It does have news, so be careful. Oh my god, man. Fuck, I forget every time. Alright, so Tesla. See if we can get a bounce out of Baba. That's what I was looking at for Tesla. Alright, let's see here. Alright, looks like, let me go to here. Let's pull this up. Damn, these spreads are pretty wide right now. Not really. Let's see. Whoa, $72? No, that's volume. Hold on. Last. Yes, they're wide. Give me a 16. I'm gonna set a Fuck, they lowered it. Alright, guys. I'm just trying to take profits on this UVXY. I have... Wait. Did I get filled?
Dow Jones Industrial Average down 359 points at the open. That's
Wait.
down 187.51. S&P 500 down 55.10.
I don't know what happened there.
Following the higher than expected CPI data.
Oh, yeah, I got filled. I got filled, guys, on UVXY, 18 cents. I got filled at 18 cents. I don't know why it's still showing on my, so that's a nice gain there. I don't know why it's still showing on my stuff. My stuff is jacked up right now. My stuff is jacked. I gotta log off and log back on because it's still showing me that I have it, but then I put out a limit order and it says that I don't have anything. So, you could hang on to this till the end of the week, whatever you want to do. Take profits. Pay yourself. This is how you make money in the markets. Pay yourself. We got in these things dirt cheap. All right. What was it? 11 cents, 12 cents, 10 cents? I think it was 11. I think it was a 10-cent bid, 12-cent ask. I market ordered in, so I just got, you know. I got to get on Tesla. Hold on. I just got to log in real quick. And I want to be able to buy some Apple for the long term. SQQQ. God bless you, bro. And that's what I was saying this morning. So, basic real quick. I'm not like sitting on this subject, but yesterday with Beefcake and shit, yo, if the only time I hear from you is when I have to like poke you and like make you feel some type of way for you to like say hello or comment, like I don't ever hear a hello or anything like that. Like nothing. Not, hey, this is an idea I have today to try to help everybody else out, this, that, the third. I just think it's kind of funny that that's the only time that they come out. That's all. And if that's the case, I don't want them coming out at all. You know, you could at least say hi first. You know, that's all. But anyway, Tesla, we said the pop. I'm looking for, guys, here's my trade for Tesla. I'm looking for 174.50, 175 rejection. Target is 167.50, 166. All right, I think we still have some upside. Let's see if we can't try to get up here and try to break that 20-day moving average. That's what I'm looking for. I'm looking to try and break that 20-day moving average on Tesla. I need it back up at highs, though. Let's see here. Let me get this up. Let me get this up. All right. Shit. I'm not even in the right place right now. Bro, why is this not saving? This thing just does not want to save. For some reason, it doesn't want to save and keep my charts where they are. I don't know why. I really don't know why. Yup, there's that pop right there in the 175. That's it. That's it. You just need to get some volume here. I think it goes up. You might get a test of yesterday's close, actually. 177. See if you get a test of yesterday's close. Like here. Like, why is this thing not saving where I put it? All right, look, I'm going to save it right now. Time axis, keep price, zoomed in, apply, okay. Let's do the same right here for the 15-minute chart. We've already done this a few times. I know you said, Basic, that it's only 2 days. Time axis. I wonder if any of them took the Apple long and UVXY call, right? I wonder if anybody took that. I wonder if anybody took ARM right off the bell for a huge gain. Tesla off of 180. We had a nice watch list yesterday, man. Yesterday was awesome. You know, I was just a little shy on my entries and everything. That's all. Sorry, I just need to get this zoomed in. We'll see if this can work. All right. 175. 175. So I'm being patient on this because I feel like it needs to bounce possibly a little bit. Tesla needs to bounce a little bit here. I mean, I gotta be honest. We may try to test this close up here, 177. So let's look at TSM. TSM is another one, and Alibaba. Alibaba's another one. So TSM, we said, what did we say on TSM? A quick spike off the bell. Look for the pullback down to this area to get long. Scalp it short, then look for the long. It's exactly what I said. Here you go. 145. Look for the rejection right there. Bip, get you entry, and it rips. Nope. That's funny. Oh, yeah, look at the 3 minute. That's because, okay. Because I have pre-market on, it's not showing you that VWAP. And look at it. It's gaining. She's gaining some traction here. I think it'll run out of steam, though. So be careful on TSM. You know, if you want to go long, it does have news. So news will trump, you know, the technical side of things every time. I just think it needs to pull back. If you want to dig your teeth long in the longs, you know, who am I to say what to do and not to do? But I think you need. There it is. There's Baba. So there's Baba. Do I get in it now? I think I might try it now. I think we're getting close. I don't know if this thing could short squeeze, though. That's the problem with shorting this. Man, I think it's time. I think it's time to get short down. I'm just looking to get down to 73.50. 73.50, that 50-day moving average is what I'm trying to look for. All right. Man, it might have a little more upside. You might be able to get this 175.25 level. You might get pre-market highs. Let's see here. Watch. Let's do it. Let's fucking do it. Let's do it. You're gonna have some relative strength here. See how it didn't save? That's funny. It just changed my charts again on the 15-minute side. All right, so you're back above that level. Bravo. I'm going to try and take the short. It's going to take me a while to get in. I probably won't get in it. But I wouldn't mind trying it there. Let me see what the spread, let me see what everything looks like first. You just have to be careful. I mean, obviously, long-term direction, I still think is to the upside. And that's a low volume pullback already. So we said 75.50, right, on Baba, or 73.50 is the target. 5. I can risk it for the biscuit. These aren't too bad. We'll see what happens when we get up. Man, look at the amount of calls. Wow, they are stacked on the call side. Holy smokes. You could start to get a gamma squeeze. All right, so that's 22 to 24. If you get... I think I missed my entry. I think that was it, guys. This little tip right up there to 75.20. I don't know. Hold on. Give it a second. You might get another shot at that low. You might. If not, you get this pullback to VWAP in the 9 EMA. I still think... You know, I don't want to give out any false information here, but if you hold VWAP on a 5-minute, 3-minute, whatever, there at that 74.50, you're probably going up to $76. Let's just be honest here. Let's just be honest. This thing's looking to go to 76.50. I wouldn't short it. If for anybody that's new or not experienced, don't do something dumb. If the stock's going higher, roll with the punches. You know, it's just what I would do. You know, I think you may get back up here to these previous highs up at 75. So I'm just gonna give this a little bit. Sorry. I'm gonna give Alibaba a little bit, and I'm gonna float back and forth. Oh God, I thought it was about to freeze again. I thought it was about to freeze like yesterday. Man, like the more I look at this, the thing is it's like with Alibaba being a Chinese ADR, it's really hard to just use the volume as like, you know, as it should be used, because then out of nowhere, like if you were to have broken that VWAP right there, you could have seen a really nice spike in volume. But I would look for another shot at like 75.25, kind of like a double top there is what I would look for, and what I think we're going to do. It's what I think we're going to do. It's just my opinion. I think you're going to pop again up there. All right, Tesla. Let's go, Tess. Let's go, Tess. Man, I wonder if they're going to just... Let's look at the volume real quick. Yeah, the volume is really low on Tesla. I gotta look at Apple. I forgot about Apple. Hold on. Shit. Let's see, 172.50. I'm gonna take this off, guys. I don't know what, I don't know. Maybe I leave it on. I took profits yesterday, so I'm pretty much flat on this. And then with profits off of UVXY, I think Apple's got a little more downside, and we could probably grab this a little bit lower. I'm going to sell Apple, guys. I'm selling that Apple call. I think the SPY looks like it's may pull back here. You may get a bounce with, remember also, guys, yeah, I'm getting out of Apple, guys. I'm getting out of Apple. I'm going to sell the last bit that I have here. Hold on one second. We have Bank of Canada's interest rate decision coming up. If they cut rates, watch out. If they talk about a 4 point, not saying they are, but just watch out. Okay, this could pull. We still have Fed minutes later. Okay, we still have Fed minutes later. I don't know if I should just wait and try to get a bounce back on this. I think Apple's going lower, so that's that. I'm going to get out of this because I've already taken profit. I've taken profit on UVXY. Like, we've made the trade work. I got to make it work for me. That's it. What a poop fill. That's a poop fill. Oh, they're jacking us. They jacked me. Yo, there was, everything was like 22, 23 cents for these calls. And then that's crazy, bro. It was literally, that's so funny. That's so funny. They said, we ain't paying you. This thing is just going down. Like, it goes up and then the options go down. That's hilarious. Anyway, Tesla, let's get back on track. Baba. So we're good. It worked. Listen, if your account should be up. If you took profit and took half off, I don't care if you bought 2 contracts. I don't care if you bought one. Guess what? If you bought one and you took it off and you bought UVXY at the end of the day on the highs, right, on that rally into yesterday's close, you made money today because you entered into the UVXY at worst case 12 cents at market ordered in. You could have got a better price than me because I just got in. I said I went in and I went in now. That's the whole point of market ordering. Second, we nailed that trade on Apple twice yesterday. Off the open, right off the bell. We said long. I want to be long Apple. And then it pulls back. End of day. All right, let's get long Apple. We have time with it. It's a lot cheaper. It was wild that those SPY calls were up 100%, but that's dailies, right? That you come in today, the time is just ate you up. All right, so here's the pullback. Man, I really like Tesla. Like, I want to play Tesla for some reason today. Yes, good stuff. Good stuff, man. Good stuff, man. I hope you guys did. It's just a way to be able to put, put on a, just to help show you guys different ways to do, CPI days. Maybe you don't want to look at SPY. Maybe you do. Maybe you want to use a double leveraged ETF to help you so you can use half of the size of the, let's just say the long, and you put half of the, just like half of that size on to the short side, which would be like a call UVXY, and you should do okay. You should at least, for the most part, lose a little bit of money at worst. Right? If you get the move. Here's the thing. If you don't get a move, then you're going to lose on both. But I was fairly certain. You guys have seen me for months now. I don't ever really play data like that, but I thought it was market moving. The way the markets were setting up, I said, you know what? The markets are really volatile. Dude, if Tesla breaks and goes right now, fuck. Once.
That was a report from Reuters
Okay, hold on. EU.
due to the European Union
Because they have a
regulations
rate hike decision too. I think tomorrow.
allowing users to select
All right, look for 170 on Tesla.
available web browsers. That's OPR.
Man, I think Tesla's gonna go.
At the high.
Fudge, bro. I never got my 175 short. Oh man, that sucks. That's brutal. Okay. All right. Okay. Let's see if we get the bounce back. Get short at the 20-day moving average. I just think Tesla could pop back above the 20-day and look for the test of pre-market highs. So I feel a little weird about trying to get short this thing down here, even though we do have a nice increase in volume. Like right now, if it were to flip it and reverse it, and just because the candle closes red, as long as you can get like a nice tail on this thing to close higher. See, you're not. You're below it. We're below it now. We'll see if it makes it resistance. I should have just got short yesterday, man. You guys know I wanted this. Told you guys I wanted to be short Tesla. You know, I still think Tesla has room to go higher eventually. Just don't think it's the time right now. I really don't. I don't think it's time for Tesla. Okay. Man, I should put... Yeah, come on. Let's get that bounce, bro. Let's get that bounce. Let's get that bounce. Maybe we get one more opportunity at like 174. Maybe. Right? Maybe we can get this 174, which would be like the low of day here, at 173, 173.50. Or they're just going to take the trade and just run this thing down to the ground. It's got to be one of the two. It's either going to bounce right now, or, you know, man, I really should have just taken that 175, guys. I'm sorry. I'm sorry I didn't get it. I tried to lay it out, lay out the land. Can't catch them all. There's that retest of the 20-day, and here it goes.
Microsoft advertising integration. Marin software enhances Microsoft advertising integration. That's Michael Romeo, India, November.
All right. All right, so it's not trying to give you any follow-through right there. That doesn't mean it can't just continue to the downside. Fuck. I just feel like the second I go short Tesla, it's going to pop. All right, so Bob is just hanging out here. Kind of just trying... Looks like it's trying to roll over a bit. If it does sit here and we end up... I feel like I should take it now. I feel like I should take Alibaba right now to the downside. Right now. Like, literally, right now. And I said 73.50, so these are still at 71.21. Alright, give it to me. Give it to me. Alright, so I'm looking at BABA right now. I'm looking at the 73 puts. Okay, I'm looking at 73 puts because, yeah, I'm not going to get into why. The call side is loaded. Listen, you can get squeezed on this thing. I'm telling you guys right now. This thing could squeeze you in a heartbeat, and very well possibly might. We need to break this 74.50 level. We got to break it. You know, this just sitting here and consolidating is actually pretty strong. So, you know, we are underneath VWAP. But this, you know, BABA just sits here at the initial morning high or the opening price, then, you know, could come into some trouble here. Come on, just pop and let me get it. Let me get it. I know you want to. I know you can do it, Baba. I think Baba wants to go higher. I got to be honest. I think it wants to go higher, but I can't do it. I feel like Baba needs to pull back to like 70, 74, 73.50. Like, it has to pull back to this 100-day. And there it goes. Pack it on. Look, they just won't pack on this thing. They want it to bounce. They want it to bounce first before they get in. So now I got to juggle between Tesla and Baba, and how I have to type in Tesla, type in Baba, go to the options team, type it in, blah, 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 blah. So I'm going to be probably paying up for whatever position I do put on. All right, so you can see here, that's yesterday's initial morning low. From where we rallied yesterday, we've taken that back. See if you make that a rejection point. I think this is crazy, but Tesla, I don't know. Maybe I'm wrong, but I think Tesla needs to bounce. I do. I think it needs to bounce, bro. I think it's just oversold. I think I'm thinking about the long. I got to be honest. Maybe it just sits down here. It could just sit down here. That's another option. But I feel like, you know, there's got to be a line drawn in the sand where like 171.05, 171, where it's like, okay, let's try to get a rally here. Here's the thing, is that Tesla can just sit there, right, and not move, and that would, you know, kind of help out the short case. And here you go. Like, this is a nice level. You get a nice rejection. This level here at 172. Can't argue with that level. I mean, I don't know, guys. You know, if you guys want to take it, shoot your shot. But there's your risk, right? Really, that's not your risk, because what could happen is you could pop. You still have the low a day. So maybe your stop loss is at low a day. And if you get this 172 entry, that is your entry. And let's say 172, maybe you go 2 weeks out, and anything past 173, you stop out. You know, your risk to reward there. I just think we need to bounce. I do. I think we need to bounce and bring this thing up. Here she goes. Fuck. Is Baba doing anything? Because I might just try to go long Tesla now. I might try to go long Tesla. Let's go, Baba. It's going higher. Looks like she wants to pop her head up to that area. Rejection of 75 is where I would look to get short Baba, and I'd be looking at the 73 puts. Let me go back. Okay, I don't have to type it in. How's TSM doing? I know that's a slow mover. Does anybody see anything with relative strength? With volume? Maybe Google has volume. Amazon, BA. Solar names. Solar names have been going a little berserk. All right, Tesla. All right, I'm going to take a long on Tesla. I'm going to try it. I don't know what to do. Maybe I need to wait. Maybe I need to wait and let it do what it needs to do. 175. They want 160 for the 175s. 177, 178. 1330, 104, 171. Let's go with this. We could probably get a bigger gain. The delta's 25. Man, that sucks. 25 to 36. This would actually keep you safer. So if you want to look at a long, I would look at 175 on Tesla. And I'm actually looking at that right now. Gosh, I want to get it. I do. I think I need to wait. I'm not sure what to do, guys. I want to get short, but I can't. I think it needs to bounce. I think Tesla needs to bounce. I'm going to try it. Maybe I'll try it. I mean, you just can't argue with that volume there. 160, 163. I mean, fuck.
Coming up, wholesale inventories at 10 a.m.
Oh, you see that? It's trying to set us up. Wholesale inventories at 10 o'clock. It always happens that way. You see? You see? That's kind of funny, right? I say this all the time, that you got to watch, man. They try to snake you at times. But, so I have the calls up, all right? And these are the call options right here. All right? That's the call option price. Damn. We'd already be up 20 cents a pop there. Just on that little move there. It's all good. You know, wasn't sure if it was going to pay like that up there to VWAP, but it did. Paid pretty nicely. Man, I really think we could get a reversal in Tesla. Just got to watch this area here. I want to see if it rejects or holds VWAP. Wait, why is the daily chart continuously messing up on me? I don't understand. I really don't.
At Chomps, we create snacks for people who are hungry to get the most out of life, who only accept the highest quality. Because real life demands real ingredients. We make snacks that don't take shortcuts, with grass-fed and finished beef, 0 sugar, and up to 12 grams of protein. When life challenges you, take bigger bites.
Man, I think I might have messed up, gang. I'm going to wait for this data to come out, and then I'm going to look at that long on Tesla. I'm going to look for the long. All right, so here we go. Look at that, 150s. See if it rejects this level quickly. That's going to give us our sign here. It's going to give us our sign. Bang, I want to see a reject. See, that's why I did. That's why I was like, come on, man. Reject, like, start popping up, man. I should have, look, 148. I just feel like it can just fall out of bed on you, man. Even though it, like, just because, oh, man, I don't want to say it. I don't want to say it.
Coming up, wholesale inventories plus 0.5%.
Again, we have data coming out. I might go make a cup of coffee real quick. Man, that was a 140 entry. Damn, they were 160 down here. They were 160 down there. You got that little, you're higher and that little pullback. So you see why you need to be cautious. So for anybody that's new or that just joined us, what happens is the stock went higher, and off of that 2-minute candle there, that 2-minute pullback, the options just that pullback hurt you bad. All right. You know, if you didn't take profit. Oh, nice. Good stuff, Ray. Good stuff, bro. That's a nice little scalp. That's what I say. You know, you broke the 20-day, you regained it, and it was like, that was just a big sign, like, let's get, like, you know, I know what, I'd imagine you were just going for a VWAP test and the lower day. All right, bro, I don't know why this recently has been freezing. Oh, what is this? Why does that thing always come up randomly? What is that, 74? Man, man, if we could just get a nice bounce here, we could just about get these 170. What am I at? I'm looking at the 175 calls is what I have up right now. We could just about get them in the money, even if we could just test high a day. Bang, right there, right? Are they trying to suck us in? I almost clicked it. I almost got into that. I'm just, I'm just optimistically cautious. I'm cautiously optimistic. I don't know if that even makes sense. You know, because I think the long-term trend is to the downside. I just think near-term, I would like to get a bounce. I don't think it would hurt that much to try to get a bounce here. I think we're just a bit overdone. And I want to try to look for a bounce. You know, I don't know if Tesla needs the market, but you guys can see how it's just sitting here at this 20-day, and it's not going any lower, but it's also not going higher. So it's thinking about it. Others are thinking about it. All right, if the price matches, oh man, here it goes. Enter, 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 bro. Enter. I think I should be entering it now. Oh, fuck it. Oh man. I knew it. I knew it. I knew it. I knew that's when I should have hit the trigger. Let's see. See if it's going to go. See if it's going to go higher. Come on, just go. Just bounce. Just bounce. So this is low. Pre-market lows here. Pre-market lows here. She doesn't want to give you any type of follow-through here. Tesla does not want to give you any type of follow-through. This could be a bear flag here. A false breakout. I don't know, though. Let's look at Baba again. Okay, Baba pulled back. Did anybody get that Baba play? Did anybody take that? Look how the volume start. You see the size of the candles. Like, you know, it was screaming to test the. Look, they're up 100%, guys. They were 20 cents on those 73 puts. You're at 40 cents now. That's a 100% trade. That's a 100% trade. Like, again, I give these out. I give you guys my opinions, and right there, you're at 110, 115%. Even if you just took it on the break of VWAP. Like, I don't know. I don't know, guys. Like, it's okay, you know. Just saying. At least pull back to the 100-day. There you go. You got yourself about 100% trade. But it's up to you to take it. You know, I can't physically do it for you. I need to have the charts up to have I need to have the charts up so I can like see a few things at once. Or get my Apple computer up here, and I use my laptop and stuff for like for a few different things, and it's just my freaking Apple computer is so big. It's so heavy and big, and that's what she said. And it's just, I don't know. I have to get it up here. We'll have to do what it does. Super. Oh, there goes Tessie. Oh my God. Everything's playing out. That's a pop. That's a nice pop. Gotta break it. Come on. Becca 1-9. Get back to high a day. Bro. Man, I was such a little witch. That's what happens when you're a little witch. And you don't take it. Damn. Even that, right? That's a 140. I mean, Baba obviously was the better play, but look, I knew it, man. Fuck. Alright, give me the. I may just go ahead and take it. Hold on. What we got here? Let's go ahead and take it. Let's take it. Alright, so we're above VWAP. Let's look for a high a day. Come on. Oh, man, that was my pullback, I felt like, right there. Let's go. Let's turn this ship around. I'm just worried that the SPY, guys, is probably going to start pulling back. Like right now. It looks like the SPY literally right now might start pulling back, and there's your VWAP test. What I'll do is if Tesla does get to 177, I will take it short. All right, I will take it short. I think the SPY right now is about to get busy, possibly. I think it could go. I do. I think it could pull back a little bit. Look, what I say right now, right? Come on. She's trying. She's getting ready to break VWAP. It's trying to break VWAP. I don't know how oversold it is. It is pretty oversold. So, you know, I wouldn't be looking for a huge move out of this. Because it's already made the move. You had to had some skin on the table, skin in the game yesterday. Wait, the hell? So here we go. Damn, they're going to be $2. Let me analyze this. It's 172. Is it going to give us the 172 entry? Again, this would have been the target, was 174 to 175. We have a gap above us. What's Apple doing? Oh, man, I can't believe I didn't take that. Cannot believe I didn't. And look, guys, there goes Apple. It felt like Apple was going lower, unfortunately. Where that is, I don't know. All right. I figured like the high 167s and whatnot, but she's got other plans to go to 166. I think I'm going to buy some here on the way down. I'm going to buy some in the long term. I'm going to snag up a few shares here, guys. I'm going to go make some coffee real quick and be right back.
Loans that are really sensitive credit card rates to what's happening on interest rates.
Yeah.
Other headline I wanted to mention was what's not helping is China has not really been helping on the growth side and on the market side. Fitch today cutting China's ratings outlook on growth risks, and they warn about rising debt, and they warn that the economy just hasn't been as
You have any, I mean, we'll get to it in more detail, I hope, at some point, but any bigger takeaways? Not just forgetting your time with Yellen, that was the main thing, but just if you got any sense for sort of what's going on in China as a result of just having spent 72 hours on the ground.
Yeah, that was at Peking University where we were.
Right.
I have to say it was a little bit of a distorted view because I was there over the weekend and it was a holiday. It was the tomb sweeping holiday, where you sweep the tombs of your ancestors. So people were off work, and there were sort of more people in Beijing at the tourist attractions like Tiananmen Square, which we were at. We went to some of the malls. You know, my sense is, first of all, I loved Beijing. I hadn't been there before.
Yeah.
I thought it was a great city. There's the Forbidden City.
Yeah, that's so cool.
Which was very cool. 7,000 structures. I mean, really interesting history. They love Yellen, as I mentioned many times. I think that's pretty unique, probably among American policymakers. Not sure who's going to come next on that front, but it didn't feel weak. It felt like people were out. They were going to Nike and Adidas and Lululemon and Gap. It was amazing to see all the brands that we talk about every single day. Mm-hmm. Those were all the main stores along with the EV showrooms.
Of course,
in the malls that we were at. But food was good. It just takes a really long time to get there, and it's really hard to get a visa. So tourism, I'm not so sure if that. I didn't see a ton of Westerners, and the airports were empty.
Yeah, and it takes a while to adjust back to our time zone. So,
yeah, what day is it?
Yeah, so if you fall asleep, I'll wake you. Don't you worry. All right, let's get back to the broader markets. And
I wonder if that's an entry point there on Tesla.
Of course, get a take on
But that's another VWAP rejection. Let me not come up with the reasons. Let me just say, hey, I want to see this.
That's why I came back.
Exactly.
I want to see a pop back to 174.
Yes, now 1%. In fact, what's interesting is where the market immediately went to.
It just feels like this. It doesn't want to give it to anybody.
That was Thursday's low.
Feels like it doesn't want to give it to anybody. This would have been a nice long. On one, you know, you got these. You could have got these contracts for $1.40. So, you know, maybe that is what is causing some traders to not hop in. Because they just were like, dude, I'm not paying $1.80 when this thing, you know, was $1.60 on the low. It goes up higher, pulls back, makes a higher low, and that on the higher low, the 140, they went to $1.40. So if I get long and get this and have to sit through a pullback, I may be down. I don't want to do that. So I think that is where the discouragement is coming from, and why we're not getting the volume and the continuation that you would want to see for an upside move, because there's hesitation there, right? That's one of the reasons that I would say, hey, you know, they're not, you know, hopping in and helping this thing out, because IFBD, I'll look at it. I seen SOUN ended up doing their offering, but that's what I think, right? You know, a lot of traders just saw these that higher low here at $1.40, and the low a day was $1.60, $1.70. So that is, you know, you got to think about what that does to a trader and their decision making. Like mine, I did not, you know, pull a trade out there because these are the things that I'm taking in. I'm taking in the things that I'm taking in, and how that would affect other people, right? And how it's just not giving us the momentum just yet. Not to say that it can't. It can happen anytime. The SPY is and was turning around here. The volume is still to the sell side, but it's just slowly cranking higher. You never got that breakdown off of VWAP. Let's see here. This thing's about to get squeezed. Will it plow through the VWAP? Is it going to plow through VWAP here on the 3-minute? Come on, baby. The volume's falling off. The volume is just falling off. Oh, man. If this thing pulls back and we stuff and hold this level, I'm going to look to take a long. I want to get me a coffee, though. I should just take it. I don't know, though. I don't know. I'm 50-50 on it. I should have just went with Baba. I should have kept it simple. Baba always treats me well. And for instance, I mean, guys, literally, all you needed was the move from VWAP to the 100-day moving average, and you got yourself nearly 100% trade. So, I like Baba. And I like Baba for that very reason. If it goes against you, then, you know, that's why it's important to buy right and or sell correctly. If you're a seller of options or seller of premium or whatever it is you do. I hope Wiz is okay. I haven't seen Wiz in a while. Alright, so what we have here is a failure to communicate. No, I'm just playing. Alright. Man, like, seriously, though, if this thing continues to go down on a 15-minute chart, that's going to be wild. That's wild. All right, I'm getting some coffee. I'll be right back.
No inflation, and they said, we're still going to force a hike in there. That's the only way to punctuate a rate cycle, is to do the opposite of what you've been doing. And so maybe that's where we are with the current Fed in saying we need to squeeze and ease in there just as a gesture to say the tightening's done.
See if TSM breaks and pulls back here.
The way they're looking at it.
Yeah.
But the thing is,
if it can
they
pull
want to
back.
see more progress, or at least inline numbers, and we're not getting that.
Absolutely, yeah. That's why they hope to get lucky in the next couple of months, I guess.
All right, well, the S&P remaining down roughly 1%. Mike, thank you. Mike Santoli. Let's get more of the streets take here. Jefferies chief market strategist David Zervos joins us. Always good to have you, particularly on a day like this one. David, just give me your take on the CPI print and the market reaction.
I guess there's disappointment, but at the end of the day, I kind of like the market reaction, David. I like the fact that the curve's inverting. I like the fact that, as Sarah was talking about, long-term inflation expectations are remaining anchored. So things like the five-year break-evens aren't really moving. And people are adjusting the timing of these rate cuts, these what I like to call victory cuts. Victory's still a little bit elusive, and the cuts will come a little bit later. And I do think, David, it comes down to some of the things we've been talking about on these sessions that we've had over the last year or so, that policy really isn't as restrictive as people think it is. And there's a lot of folks at the Fed still trying to figure it out, the market trying to figure it out. I go back to my thesis, which has been that the balance sheets at these central banks are still highly accommodative, adding a lot of liquidity and socializing a lot of losses when rates rise. So I don't know if I'm right or wrong, but I certainly feel like some vindication on the idea that policy is just not as restrictive as a 5.25% to 5.5% rate might suggest based on a long-term history.
Right. So based on that and this print we got today, I know you were not one of those looking for 4 or 5 or even 6 rate cuts in 2024, but are you looking for any, let's call it, in the back half of the year?
So I've made a very clear start the year that it's not about how many or when, it's just about ability, which means that if things get messy, a bunch of data starts to turn sour and turn negative, both inflation and growth, I think they have the ability to cut, and that wasn't in play over the last couple of years. So that Fed put is there. Maybe today the Fed puts a little less because they're going to be thinking, oh, well, the inflation's a little sticky. But I think we've come a long way, and we should still celebrate the almost 600 basis points of disinflation that's occurred over the last 2 years. Hopefully that's not transitory. I don't think it is. I think it's more in the Yellen camp. But who knows? Nobody knows. And in fact, I don't want to base my views on that. I want to base my views on the fact that really where we sit today is a place where the Fed has accomplished a lot and has credibility. What the market's telling you today with the moves, particularly in fixed income, and to some extent the equities aren't really that bad. We're still up 7% for the year.
All right, I'm back.
That it's just going to take a little bit more time, but the Fed's
standing on business.
To anchoring
I'm standing on business.
Expectations has never been stronger.
I do wonder, David, if we're in this
that stuff was so funny. I watched it yesterday. He had him in. I don't know if you guys were listening to that. I can go ahead and turn that back on. He said he had him in the studio rapping, and he had him in the studio rapping, sitting down, talking about standing on business, sitting down. Shit was hilarious. All right, so here we go, Tesla. And for anybody that stays quiet and, gets these trades, just be thankful. Because ain't nobody else in the world would do that without, you giving them money. So let's remember that. All right, so if anybody has tried to take this long, has taken BABA, has taken the trades from literally all week, we've just been on a roll, and I'm going to continue to be on a roll. This is what we're going to do. I honestly don't know what happened to me February, guys. I really don't. I don't know. I'd have to, I didn't have anything crazy going on. I don't know. I don't know why I kind of just pulled back a little bit on my performance. All right, so there's Coinbase pulling back. And there you go. So what exactly what I said with Tesla was you're seeing traders get second guessing the long on Tesla when they see this low at 160. The higher low entry is at the option price is 140. So it makes them think, hey, I'm obviously not going to pay 160 because I need at least 140 because, in order to trade, you have to sit through pullbacks. And if you're sitting through pullbacks that are wiping away the green and the gains, you're either aren't in the wrong, you're either not in the right option, or, volatility is so high that once you get that pullback and then it bounces, it doesn't recoup as much. Like, That's why you want to buy closer to the money, but you want to have a tight stop. You want to know what you're doing when it comes to options. You got to know what you're doing. Or you'll just be like everyone else and just say that they lose money at options. I play options every day, and I continuously bring my equity curve up. Right? I continuously pull money out the markets because it's not a scam. You just have to know what you're doing and analyze things like this that I just analyzed. Why are we not getting continuation and or volume? Well, one, outside of the market being down. Two, they're a little hesitant to get in because of the big gap down, which creates data, which creates the volatility, which creates a higher premium. And they know in order to get a full trade out of this, the trade is to the downside, but getting that bounce back is where it's a little hard. It just seems to be hard. That's all. So with that said, if Tesla does not get above 175 or 174, or if we get there later in the day and we just sit here and consolidate, I will take this short for a reason. All right, my game plan right now is to try to scalp a long, I don't know if you would call it a scalp, but a trade that lasts anywhere from it all depends on how the stock moves, right? 15 minutes, half hour to an hour. Try to get back to high a day. Try to get back to yesterday's close. I don't know if we get there, right? I don't see why we couldn't get to 177. I really don't. I don't see why we can't get to 177. And it might start right now. Possibly. Right now. I'm looking at the 3-minute chart and I'm just like, we're above VWAP now. Come on, bro. It's either going to go higher or go lower. It just doesn't want to give you anything. It just doesn't want to do nothing for you. So that's my plan, right? On a 4-day, anywhere from the end of the week to next week, I'm looking downside on Tesla. Near term, today into tomorrow morning, I would look for that lower high to be put in. I want to look for that bounce back to enter the real trade, which would be to the downside. I don't see, I have to scan and look through, but I'm not really, unless you guys see anything with volume. I have Delta Airlines here. It's not really moving. Let's see. Baba. What's Baba doing? Baba's still, there's that pullback there. Again, Baba, that's all, that trade is up. It was already up 100%. You're talking about 8, what is that? Almost just under 10 or not 50. So that's probably up 25 to 30% right now, maybe a little bit more. Because these options were at 20 cents to 22 cent entry and exit. They were at 40 cents. So half of that's 30, and you're 25, 28. So call it a 25%, roughly, something like that. And I think Baba is going to pull back. I just think it has a catalyst right now which could hold it up here to where it just consolidates. That's the other thing. Stocks don't have to go up or down. They can just consolidate, for the move higher. Taiwan Semiconductor still ripping and running. Still ripping and running. I don't see anything with a lot of volume or anything that sticks out other than AMD. Might be able to take AMD to the 100-day. That might be a trade idea there. You'd have to probably do it now on this retest, but I don't know. That's crazy. AMD's back down to that base. What's Nvidia doing? And Coinbase, NVDA. Nvidia's doing nice. Coinbase, there's that Coinbase rally we were looking for. We were looking for that yesterday. Down here at that 240 level. That's just your level, man. That's just your level. So I was late on that. Sorry, guys. I'm sorry. So if we go to Bitcoin, I told you guys 168 was the level that I thought was the level. And it was 67.5, 67.50, we'll say. 67,500. Now you have to worry about, let me see if it tested the 50-day. It still has not tested the 50-day yet. Oh, I think that coffee's gonna, I think that coffee just gut punched me. Alright, Roku. Flat but down. This was a trade we got in yesterday. And I took this off. And I had a really good feeling that Roku was going to gap down on us if especially if the markets went down, but so let's see here. I'm just looking through my orders from yesterday. Buy. So we paid 27 cents, 26 cents for that. 26 cents for the April 12th 2460 put. 26 cents. $60. So the 60 puts, they're up at 42 cents. So they're green. I'm not sure what they were on the open. It's just good to look at things like this to get a feel to see how the stock reacted, so you kind of have an idea. It was a big move. I don't know. I have my reasons. I just want to see it real quick. Okay, so you could have got anywhere from 80 cents to like 90 cents. So that seems to have been the bid on the open. Damn. So even 369, what is that? 300%, depending on whatever entry you got. Because you guys know that you guys could have gotten 18 cents, 15 cents on those Roku calls or Roku puts. And I told you guys that yesterday. This rally here, bro, it killed him. It killed him. And I said it. I'm like, yo, and I thought about adding to the position at a lower price. So that's a monster move for those 60 puts. You did have CPI in your favor. So going into that trade into today, you would have had to have backed it up with the long. Okay, because if it went higher, you'd be down. So how do you effectively do that? You hedge yourself. And you have to know how to hedge. The how is the important part. Okay? Just like Apple and UVXY yesterday. Feels like Tesla is really getting ready to pull back, and I may take an entry here soon. I may end up taking a short on Tesla here in just a few minutes. Let me pull up the 15-minute chart real quick. I was just adjusting my mic. As soon as I get these things up, I will let you guys know. I'm not in the options, but I have the options chain up right now. I'm pulling it up. I just wish we could get a bounce back to 174. I really wish we could get that bounce back to 174. It just doesn't have no momentum today, unfortunately. Coinbase is where it's at. I missed this trade. I missed it. Okay, I missed it. It was on the radar, but SOUN TXYZ, nothing. Baba. Baba's still pulling back here. I didn't know the mic was off, but I think Baba still has more room to the downside. I think you do test 73. I'm gonna tell you guys. I really think I think that we can test 73. I feel like it may be an afternoon type of trade, but this stinks, man. All right. Well, that's unfortunate. Let me know. Did anybody take any of the trade ideas? Did anybody capitalize on them? Did anybody take them? I want to know what you guys traded. If you traded anything, I know Basic. You said you traded IFBD. I'm not really looking at small caps right now, just because of the fact that the volatility is in the overall markets, and I just don't want to worry about an offering, a small cap rallying, and then they just did an offering, and you find out the hard way when it pulls back. Not that it will, but oh, you did? Yeah, look, honestly, I'm not telling you what to do, obviously, but right now would be a time where I would look at the overall markets. Just because there's a lot of volatility right now, if you know why. You know what you're doing. You know why. From liquidity reasons to, I just... what's funny is I have not... Wait, no, I think I was in... I think there was only one time. And I took the position off right beforehand. There was an offering, and I forget what stock it was. But I call it like a 50-cent move. It was like a 50-cent move on like a $4 or $5 name. Maybe even $6. But it was weird because it consolidated. You know how you consolidate throughout the lunchtime? And I'm like, okay, cool. This is a consolidation. And I already noticed that there was already higher volume in the morning on one of the sell-offs that was just sticking out to me. That was like, yo, this will probably be a failed breakout. It ended up, kind of just like it gave me like a 50-cent follow through. It gave me a nice little move. I ended up taking profits, and then it was like, I don't know, just like a couple minutes, bang, it just falls, and it's like, oh, there's an offering. I'm like, damn. So, I have not gotten caught in something crazy like that yet that I can remember. I have been caught in trades where, news comes out and I'm like, what the heck? That has happened. If it hasn't happened to anybody that's listening, I'm not going to say that it will happen to you because it doesn't have to, but chances are there will be those times where, things are going really well, and then, womp, womp, womp. Happens, but, I don't know. Just making conversation. Let's see here. Let me look. Let's look through the charts. Google, Amazon. So Apple, I don't understand the sell-off in Apple. If anybody has not taken a look at Apple, I would take a look at it. Oh, look, it reversed. I bought some down here, and I think that's what you're seeing now. All right, I think you're seeing that now. So there's a nice little reversal on Apple. You had to, man. It's giving you these, you're never going to call the bottom on anything. All right, if you do, okay. But the probability of just doing it over and over and over and over and over again, calling the bottom, it's going to be an area, when stocks pull back, that's when you need to like start, buying them. That's all I'm saying. That's how I feel. I'm not telling you guys to. That's just how I feel. When you have a name like Apple, do I still think this is an expensive price? I mean, not really, because there's been some years because, I have owned Apple for a long time. I think, though, that with the stock split and everything, and that there's been some time that's went by, we'll have to just, obviously this earnings season will tell whether or not the stock is expensive. And it looks like it's just pulling right back down to a previous area, which was, damn, it's below them. It looks like, let's see. I'm not going to get into that right now because I want to trade. All right, it's 10:30, guys. Let's look at the SPY real quick. SPY is just bouncing, just slowly grinding higher like I thought it would. I would look for the, yesterday. That's crazy. That's where we were yesterday. Look for that 516 level. All right, look for that 516, 517 level for a reversal. And then we have the 20-day moving average as another area. Tesla, I'm watching her. I'm watching her. As soon as the market starts, you can see Tesla is not pulling back, but the market's grinding higher. But Tesla's not grinding higher. There's relative weakness there. I think I might go ahead and try it, guys. The volume is really low here. I don't know what to do. I think we do break this level, and I'm looking to get down to 170. Ultimately, I would like to get this trade back down to 166, 165. Let's look at next week options and see what they're going for like way out of the money puts. 160, 87, 21,000. If we can get a bounce, I'll probably look at these next week's 160 puts. All right. Next week, 160 puts. It is holding the 100-day moving average, or the 20-day moving average on the daily chart. It is holding very nicely. It's just, it's not participating in the rally with the overall market. But here's the thing, too. I also wanted to say, for anybody that watches the SPY or the Qs for their trades, remember, gold and energy, like energy and gold and mineral materials or metals are doing really good right now. So that's going to skew, it could skew your, if you don't take notice into that and what's going on underneath, you peel back the layers and understand what's going on with the SPY, and you try to you see the SPY going higher, and you try to get long something that's in the SPY, and it just doesn't participate, right? It stays flat, or it doesn't rally, or it sells off. Well, there's the X factor, and that is energy. Okay, so I would look at the SPY to see what parts of the SPY are moving in accordance to what part of the market you're trading, whether that's tech, whether that's banks, healthcare, automotive. Like, that's how I would look at it. And to be even better, as far as due diligence, just go right to the ETF. Let's say you're trading solar names. Look at TAN. Look at the overall ETFs. Stuff like that, like XLK, right? Technology. You're trading Microsoft and Apple. I would look at XLK, kind of the SPY, but if I want a real good look at the technology sector of the SPY, I'm going to go right to the technology ETF. So I did want to say that because that was a thought I had yesterday, and I felt that, like, people aren't fully understanding that, you do have some X factors going on with the SPY, and if you do try to trade something and you're looking at the SPY to go off of it and it doesn't participate, that's probably why. Because, the SPY is going higher because of energy, gold, and all these other things that normally it would, they would just be flat or red or, not holding the SPY up. And that's the good thing about the SPY. It's really diverse. So it's one of my favorite ETFs, I gotta say. Is this it, Tesla? Are you going to do it? Are we doing it? Are we doing the thing now? This is next week 160 puts. Is that fuck? What strike is it? Oh my gosh. Okay. Hold on. Because I want it. I do, guys. Okay, yeah. Next week, there's some nice volume and everything there. I'm going with it. It's way out of the money, so please be careful. But I'm going with it. I'm doing it. I'm doing it. All right, I'm doing it. I'm doing it. All right, that's next week. I'm not in it yet. Just give me 1 second. I'll let you guys know. No, I'm here, buddy. I'm just doing some work real quick. I'm looking at a next week 160 put, and I'm just wondering if I'm going to get my 174, 175 entry, or and am I going to back it up with a long going into like 174, 175. I'm trying to figure out what I'm doing. That's all. I can turn this on real quick. I'm just looking at a trade real quick, guys. That's all. I'm just doing my work real quick. That's all it is. Just give me 1 second.
The 1907. You have to take as a whole. CPI is 3.5%.
And if you guys have any,
we'll
if you guys have any questions or anything, throw them in the chat. Anybody that's new here, welcome. Hit that like button. Do us a big favor. Hit the like button. Subscribe. So far, man, every day, man. This has just been, we just the analysis has been on, man. Spot on. Baba, I can't believe that was 100% just to the 100-day. I mean, honestly, guys, I didn't think that. I didn't know that. And I think that's why you're not seeing the extension on Baba right now, is because those options were 20 cents and they went to 41 to 43 cents, right? Just that move off of VWAP to the 100-day paid you 100%. You're done. You're done for the day. I told you guys I was looking for that pullback to the 100-day. I mean, I didn't look at the delta and look to see what it would have paid if it got there. I just had a plan. I didn't like dissect the return. But if obviously if I were to entered it, I would have said, okay, if it's got a 10-cent delta on a 20-cent stock, and it's, I know, hey, I'm pretty much going to get, let's see, 50% every 50 cents, dollar for dollar. So, But that's a nice trade there. That was a nice trade. It was a good analysis on that. You could have even gotten it up here where I said pre-market highs, or this pre-market pivot low. This little, you didn't get the extension that I thought you would to put in like a double top. So I don't know, but that was nice. That was really nice. I appreciate you, man. Yeah. I'm gonna turn it on. I just it was just messing up with me because of I don't, whatever happened when I lost power. There was just like, I don't know if a transformer went. They were doing work, but it when that happened, the camera was started to freeze, so I didn't even fool with it. So yeah, I appreciate you though, man. Yeah, just I'm looking at Tesla. I'm trying to figure out what do I want to do. Like, I feel like they're trying to suck us in here. But if we can start to get an increase in volume, it's just like Tesla's not giving us enough follow through. But it's also not giving us the follow through to the upside. So I'm like, that's what I'm thinking about. Like, whether it's time or not time, I do want to be short. I do know that. I do want to take the short. It's just where. It comes down to the where and the when, right? Like I feel like if I were to put this on, the minute I put it on, it's just going to reverse here. It's just going to reverse, and then it's going to go retest either this gap from yesterday or the high a day. I just think I think Tesla's overdone. She's sitting above the 100-day, 20-day moving average. Maybe we try a small call like a weekly call. Nothing crazy, just small size. I think that's what I might do, but I will tell you guys right now, I'm taking profits at 174, 175 if we get it. And I will look to get short, more like with next week options, like 160, right? Because I'm going to look for the 164 level. I think it should have no problem getting back down to like 166, possibly even 164. Maybe 164 might be too much, but, I don't see why we can't get to like 167.50. This box here is a gap fill, I'm pretty sure. Pretty sure there's a gap here. But that would be, the first targets that I would look for. Let it pay it and just take the trades off. Take it off. Don't be afraid that, if these things start to pay you, just take it off. Take some off. Rip it off. Pay yourself. Keep it consistent. Right? At least get your confidence up, whatever. It's just a good feeling when you're just consistently opening your account and it's higher and higher and higher and higher, like mine. Like these, yes, we could have got in there at 89 to 90 cents and now they're $1. That's a 10% gain, and it hasn't even moved yet. So understand though, if you do trade options, you got to understand this is far out the money. So if it gives you the move and then it bounces, that bounce back could take you red. So if it gives you a nice move and you don't take profits, unless you're just, unless you're okay with just, buying 2 or 3, and you're going to risk a 50% volatility where you're going to risk $1 to lose 50 cents, right? Or you wait, or you don't take it and you wait and get the entry correct. And that's what I'm doing is I'm going to wait, get the entry correct, hopefully pick it up at a cheaper price, like to get it at like 75, 70 cents. I'd like it at 50, but I don't know if it'll give it to us. But a nice 174 to 167, that would be a really nice move. The deltas on these, let's see here. I'm on Tesla. So the deltas here are 30, or no, they're not. They're 15 cents. So you'll pretty much, until it starts moving in your direction, it's going to pay you just about 20%, just under 20% per dollar. Okay? But if the move is in the direction, that delta is going to go higher. The delta is going to go higher the closer the more you start going in that direction. Like right now, let's see if it changed. It has not changed just yet, but it should. So that's how I would look at that. I would look at that as, that's about, I would overshoot the 15 and call it a 20 at $1. That's 20% up or down. You're making or losing for just about every dollar. That's all. MDIA, good stuff, bro. Good shit, man. Good shit. Stuff it. Stuff it in your pocket. Pay yourself. That's all it is. That's all it is. Yeah, let's see here. I feel like I'm wasting my day today just sitting here looking at Tesla. Um, you know, maybe here's where she goes to 170. Maybe this is your 170 test. I don't know. Sometimes I feel like there's somebody from the NASDAQ or somebody somewhere listening to the stream and picking up the phone. Johnny, stuff it. He said to go long. But then they would have did it with Baba. Obviously, I'm just joking. But, yeah, that's all. That's all. I hope everybody's having a wonderful day today. You can see here that this is so far, this is lower volume, even though it's a 15-minute chart. It's about to change. You got about 8 minutes left on that time frame. The camera's on top of my monitor. Right here. Look. Hold on. It's just not going to work. It'll freeze. I just have to turn my computer off. It'll freeze. I just flip the thing. Bang. Activate. What up, gang? What up, gang? I know I still haven't gotten a haircut yet. Yesterday, I went out. I went and got something to eat. Went to the grocery store. Did some errands, and it's coming. Trust me, I know. I don't even want to go out in public looking like this. The book has been going well. So I've been trying to figure out. So I have a publishing company that will print it, softback, all that stuff. You can use Amazon. I know I can use Amazon and stuff. But I think it's like $3 to $6, depending on the size and everything of the book. So what I'm trying to do is get like how using the charts. Like Thinkorswim is really, I could use not TradingView, but TradingView. It's just like putting the charts in the book and I'm trying to figure out how do I want to just be able to show because the whole point of it is to be able to read the markets, right? There's a reason why I want to be short Tesla, right? A lot of people want to be long, short term. Yeah, I would like to be long too. But once we get up to that 180, high 170s, I want to be short. There's a reason why. Because I can read the markets. I can read what the charts and everything are telling me. And on top of that, the risk management. How to be able to do it real quick, right? And for people to have something that they don't have to continuously pay a paywall, okay? Something that they pay for and they keep for the rest of their life. This is not I just got to turn y'all over and I got to hit y'all for so much cash. That's what it's all these trading, not all, but the 95% of these trading groups, that's all they want to do is turn over, get more. That's it. Upcharge. We say we don't upcharge, but we upcharge, right? There's always something. You got to sit through sales pitches before they give you trades and all this other stuff. Because I had my neighbor come to me. He knows that I trade and stuff like that. And I told him, I said, listen, I told you, man. I told you that, it's not all as it's hyped up to be. I just know the game from, I'm not going to say any names, all of them, even from the guys that did it years ago, right? This is how it was done, and this is they've just kept it that way, So I would like to be able, because I remember myself 10 years ago, 12 years ago, whatever it is, just going to the library and not getting what I'm looking for, right? I wasn't getting what I was looking for. Okay, I know about options. I know what delta, theta, gamma, right? I know what all that is. I want to learn how to trade. I had someone that was an institutional investor and trader, whatever you want to call it, but I didn't want to bug them. I don't want to bug them. So I want to be able to provide something that they can, that people can keep. That's really good, because there are also some things where, they tell people so much, but they don't want to tell them everything, because they still want to reel them in to say, to keep them on their side. Kind of. They want to give them, some of the information, but there are some of those things where they keep it back. It's just my opinion. Because, again, I went over. I went through some of these things that they were saying in the course. I'm a neighbor's house, and I'm like, 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 I know what a cup and handle is. I know what inverse head. We know what an inverse head and shoulders is, right? We know what how to buy calls. We know how to sell calls for the most part. If you don't, you don't, right? But I think like just reading the markets and how I go about trading around them, how I'm consistently profitable day after day, pulling out money. Why I went yesterday to Stock Twits, and like all these people are really hyped up on ARM, and I don't have a Stock Twits account, and I'm like, I hate to put it to them, man, but these guys, if they don't sell it, they open. Our plan yesterday was on the bell, go short ARM. And you guys saw what happened to that. There's a reason why I said that. Because I can read I can read it. It's just what it's telling you to do. I also was nervous, right? Right off the bell. We said, look for that pop, drop, bang. If whoever was in that did not take profits, I feel bad for them. But anyway, I thought yesterday, guys, I did think that we were going to test the top side of the range on the SPY yesterday. I wasn't sure if CPI was really going to give it to us, give us the whole thing. Okay, so here goes the SPY. It's trying to pull back. I don't know what energy's doing right now. I do have to use the restroom. Give me 1 second. I got to pee real quick. And no, I did not wash my face or brush my teeth because I just was up late doing some research last night, and I woke up too late. I woke up at 7 o'clock. That's too late for me. I need to be up at 5. All right, so, yeah, so here, you guys see how, like, Tesla isn't, I'm kind of happy that I didn't take this trade up or down. So the instinctiveness of being a little nervous about taking the trade, I could have scalped it, yes, but instinctively, it hasn't moved, and that's a good sign. But like internally, it was like, don't take it yet. Don't take it. Let it show you either, we're getting short if the indicators and everything tells us to get short up at 174, 175 and or like, the pre-market highs, but we're once again below the 20-day moving average. We sat above it for about an hour and a half. Now we're back below it. Let's see if it makes it resistance here. We're just getting the markets to turn around now. Looking like an increase in volume is about to step in here. But you got to understand that also, because I'm looking at a 5-minute chart, is that volume to the buy side. Look, it just went green. That candle went green on a 5-minute chart off of VWAP. So do we solidify VWAP right now? That's what I would be asking myself. One, where is the IWM, which I would be looking for? Where are the Qs? Where's the SPY? Where's the Dow? Is one leading to the upside, or is one leading to the downside, which is going to give us a heads up on what's to come in the next 15 half hour to an hour on the SPY or the Qs. We can look real quick. All right, 15-minute chart. I do need to wash my face. I feel like, because it's been warm where I'm at, I feel like I'm just greasy. I need a 5-minute. That's too much. That is too much. It's a 50. That's a nice rejection off the 50-day. Well below there. SPY. All right, so that's initial morning high, IWM. Okay, so look, you can see the IWM did not hold. It looks like it did. It did. Let's look at the Qs. All right, so look at the Qs, guys. You guys see what I'm saying? Here we go. Watch the Qs. If the Qs continue to be weak like this, you can see the SPY and the IWM held this initial morning high, and the Qs are well below it, testing low a day. So do the Qs push back down to the low a day? I think they do. I think this 50-day breaks, and I think we're looking at the Qs testing the low a day, possibly. Here's how I would play this. That's what I think. What I would do is, let's look at the Dow. All right, so the Dow is at high a day. All right, Squawk Box, we don't need to hear your typing. It's okay though, no big deal. If the Dow and or IWM do hold this high of day, let me zoom in. Okay, if they do hold this, which is VWAP as well, you hold this like kind of like high a day, like this little area right here. If I pan it back a little bit, you'll see, you have VWAP there, this area like right here. So if you see the Dow break it, like the Qs obviously, so the Qs are here, right? You guys see what I'm saying? The Qs are down here, about to test low a day. Here's the Dow, IWM, and they're all matched up right there. So do they start to break and follow the Qs? Then there's your indicator. The market's obviously following not, technology. Then from there, Taiwan Semiconductors, look, rolling over. And I told you guys I wanted to look for a pullback, a short. I thought we would get that initial pop off the bell, then take it, but that was a little too quick. I could see why now it needed to rally. It's not something I would dig my teeth in short because this does have relative strength because it has news, not just technical setup, but it has news. All right, it's bullish for a reason. There is an increase in price in earnings. That was some news this morning as well for TSM. Rose 1.2% this morning. Said that its sales in March jumped sharply, likely benefiting from increased demand for chips. So, if you want to take a short, it's up at pre-market highs. Tesla is at low a day. So that's where I want to focus on. Apple was making new lows. So that's where you want to short, right? Look, there's a bounce back. So Apple held up really nicely yesterday. So that's just a little, thing here. So let's see if this bounce back. Like Tesla just isn't moving. I was hoping she was going to give me a play. My ultimate plan for this would be to just get a bounce on Tesla. See if it can just get to test high a day, 174. I just don't think it's going to. I mean, I don't know. It could do it at the end of the day. Or it could just sit here all day. It could literally just sit right here. And if it does, how do people that are short feel about that? They're like, damn, market's down. This thing is still above the 20-day. The markets are below their 20-day moving average. Tesla sat there, held it nice. Do they start to take, do they start to cover a little bit? Those are some of the things we got to think about. So it was a good decision not to trade this as far as a half hour, a day trade. But that's my plan. Tesla, again, 174, 175. If you see momentum with an increase in volume, don't step in front of it. Don't assume that it's going to sell off at 175 or 174. Wait until you get to pre-market highs at 175, 177, I mean. This 177, yeah. It's 178. I'm sorry. It's 178. So if you see an increase in volume, or if it's not an increase in volume, but the candles are just boom, 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 like really long and they're big, which is showing you the extension and the momentum, then just wait and let it get up to where it needs to go, and then watch your time in sales in level 2. Start seeing, do those sellers step in? Because the question is going to be now, if we sit here, how many people take a new short position? How many people step down to sell it? Because people don't want to sell down. They want to get the best price that they can. Like if you own this right now and I asked you, would you rather sell it at 178.50 or 172? You'd say, I want 178.50. What are you talking about? See what I mean? So that psychological, just knowing that is why you want to see if, and it goes to the buy side too, do those buyers step up? Are they stepping up in a decent way, or are the sellers stepping down? And in that, that's showing you that they want out, and they don't care what price, they want out, and they want out now, which is going to help give it that momentum and the follow through to the downside. Whether that's a reason, a catalyst, or not. Okay, whether it is a catalyst or not, that's what we look for. Are buyers stepping up or sellers stepping down? Right now Tesla's consolidating. At the end of the day, it feels like on a daily chart, this thing is just trying to like figure out what it wants to do. Does it want to pop and test the 50-day? I could see that for like a 2 to 3 week time frame. Yeah. By the end of the month, it wouldn't surprise me. We will be coming into earnings, so there's another catalyst. So I don't know. But Baba is where the news is at. That's where the volume I feel is at. So I think that this trade is gotten away from us now, though. I did feel very strong about that 173 test, and it looks like it's going to happen. And those contracts, oh my God, guys, they're 92 cents on Baba. The entry could have been 20 cents. That's a 400% gain. This is nuts. That's nuts. Oh, no, that's next week. I'm sorry. That's from Tesla. 73. So 34 cents. So you're back up there. You're back up over 100%. So now you're under the 100-day. I would have had to have taken this thing off. Like, for real. On that extension down to the 100, yeah, I'd have taken it off. I don't, if you're going to give me 100% in 1, 2, 3, 4, 5, 6, 7 minutes, I'm taking that. That's not even 10 minutes in the trade and you got 100%. You have to take it, So. But yeah, if you guys, if anyone out there has questions, is new here, welcome. Ask away. I don't bite. The chat doesn't bite. Ask them. If you see something with volume or news, if you get some random news, throw it in the chat. We're here to work together, and make some money, right? We're here to eat. Yeah. So I'm gonna use the restroom and I'll be right back. I think the only thing I've done today was take profit and took that the rest of that small loss on Apple. It wasn't a loss for me because the majority of that trade we took it off on profits. We got long Apple towards the end of the day. I did, right? And then what did we do? The markets rallied at the end of the day. We took UVXY calls for 12 cents. Exited those. I exited those for about 18 cents, coming into today. So, taking the profits on the Apple call, taking that UVXY trade off, green on the day, right? That was the goal yesterday. How do we set ourselves up for whether CPI comes in low, it comes in high? So no matter what, as long as we get an up move or a down move, we should be okay. Now, if the market stays sideways, since we're in options, we'll lose it. We should lose a little bit. If we don't, I'd be surprised. Doesn't mean you have to. But again, that's why we take profits. Look at Apple, guys. Yesterday, if you did not take profits on Apple at the end of the day, why wouldn't you? Look at this. This is our entry, guys. That was our entry yesterday. Right there. That was us. Bang. Me was right here, right? Because I had to get into it. Well, which might have been like right here. Right? It wasn't that high up. But look, bang, bang. Like, if you didn't take profits on that, that's a 168.50 to a 170 in an hour. In an hour or two. You got to take profits on that. You got to take at least half the position off. Because if you did, you would have had green trade on both of these trades. Because Apple didn't get hurt. And that's why I went after Apple. Because it was green yesterday. The options gave us more time till Friday. It was just nice. The equation between the Greeks on the options and what we were looking for and how and maybe I didn't say how to position it, but UVXY was half of my Apple position because it's giving me double the leverage. So I don't need to just do, let's just say 1,000 to 1,000. I can do 1,000 to like 250 to like 300. I could do 1,000 to like 500, You could do 1,000 to 1,000, but then you're leaning more so on the UVXYs to pay you because they're double leveraged. And that's the point of double and or triple leveraged, is that it takes less capital to make that amount. So if you have a long position on for, let's just say you bought stock, right? You have 30 grand in Apple long. How do you back that up? you could take possibly maybe $5,000 and buy 2-3 weeks UVXY calls, or buy UVX itself. It's cheap. It's double leverage, so the percentage, you would just have to do the math. And that's the point of those. And we just utilized that yesterday, and we got paid today. I got paid. My account, like, I'm actually really happy, guys. Like, for real. The past 3 weeks, just from the trades that we've given out, it's just been spot on. Yesterday I was a little upset because I missed it. I ended up my screen froze. It was just a lot. It was just a couple different things. I woke up really happy yesterday, like excited to get things going, because I felt like there were a lot of setups yesterday. It just wasn't meant for me, and I just take that for what it is. It just wasn't my day. It is what it is. I know I had a small green trade on. Yeah, because yesterday in the afternoon, I didn't give up. I took Apple long and UVXY into this morning, and, so all in all, it was okay. But, sometimes those days happen, and there's nothing you can do about it. We just got to keep pushing. And watching ARM. That was a big one. Like Baba today, I'm not upset about it because I was able to take profits on UVXY. But if I wasn't able to take profits on UVXY, and if I didn't really get that Apple long yesterday, I'd probably be upset that I wasn't in Baba and that I didn't put that trade on, right? I'd probably, I'd still be okay because I don't know. I can't say this or that, right? I was able to, my account is up. I made money today. I did my job. I set myself up yesterday for success today, and I'm going to have a good day today, and I wish you guys the same. So, could it be different? It could. It could very well be different. So, let's see here. And if you don't understand why I went long UVXY, that is because if the market goes down, it goes up. Apple long, if the market goes up, chances are Apple goes up. It was a relatively strong stock on the day. In particular, on the daily chart, long term, it's weak, right? It's on its lows. It's not up at its highs. It's sitting at lows. But on the day, everything was red, closing red. Apple was green, right? The markets were red. Apple was green. Same for Tesla. So I would keep a watch on Tesla and Apple and how they trade together. I would just keep an eye on it because it feels like they're trying to start doing the same thing oddly. And I know Tesla was there for a little bit. I wouldn't say you could hedge it, but Tesla was literally just doing whatever the market did. Tesla was just doing the opposite for no reason. But yeah, give me a minute. I'll be right back. We'll see. We'll see what we can get into here at lunchtime. I'll probably start doing some math and a couple other things, and then we'll see what the afternoon brings us. We still have Fed minutes. Today. So I will say this: we have to pay attention for that balance sheet runoff. Nobody's talking about that. Powell just mentioned last Fed meeting that they're done with balance sheet runoff. So that means whatever expires is getting invested back into the markets because they don't want to have a liquidity issue, and they're being what is that word? I just can't think of it right now, but they're helping the markets out. You guys know that word. You've heard the word. I just can't think of it right now, but they are so yeah, they're damn it. I can't think of the word. I want to say the word so bad, but I can't think of it. I'll be right back and use the restroom. Thank you guys. And girls. If there's any girls here. So I'm gonna look at these scanners, see what we have going on. As far as wait. Hold on here. Give me 1 second. Let me see what we got. Okay, so Tesla trying to get a bounce here. It's trying to level off. I still don't have trust in it. Make sure that I'm on Tesla. That's one thing this morning I was worried about. I'm looking. I was doing something and it was not the same as like I was looking at a ticker that I thought I was looking at. Like I was wanting to look at Taiwan Semiconductors and I had Tesla up. So make sure you're always looking at it. It can get a little deceiving there. All right, so we'll look to see here. Let Tesla consolidate at the 20-day moving average. And, you know, technically right now on the daily chart, this is a break through the 20-day and a pullback and hold of the 20-day if we can close above it. So what does that mean for tomorrow and going into Friday? Can Tesla find some type of juice here? And I think we just need time. Again, my whole thesis with Tesla is I think it goes higher as far as a week to 2 week outlook. But wait, hold on, because like I don't know. It's sending me mixed signals. I don't know if it needs to pull back to this gap down here to rally, but then it's not holding the 20-day. We'll see. You know, if it's holding the 20-day, I'm going to keep my thesis to the long side. Longer term, longer term out. You know, this daily chart, I don't know. Looking at the daily chart, it's like, what is that, 180? We've already retested that. You know, it just feels like there's a reason why we're not getting the volume and everything. I don't know. We'll see what she does. That's all. I'm going to wait. I'm going to let her show me what she wants to do. Maybe it just needs more time. Maybe it needs to pull back, consolidate more, and then start to head higher. Maybe that's what the charts are saying. That would make more sense. Reddit finally broke 45. Looks like it's putting in a double top here. And 45, that would be resistance. Nice little level to get short at, but it's sold off already. You know, it's hard to get short when everything is already down on the lows. So, and if it's not going higher, like I would like to catch these bounces. It's just not giving it to us. You know, maybe we look at semiconductors and that's where we get the bounce. TSM. So yeah, real quick, I'm gonna look at small caps and see what we have on the scanners and see if we can't come up, see if I can't come up with something for the afternoon. If you guys have questions, throw it down below. Hit the like button, subscribe. I love you guys, appreciate it. Let's finish the day out strong. We still have Fed minutes, so we're not giving up. And that's what we'll see right now. Maybe liquidity is drying up and volume's drying up because Fed minutes are in about 3 hours.
Over the last few weeks here, you can see ETF was trading down around that 91, 92 level. Strong rally up here into the, well, just shy of 112, kind of holding on to this area here, but pretty well defined. We're talking bottom left to top right here, and for the most part, kind of just holding on to this range here. I don't think the bulls wanted to see us necessarily take out that 107 level, but still holding up above this key area. What's this, around 102, 103, we'll call it. Let's step back and add a little time onto this chart so you can see why I'm giving a benefit of the doubt to the bulls here. In this instance, another trend up here, but we've added quite a bit of time onto this, going all the way back to November of 2022. ETF was trading down around 56. You can see a few well-defined areas of consolidation that formed on the way up, and then you can also see a couple key tests of areas that the bulls wanted to see hold, and they did. Again, even recently when we retested the August highs, summer highs from last year into the beginning of this year around that $90 level, unable to see that area get taken out, establish balance around 95. We're talking about a vertical move up, more sideways than not as of recent. Yeah, I'll give you that, but I think a balance around 108 is very healthy.
I'm watching TSM right here, guys.
In terms of continuation.
I'll let you guys know if I go long or short. It looks like it wants to set up for see, it's underneath the 90 MA now. I don't know if it's going to hold VWAP. We'll see. I'm not sure if it holds. I'm going to give it a minute. If it consolidates. Again, this is going to be hard. I was saying this morning, if you're used to volatility, this one might be a hard one to trade because it's like it could be like watching paint dry. Okay, it could be. I don't know. I haven't traded TSM in years. So we know we got some sellers up there at 148.50. So let's see if we try to rally, put in a lower high. Not that this thing's going to break down and sell off, but if you start getting an increase in volume here going into lunchtime, let's see if we can get a small little rally going into lunch. I would look for, man, that's another rejection up there. So that's a gap fill. You know, I would look for like 149.50. That's what I'd be looking for on TSM. Like 149.50. This area right there. It's like 150, 149.50. So I don't think it's going to do that like from now until lunch, but I'm going to be honest. I want to see it sell off, but it's very strong. I want, if we can't hold here, I'm going to look to get short. It's just, does it give us the follow through? It doesn't. I don't think it's shortable right now. So if it rallies, maybe we look for a pullback. It's just my opinion. It's a nice setup though. So this is on watch. When I make a move and I come up with something, you know, I'll come on the mic and let you guys know. But right now, it's just I have it on watch.
Time highs, as Ben is going to show you here momentarily. But in Google, what I do see is going to be facing some very serious competition. I mean, there is, again, most of major tech is going to have to face the fact that they can be disrupted. There's a large moat, everybody says, around Google. Think again. I think AI is actually going to eat into their share in search, and it's going to have some negative implications moving forward. We might be feeling those implications as close to this earnings quarter. In light of that, I'm going all the way out, in this case, about 100 days to the July 19th expiration, because again, to me, it's less about the technicals. It's much more about eating into their search business. So July 19th, I'm going to go all the way out. I'm going to buy the 145 puts. I'm going to sell the 135 puts. So it's a $10 widespread for a $2.20 debit.
Yeah, and yesterday we were hearing more about their chips and such. And by the way, I'm neither bullish nor bearish. I wait and see what you guys say, the pros, Don. Ben, let's see what he says about the technicals on the chart. Ben Lichtenstein.
Yeah, let's dive into it in very similar fashion here. We can kind of work our way up from a 5-minute time frame all the way into the bigger picture, and it looks to me like the bulls are in charge here on this one as well. I'm going to have to push back on some of that bearishness here also. Much like I did with XHB. Take a look here. Again, another indication of how the most recent trend is very easily identifiable and to the upside. Yeah, we're kind of pulling back here a bit, back below 155, but kind of like that broader market here today. It saw the initial reaction of the news, and it still is yet to open up the door and really see follow through at this point. So I think in many ways
that's exactly what I was saying.
An indication that the bulls are still in charge, but here you can see it pretty well defined. We're talking bottom left corner all the way up to the top right corner example, right? Zoom was a top left, bottom right, trend lower. XHB and both Google have, you can see easily identifiable bullish patterns playing out here. This is just a 5-minute time frame, though, and just to look at the last few days, so let's step back, right, and then add a little time onto this chart. In fact, quite a bit, going all the way back to May.
We could see Google reject
last year.
157.
You can see well-defined. Again, simply put, migration value to the upside.
I gotta change
Key tests of areas that held, right? 122, if you remember, in that decline that we saw with the broader market October of last year. Area balance forms around 130. High conviction trade to the upside, a breakout that gets accepted at a new upper level, 145. And look what's happening here right now as we speak. I mean, we're basically attempting to break out to the upside right now, taking out those highs that we saw earlier this year up around 155. Don mentioned we're at all-time highs. That's why I'm a little bit skeptical of this kind of broader market, skies falling type scenario amidst this higher CPI number today, Nicole, because again, with you've got names like NVIDIA, which are, still positive here. Well, last I looked were. And I think when we see a broader market sell-off, it's going to be across the board. There's going to be no question about it. Google still hanging in there. Look at this. Down about 1% on the day, but look at this year to date. We're talking up around 11%. And as Don mentioned, holding up near these all-time highs. RSI somewhat limited in terms of participation, but still above the 50, still above the 200. Again, I don't think the sky is falling as long as Google's holding above its 50-day moving average. If there's a broader base market sell-off here, you'd see it reflected in shares of stocks like this.
Thank you for all of that. When we look at Google, I know you talk about the AI race and really feel that maybe Google won't be on top at the end, Don, right?
That's exactly what I'm looking at right now. Look, every single day now, we're all probably logging into OpenAI. Somewhat of the best $20 a month I think I've ever spent is OpenAI and Chat, GPT-4. But I'm starting to use it for search, and I think a lot of people are as well. I don't feel like I need to get sold a full page of products before actually looking something up on Google. Their time has come and gone, and again, that moat is really getting quite shallow around Google.
Okay.
I was born on the south side of Chicago. It has been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
I wonder if this is about to go higher. CRM, that level right there. I can look at it as a rejection, but I can look at it as a rejection, but a hold of that previous high here on CRM. So I would watch this.
Schwab Network,
Wave.
available
Let's look at it.
anytime, anywhere, on any device.
Let me pull up the. I have the scanners up.
Binge
Just
watch
have to
the
give me
market
1
with the
second.
Schwab Network.
Oh, nice. Yeah, I feel like I don't want to ruin
Get
my.
each and
I
every
just don't want to
angle,
ruin my
the
day.
whole picture, everything comes
Man, this thing
full
is a
circle on
nice
Trading
uptrend. The
360.
volume needs to be a
Catch
little
us
bit
right
heavier.
Here at the New York Stock Exchange
But
on
you got a
Trading
nice scalp there.
360,
Yeah.
Only on Schwab Network. Download the Schwab Network app.
You could
join in on the
start to
latest
see a
market
little
trends.
flag here on the 15-minute.
Available anytime, anywhere, on any device for free. Schwab Network.
I remember when I first started flying, and we would experience turbulence.
This is funny.
I would watch.
I
the
was
flight
thinking
attendants.
about this yesterday.
They're not nervous, then I'm not. Gonna be
And I'm like, yo, let me ask chat.
Financially,
Let me
I'm
ask
the
the
flight
chat.
attendant in that situation.
And I'm gonna ask you guys, what's
The
one
real-
thing that you would love to be able to do, whether it's for work, anything? Me, I would like to be a pilot. So I had open heart surgery. My left lung collapsed. Just a mess, right? I tried to go to the military. I tried to go into the Marines. both the Navy, and it just wouldn't accept me. It just was. It is what it is. I'm a threat, or not a threat, but I am a I'm a liability, I guess they say. Really fit growing up, and stuff like that. So I would like to be a pilot. I would love to learn how to fly. I love, that kind of stuff. So that's something I personally would like to do later in life if I had the opportunity. I want to hear from you guys. What is something you guys have always wanted to do or would like to do? I'm just kind of curious, and I thought about that yesterday. I'm like, yo, I want to know what they like. If they had an opportunity, if you had an opportunity to do something, whether it's be a pilot, maybe learn to weld, I don't know, maybe be a supercar driver, maybe IndyCar driver, anything. Maybe sky jump or whatever. I don't know. That's something feasible that you could do. It's not like it cost you an arm and a leg or anything. It's something you could do. So yeah, I just want to hear from you guys. What is something you guys would like to do or learn and do? Some things that interest you. Maybe play the guitar, anything. But me, I would love to have the opportunity to be able to be a pilot. Again, I did try to go to the service twice, and they just said, it's just not. You just can't, buddy. It is what it is.
It will affect the stock price and the free cash flow. They think the risk reward, however, at these levels is relatively balanced here. Now, take their price target from $270 to $260. They keep a buy rating. They admit that the deliveries were a bit light. They expected that. They think, however, different than some of the other analysts, they expect the story to improve as the year goes on. You look at Boeing, you look at the stock movement since the end of the year or the beginning of this year. Stock down 32% year to date. In the last 12 months, it's down about 17%. New 52-week lows hitting right today, Nicole. So more bad news for Boeing, but at least some analysts remain bullish, and they think the risks from here for the stock price right here relatively balanced, Nicole.
Yeah, Morgan Stanley with that equal weight. I know lowering the price target, like you said. And look, this move today, to your point with the selling, Boeing on track for the lowest close since November of 2022. That's tough. That's tough for shareholders. That's not what they were hoping for. Thank you so much. And then we'll have this hearing on April 17th, too. So that could be headline-driven for Boeing. Thank you, Kevin Hinks. It's time for a spotlight on the payment space, and a lot of buy ratings there. Paul Golding will tell us all about it, Senior U.S. Lifestyle and Payments Analyst at Macquarie U.S. Equity Research. Thank you so much for being with us. I know you have a lot of outperforms on the group, and we're looking at names like PayPal and Block and Visa and MasterCard. Before we get to the specifics of each of the companies, what's going to drive this payment space? How are you feeling about spending, the economy, the consumer, et cetera?
Yeah, thanks for having me on, Nicole. In terms of the space overall, this has been a space that's been under pressure since the post-pandemic era began, when we saw rates start to rise and multiples deflate. Spending in the U.S. has been a bit more subdued as of late.
So I told you guys a while ago, I thought that this is where we were, right here at this part,
those levels, but
right there,
we are seeing
33
at the, macro level
to 40, right, on the KRE. I thought that's where we were.
Networks, for example,
the
at about
pullback stage, and I still feel that way. And what's it feel like? Feels like we're starting
Q4, early Q1 period.
the pullback stage.
We do have outperforms
I feel
on this
like,
space as we think of the secular tailwinds
45.
around digital consumption and digital payment rails.
Nothing crazy, but like
a
pullback into like 45
card conversion from cash to
is what this chart would tell us that's
new ways of
that's
paying
going
via
on.
App or wearables.
Well,
and
actually,
also just
it would be
the,
like
proliferation of in-app
the
purchasing
low
on your
40s,
phone
40,
through,
4150.
an app,
Let's look
there
at it
through the app
exactly.
stores. So overall,
yeah,
we
42.
think that even if volumes
so that's where I would look
are
for.
a
And look, you have a
bit
gap
stable
here too.
At a more
You still have a
level than
gap
we
right
saw
there.
when there was big conversion
At
to
4150.
we think that the secular conversion to
Keep an eye on KRE,
digital
guys.
paying
See
and
if it
digital
don't take you
purchasing
back down
should
a little
help
bit
these
further. You got a
businesses.
nice increase in volume there.
So it's
maybe a
not
swing
that
trade.
consumers are going
If you
to
get a
be
bounce
spending
back,
so
like tomorrow bounce
frivolously.
back
That's
or
not
Friday.
it. In fact, you said spending has been
Get a
subdued
bounce back.
of late.
Maybe we look
It's
for the
more
short
about the
and
conversion
take this
of
trade
how
for
we
like 2 to
pay
3 months
and
at
using
least.
apps and using
This is a
digital
trade I would put on
options,
for at
using
least 2 to 3
wearables.
months.
So it's more about that story, it seems. Is that right?
That's right. It's more about how we're purchasing things and where we're purchasing things as opposed to how much we are purchasing. We saw a big pull forward in goods consumption during the pandemic because services were not something that we could necessarily engage in because of the pandemic. And then post-pandemic, we saw services see a boost and goods be a bit out of favor given that pull forward during the pandemic. But in aggregate, what we're seeing now is that we've kind of balanced out and worked through a lot of this. There's still some pent-up travel, as you and I have spoken about before, particularly in the value area with cruise or international, again, with cruise, which we cover. But in general, it's less about volumes in terms of our outperform thesis on these names. It's more about the method by which we consume.
There's the extension. So we're
Understood.
finding the weakness in,
You know, I guess
in the
at some
banking
point,
sector, in the regional
that's
banks.
going to go away. That's like when companies
So
do cost
IWM
cutting.
should be pulling
That's
back.
good in the beginning.
Yep, there it is.
But in the end, you still need people to come and buy the widgets, right? So yes, this may give a boost to the group, but in the end, you still need people to spend. And the economy moving and bustling to give this group a push. That being said, I know you have all outperforms and a lot of buy ratings. The Visa MasterCard story, you know, the old school stuff. Tell me a little bit about that. Certainly an international footprint and partnerships there. I see you have a 505 on MasterCard, on Visa, 290 price target. Tell me a little bit about why those may do well.
So they may seem as sort of old world names, but they're actually innovators at scale in our view, and they've been innovating as of late in areas like AI, for example. We actually recently wrote about Visa releasing a suite of products that are based on AI to combat increasingly intelligent and sophisticated fraud tools. So in other words, these are anti-fraud tools to combat increasingly sophisticated fraud attacks or fraud methods.
And like right now, the mic is off. I didn't have the chat on live chat, so my bad. But yeah, and that's a nice trade. MRIN, that looks like that's a really nice setup. Look at the volume you have here. All right, look at that volume we have. Let me go to charts, flex grid. Look at the volume. That's some really nice. You got 5 million shares traded there. Chances are this thing should. Let's pull up the daily chart. That's all we need to do. Go to the daily chart. Where are we going? Where are we going? You're past the 200 day, so you have nothing, in my opinion, except for levels to stop you. All right, that is a big tail right now, but if you you needed to make that support, I feel like. It feels like you needed to make 79 cents support on that breakthrough. Oh, man, that sucks. But that was a nice trade there, bro. That's a nice trade. Can it go higher? That's my question. Excuse me. Damn. That's my question. I mean, I'm going to be honest. I would like to see this thing get back up to $1.50. I'm going to say right now, $1.50. Will it? I don't know. I really don't think so. You know, can you get $1 out of it? Possibly. It wouldn't surprise me for $1.38 or whatever, $1.03. You get past $1, you should be able to test $1.50. But that's a nice scalp, man. That's a nice trade. I would watch this thing in the coming days because it has a lot of volume. There's a lot of volume in this name today. Huge increase in volume through the break of the high. What was the news yesterday? What happened? Our price. Oh, this is Price Smart. Okay, I saw this move this morning. Yeah, we're sharply today's pre-market earnings for second quarter. Let's see here. Getting a little tired. Sorry, my bad, guys. Just looking at the screen for so long and reading. So MRIN 76.1 to rose 76%. Announced upgrades to its Microsoft Corp advertising integration. It's enough to get it going. So, nice job, bro. Nice job. That's a nice setup, bro. That was a nice setup. That commercial gets me every time. That song. It just hits. The beat, everything. It just comes in slow and then boom, boom, boom. I don't know. I can't explain it. It just gets me every time. It gets me every time it comes on.
Out that Block is the one that's emphasizing that right now. PayPal's emphasizing the small and medium business marketplace in terms of penetrating that with its PayPal.
Yeah, I just think that I would have liked to have seen it hold that daily level though. That's the only downside I don't like on it. But if you get listen, if this thing has a low consolidation right up here, you know, above that pre-market high and whatnot, this thing could go higher, but I don't know. She's kind of giving you a sign right now that she's selling off. You know, consolidate right here, low volume, and then kind of just like, you know, it'll pull back, and then by like 1 o'clock, 1:30, 1:45, you can see it start to curl. 2 o'clock, and even if it doesn't do that, look for after hours. If it is just above this level here at 64 cents, it's got to be on your radar. That's just my opinion. Unless, like just now, how you're getting this volume really starting to come in there. You know, 64 cents is the level I'm looking for to go long. If as long as you don't get like right now, you're getting an increase in volume, that's it. That trade's over. That thing's done. Possibly. It's still above VWAP, though. Keep that in mind. And that volume was not greater than the prior bounce back off of that 61 level. So, daily chart. Daily chart, I wish it would have held, I don't know what it was, right here. Right here. You did not hold it. Right there. That's a flat top resistance. You broke above it on an increase in volume. It did not hold 79 cents. That's it. That's a short. So you should start seeing shorts pile in. So, keep that in mind. That right there. Shorts piled in. If this does not break VWAP by 1:30, 2 o'clock, look for this thing to extend higher into the end of the day. Because you're going to have people that just took this position because it did not hold that 79 cent level. So they're like, okay, I'm taking it short. That's it. Back down to the 200-day. Well, if buyers keep this thing up and they hold it above VWAP, VWAP holds, and you just consolidate above yesterday's high, that's telling you buyers are not afraid of that level. Sellers do not have enough selling pressure to break that high. So look for it to try to extend if it. But look, it's selling off. So. Time in sales is right there too. Look, 4,000 shares. You know, the most I've seen right now to the buy side is 2,000. I'm going to still keep this on my radar because I feel like look, 11,000 shares sold to the downside. That was a 12,000. Look, 13,000 to the buy. Look, they're going to try to hold this thing up right now. They're going to try and hold it up. I'm still seeing bigger volume. Now, look at the buyers come in. That's 5,000 shares. Shit, was that a 49,000 sell? Hold on. Did it just get halted? I think it just got halted. Yeah, things were getting crazy there. No, it didn't get halted yet. She's still going. Uh-oh. Oh, wait, that's because I had the thing moved. Oh, no. Shit, that was my fault. Damn it. Yeah, now I can't speak on it. But it is fun to watch this. There's a 25,000 buy order. 25,000. So far, that's the biggest order I've seen. Of course, I just missed like some time there. 5. 14,000. 2,000 to the sell. Shit, I just missed it. So they're coming in heavy on this buy side, but it's just not showing it. Maybe that's, you know what? That's short covering, obviously, or something, I don't know. But to come in so heavy on the buy side there, that's what I would assume. And that's exactly what I'm talking about, right? They just got a really nice move from 95 cents back down to 67 cents. If you did not take profit on that short, on the break of that level, you know, play on YouTube, no. Yeah, I'm not crying. Yeah. I'm not sure. Great volume for sure. I don't know, but this is fun to watch here. This is fun to watch. Oh. By hit the bid. Yeah, all right. Play it on YouTube. Will I get copyrighted? I was like, yeah, I got thrown off there. I'm like, wait. Just like yesterday, I had to make sure that, you know what I mean, I don't say anything to offend anybody and make them comment. At least say hi first before you yell at me and get mad at me. At least say hello. How are you today? Something. I'm just playing. So let's do it. It's good play. Okay. Let's see here. Am I walking myself into something? It's okay. Let's see here. No shit. I hit the bid. That's hilarious. Stop it. Somebody had to do it. Let's do it.
Your confidence fading. A margin call's waiting. Your confidence fading. A margin call's waiting. Your confidence fading.
If it's too loud, let me know.
Your confidence fading.
I don't need to blow your guys' speakers up.
Put that coffee down.
Nah, fam.
Your confidence fading. There's no crying and trading. Margin calls waiting.
Yo, I'm so glad you brought this up.
Your confidence fading. No crying and trading.
I'm gonna think about this.
Some cash, get a pat to back. It seems so easy when you smoke that ass crack. Then you lost 10 G's like you got a disease. Bitch, shut the fuck up. There's no crying and trading. Your confidence fading. No crying and trading. Margin calls waiting. There's no crying and trading. Your confidence fading. No crying and trading. Now you're down on the day you should have walked away. Staring at the screen as you start to
Bro, this
break.
beat goes hard. They did a really good job.
You wanna hurt yourself? Just remember this song. There's no crying and trading. Your confidence fading.
Bro, it really is.
No
Though.
crying and
They did a
trading.
really good job on this.
A margin calls waiting.
They didn't just
There's no crying and
half-ass
trading. Your confidence fading.
I wonder if 580 still at the NASDAQ. Dude.
Oops, there's the bell. You're still living in hell. What the fuck I do? What didn't I sell? It turned so bad, so fast, so quick. You need to raise some cash. I'ma suck my dick. There's no crying and trading. Your confidence fading. No crying and trading. Margin calls waiting. There's no No crying in
I'm
the
surprised I actually had a good day. I didn't even want to watch one today. I just got up, hopped right on. That was good. That was good. That's hilarious, bro. Oh my god. I did not know about this. That's crazy. That's wild. That's it. That's the anthem. That's the anthem right there. That's the anthem. There's no crying in training. Oh man, all the things that I could relate that to with GME. Oh my goodness. Oh man. That should be the anthem for Reddit. For sure. It was. It was nice. I wonder who made it. Let's go. I'm going to actually bring that back up. I'm going to go throw it on Twitter real quick. Oh my god, this keyboard's killing me. Get the wrench. Hey. It's so funny. Oh, it should have shown the thing. Oh, Carl, just stop. Yo, Carl was on a rampage last night, y'all. My boy was hitting that bottle. You could tell. Yo, he was slobbing on my guy. I'm not making it political, but I want y'all to see something. All right, so look, see, we're sober. It's during the day. We're not kicking back the booze, right? Look. Oh, look. Well, somebody, he must still be drunk. Because I'm going to tell you right now, my man was just slobbing on the cob. I'm going to just say that. All right, look, just can't leave him alone. Oh my gosh. My boy was going ham. And he doesn't say anything about the chart for so I posted the small business index, and it looks like, as he's talking about this chart here for you know, that SPAC that Trump has, like, of course it's going to go down, right? Of course it is. Okay, I think everybody that has common sense knows that, you know, that business isn't going to generate much revenue. Okay, it may generate some, but it looks exactly like this. Look at this chart. I swear to God, I'm not making this shit political, but it's actually really funny. It's actually really funny. I don't know where it's at. Right here, look. Look at this. Look. It literally looks the same from when he took office, right? Look. All-time low. 2020, you had a spike when we got out of COVID, and all small business optimism it's getting ready. I think it's getting ready to bounce, hit this COVID low here, and then test new lows. That's not good. That is not only a downtrend, but it's about to bounce and possibly go lower off of these lows here, off of that 90 level. You could see this thing around 83 to 85, and that would be a low since, I don't know, 80s. I don't know, 2008 might be the last time you saw that level. So I said, funny. Him and Biden got the same chart. I don't know. But anyway, I will. I most certainly will. Yo, that shit was crazy though, bro. That shit was crazy. Because the point was yesterday, bro, I'm like, wait. The only time I hear from you is when I got to say something provocative to get you to say something, to comment, you know. At least engage, say hello. What you looking at today? Something. You know, hey, you know, I think Google's setting up pretty nice. You might want to look at it. Good luck today, chat. You know, good luck, everybody. Something. Nope, we just got to bring out the negative. That's all good. It's all good. I don't know. I've been having a great couple of weeks, man. For real, for real. I've been doing. I'm just really proud of myself for turning it around because I couldn't put a finger on what it was at first, but I feel like I found it. You know, the analysis in the morning. And damn, she's so sexy. The analysis has been spot on, and I'm just really thankful for that. We'll go through the news in a second. I'm going to go use the restroom real quick. I'll turn this on. We have a couple. So we're coming into 12 o'clock. We'll turn on CNBC with the panel, see who we have today on the panel. We'll hear from them. I'll go through the scanners. We'll go through the news. I might go wash my face and stuff like that. Might brush. I don't know. I'll probably do that after the market. We'll see. But yeah. So. Oh, the yesterday beefcake, I think it was. Like, I don't know. He just brought up yesterday, about the only thing I said is that I personally feel like LeBron James is fake at times. He shows signs of just being fake. That's it. Great basketball player. I'm not gonna give him my I don't hate the guy. They construed that for taking it, but the point is I only hear from you if I have to say something provocative. I don't get a high, or not even just me, but the chat. Just say, hey, what's up, guys? I'm looking at this today. Gold still rallying something. We don't hear nothing, and it's like, bang, he said this. He struck a nerve. I can't help. I gotta comment now. So is that what I gotta do? And look, this thing's back up over VWAP, man. I knew it. Keep an eye on it. I'm doing great today, Matt. How are you, buddy? I'm doing good. I gotta be, I do gotta moderate myself sometimes, but if you guys know Michael Gay, right, on Twitter, so they say things on purpose to get people to comment, like the market's crashing, this, that, the third. They don't position themselves that way. I mean, see right here, this guy right here, you guys can see, right? Look, 786. See, look, every day, the motherfucking rug pull is coming in everything, right? 77 comments, 74 retweets, blah, 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 53,000 views. So they have to stay, and that continues them to say stupid stuff, and they don't truly feel that way. And I'm like, is that what I got to do? Is that what I got to start doing to be able to, get some comments, to get some views, to say something provocative, to get people to comment, this, that, the third? And I thought about that yesterday, and I'm like, it does. It can get some people to comment, and, just that interaction is going to bring others. And I see why they do it. Just like Steve Van Meter, he will scream every day that the market is crash, the big crash is coming, the world's coming to an end. He's not positioned for that. In the same video, he will talk about going long things. He says it because people will go on there and be like, Steve, you've been saying this for 3 years and it hasn't done nothing. And he's like, yeah, I know. You've been commenting the same comment for 3 years. So I'm just going to keep doing it because you keep commenting that it's not happening. And that is the point, right? The point is to get the engagement, to get the views. So it's funny, man. But yeah, Matt, I am great today. I'm doing very well. I hope you're doing good. I am doing well for a couple of reasons. I woke up today. Yesterday, we don't live in the past. We learn from the past, right? My analysis has been pretty spot on. I've been banging these entries out very well. The trade yesterday worked out for us with the Apple long, and I said yesterday, take profits, okay? We had that rally. Okay, we rally. We take those UVXY calls. I market ordered into them. I think it was 11 cents, 12 cents, and then we sold them today just under $20, 18 cents, 17.50, something like that, with commissions. So that trade worked out, right? So that was the point, was again to be able to how do we put on a position that no matter what happens, as long as we can get an up move and or down move, we should be profitable. And the reason we were profitable, at least the reason I was, is because I'm going to tell you right now, if I did not take that Apple call, like if I did not take profits, you know, I may have been like very little bit green. But because I took the percentage gain on that rally off of yesterday, that really solidified with the move down. The only way that that would have like not necessarily hurt us is that if the market didn't move at all. But we had time, right? The UVXY doesn't expire until Friday, and the Apple call didn't expire until Friday. So that also gave us the time. You know, instead of paying, like, look, we paid $100, or no, we paid 30 cents, right? I think we paid 30 cents for an Apple call versus paying $1 for a daily on the SPY that was probably down 50% the next day, right? So we paid a cheaper price, less volatility. You know, we got the move, we took some profits, but the point was, how do we get a little bit of time, and how do we position ourselves with the amount to be able to capitalize, right? And we take the reason I did the UVXY for the downside, I bought calls on UVXY, is because I can put half of the position on, half of what I spent for the Apple, and I'm going to be well above, right? If the market pulls back and Apple pulls back 1%, Apple pulls back 1% roughly, let's just say, UVXY is going to be up 2%, right? So that's how we put our hedges. That's how I put them. It worked. My account's up today again. So pretty happy, pretty happy. So I will always say this, guys, Mandy, we got to take profits. Yeah, I don't really watch it either. I don't know. Yeah, I'm not even talking about it. It's all good. It was just a record-setting year, and that's kind of all I was saying, and I just was saying that it doesn't surprise me. It didn't surprise me that that was the case. We looked up the numbers. The numbers were true. But either way, let's do this. I'm going to use the bathroom. I'll put on CNBC, and we will get ready. Remember, we have Fed minutes that are coming up. Let's look to see where the SPY and everything is. And what we'll do is I will... so the SPY is still below VWAP. Let me look at the scanner real quick. Make sure we haven't had any news. That's what I'm going to do right now. I just want to say, you know, I hope you guys are doing well. If you guys have any questions, you know, anybody that's new out there, the chat doesn't bite. I don't bite. If you have questions, if you want to learn how to do this, if you want to learn how to make some money consistently and at least stop losing money trading options in particular, if you just can't seem to get ahead, get on here. I'm going to help you out. All right. That's all I do. Sometimes today I bought some Apple shares with some of the profits from yesterday. You know, you got to buy some of these names while they're down, even though I still think that it's a little bit high. You know, got to just slowly nibble when it gives it to you. Yeah, that's it. That's all. If you have questions, throw them in the chat. If there's anything I can do personally, hit me up.
Change it for my investment case. I'm strictly bottoms up fundamental. Of course, I pay attention to rates because that will influence, macro will influence my bottoms up fundamental investing. But to me, this puts any rate cut this year in doubt because I anticipate tomorrow's PPI being stronger than what the market's looking for, number one. And that's not even incorporating the run we've seen in commodities. So if you go out to the...
Yeah, man. I just wanted to do that yesterday to kind of like show people some of the things that some of the strategies you can put on, but more importantly, why. Why did I go with Apple instead of like the SPY? Like instead of spending $100 for a daily, the thing is too, even though those dailies were up 100% by the end of the day, that's still a lot of risk. That's still a lot of risk because it could have easily came down and you could have been down 20% already. But yeah, I thought at worst case, in my opinion, if the markets went higher, cool. There was a lot of relative strength with Apple. It was green on the day. The markets were red. It felt like it was trying to turn around, but it was having a rough time. And you could tell today it's down. But if, the markets would have rallied, maybe it would have held highs. I don't know. Maybe there would have been a downgrade. I don't know. You know, maybe it was destined that no matter what, Apple was going to be down today. But at worst case, I thought we would be about flat because we have time and we don't have Theta that's just ready to just, take our money. So, and I think people do that. They go in doing something and they really don't fully understand what they're doing. Like whether it's the right option for them, how do they know it's the right option or the wrong option? And just understanding, like with Tesla today, I'm like, this is why you got to be careful buying Tesla long on options, especially weeklies, because this low here was 60 cents. You rally, it pulls back this little bit here, this higher low, and then it was that low right there, right? So this low here, that higher low, that second higher low, that was 40 cents. So how is this, that low there 60 cents and then this here 40? That was the entry, and that's why you got this volume and that increase in that bar there, because we were probably testing VWAP, that initial morning low, and the options were cheaper than that low. And that was all a signal to just run it to VWAP, to bring in some longs, because the risk to reward was there. So somebody who tried to get long, let's just say, they would be beside themselves wondering why in 2 candles they just got in on the low for 60 cents. It's pulled back half of the move up and they're down 20%. 60 cents to 40 cents. It was like 48. Okay, it wasn't 40. It was like 48. But still, to be, to go from like 60 cents to be down to like 48 cents, whatever that percentage is, that's a big percentage, right? Let's just say $1,000 on the long side. You went long there, and for some reason, I don't know how you couldn't, but if somebody got long here, and even on this, even at the top of the candle, but went long and did not take profit in front of VWAP, like, they deserve to lose money. Like, our job is not to catch the whole move, unless that's your plan, right? Unless you have contracts that are 2, 3, 4 months out, and you're trying to collect the move, all right? Here, right now, that wasn't the plan for us. We want to see if we hold the 20-day moving average. Let's just see if the markets bounce back to, like, the low of yesterday, and see if Tesla kind of follows along and just gives us that lower high for the long-term trend, right? Because I still think Tesla is due back at like 164, 167, and then, maybe consolidate, then think about the rally to the 50-day. That's just my thought. I think this thing needs more time to the upside. Again, I said this morning, 2 weeks, with 2 week time span, a week, I would say a week. A week, my outlook would be down to like 160, 165, 167, pull back. Longer term on a daily chart, whether it's a month, 2 months, maybe it's earnings that give them a raise. Maybe they come out and say some things that wasn't expected, and that causes a rally, and we just go on a 2 week rampage to the upside. So that's why it's important to know and how to learn how to manage your risk and option. That's why people lose money because of this, right? That was the point. Was, one person buys it here for 60 cents and then the next person's buying it higher for cheaper. It's why it's important to understand the delta, and you get that initial move, just lock a quarter, if not a half in, and then you can it makes it easier to sit in the trade too, right? Because if it pulls back and it gets back to even just break even, guess what? You're still green on a quarter, if not half of the position. You're still green on a losing trade. Well, it wasn't a losing trade. It was a break-even trade that you still profited off of. Okay? Keep the math on your side. Just keep money coming in. I don't care how small it is, how big it is, how not small or not big it is. Just pay yourself. Like, if you take that trade on Apple yesterday, I specifically said it. As soon as we entered, like, we literally entered this thing to a T yesterday, and we couldn't have taken this any better. And I came on the mic and I said it. I said, if you're not thinking about taking profit, let alone taking profit up through because we got that extension through VWAP, and I'm like, yo, guys, I have to take profit. I cannot let Apple just sit here and just rally and rip through VWAP, because you're really going to get paid on that candle. That candle is just, boom, sending those options up, right? You know, so that is selling into strength. And, you know, if you didn't and you just held on to it and never sold anything, you could have sold more at the end. But if you didn't sell Apple yesterday, it would have been maybe not hard to make money, but you wouldn't have barely made any money today when you woke up when that bell rang. When all you had to do is hit the sell button, take half the position off yesterday on that rip and rally because we caught it at the low, and then, you know, we entered on that rally is when we entered it. And I specifically said the other part to this is knowing how to put those positions on, because people will try to hedge. They don't know that they need to be buying lows, right? And then if they want to get short, they need to be selling at highs. So you don't put it on at the same time. All right, you get that rally. We thought we would. Bang, we take profits. We put on UVXY at the highs. Let's do it. Let's see what tomorrow brings. We're good. We got a little bit of profit today. We got half the Apple position. We got a full UVXY position. If the market goes higher, so be it. We're in Apple. If it goes, we have, you know, half of the money is in UVXY. You know, we're not going to get burned. Put it that way. We're not going to get burned. That's how we continuously make money in the markets. That's our job. Like finding a process that is repeatable. Also, that's the other part to this. Finding a process that is repeatable. And in my opinion, or not my opinion, but what I do is like the only process I think is repeatable is, you know what I mean, kind of just, you know, time on the monitor, learning how to really read charts and everything. And, you know, sometimes things are going to happen that are unexpected and you can't help that. But what you can help is, you know, selling, not getting murdered, right? If you know, if you take profits on a move and you've even only taken a quarter, then all of a sudden it sells off on you. Don't come crying to us when you didn't take a piece off and now you just let the whole position go to waste because you don't respect money. You know, I don't think any of you guys do that, but there are people out there and kids or younger people that don't respect money. You know, but again, that's the point of this live stream that I started is maybe we can link up with some companies. I can bring some of you guys on. We can really take this thing to the next level. Maybe we do, maybe we don't, but guess what? At least we give it a shot. And that speaks volumes to anybody out there that wants to do anything. At least try. Give it a try. It is, at least you tried. The majority of people aren't trying. All right? So you are, you know, 2 steps ahead of everyone else. You're 2 steps ahead of most people. You know, at least you're doing something. Whether it works or doesn't work, one of them will out of the 10. You have 10 ideas. You start trying the 10 ideas. Not all at once, obviously. But, you know, you guys know what I'm saying.
We own Arch Capital in the ETF. And then lastly, if rates remain elevated, private
I like Joe Terranova. I like Joe Terranova.
Because lending standards for public credit will be tight.
He has a friend in Miami.
That nature that takes you to Apollo Management.
We could go into it another day,
Brown
but he cracks me up. He's a little short, bald guy. He looks like he'd be from Brooklyn.
You could go in and own.
He lives in Miami now, but his friend actually created they created this removable. So you guys know how there's like flooding and stuff like that. He created this like plastic piece that goes on the sliding doors, because when water comes into the sliding glass doors, like how you have those rivets that it slides on, well, that's where the water can get in on floods. Well, he created this thing, and I'll show you guys. His friend created it. They're making some good money, and I think for every one that's bought, they give away one for free, something like that. They give back. And he runs some type of trading thing. When I get back, let me use the restroom. Let me get a water, snack. Give me a second, and we'll go watch it because it's cool. It's really cool.
So to me, this is, I don't know if it's cautionary that people the proper amount of attention. I could see those stocks, Meta being flat.
Maybe because they don't think that the story's changed.
Right, and I think that, again, it goes back to your fundamentals. If you're basing
I'm not sure if anybody
your buying
watches
and your
the
portfolio
compound or
positioning
anything, but
on
that's what it was
rates
on. It was on there
coming
some months
down,
ago.
then I think you're making a
If
mistake.
anybody else seen that that video,
Let's just have. If I
or
ask
that
you the
podcast,
question,
I should
is the
say.
next move from the Fed a cut or a hike? How would you answer that question?
Next move from the Fed is no move.
No. Don't give me that nonsense.
No, that's not nonsense. It's factual.
The next move
Fed's
that
gonna
they make, that's not a move.
Not going to do anything.
Are they going to cut next or hike?
They're probably going to cut.
Okay, thank you. Jim Lebenthal.
Well, hold on, Scott. That's not the answer. The answer
It is the answer. I just asked you the question. Is it what's their next move?
You're out there saying 3 cuts. You had them saying 6 cuts. Now it's 3. It's probably going to go to 2. And if you're basing your case on that, then you're wrong.
No, you're not. Because
so the next move is no move.
If you knew that the first move of the Fed at the beginning of this hiking cycle was going to be a hike, you'd be negative, like you were.
What if the next move?
Like you were.
What if the next move is not this year, but next year? What if it's not this summer, but it's
if you want to
last
start
Fed
pushing the
meeting of the year?
timeline back that far, then obviously that's a
Exactly,
risk.
and that's my point.
Yes, but if you still know that the trend has changed, that you're at the end of a hiking cycle.
There's Taiwan.
and the
Guys, keep it
beginning
on your
of a
radar.
cutting
I think
cycle,
Taiwan
even if
Semiconductor
it's
goes
pushed
lower. It has strength. Like, don't sink your teeth in, like, you know. But if the market continues to pull back, I like Taiwan Semiconductors to pull back. Like right now, I think it's still got some room. I think we do get to 145. Very feasible. See if you get a bounce back to VWAP. If you get the bounce back to VWAP, or like 146.50, 146.66, 146.65. That area right there is where I would look to try to take this short. I might try it. Like right in this area, right there. That's where I want to look to see if we can get a rejection. All right. It may not get up there, though. It may not get up there. It might. I don't know. I think she's going to pull back for us. I think so. Fuck. I did not mean to do that.
It's all about profit margin expansion. It's all about the fact that we went through an earnings recession. We're coming out of the earnings recession. At some point, inevitably, hopefully, the Russell 2000 will join the S&P and the NASDAQ. And coming out of that earnings recession, the moment we know is not now. And I go back to where I began the show. For the areas of the market that have experienced pain in 2024, today did not alleviate any of that pain. In fact, it worsened it. So show me a regional bank, and I will look the other way.
But I want to know, like, okay, what about the sectors that have experienced no pain but the most gain since, say, March 1st?
Like
on the idea you're going to have broadening and lower rates. Materials, Joe said you have to own those.
Yes.
Well, those are up 5% since the beginning of March. Utilities, they're up 5% since the beginning of March. The utilities, why would you want to own utilities now if you think rates are going to remain sticky higher?
Right. So you would not, right? So utilities, there's a few like NextAir, et cetera, but they're in general low growth. They're rate sensitive. And so there's a basket of rate sensitive sectors that you can just, the algos and the hedge funds will just short and not own. And so you're fighting against that tidal wave of those hedge funds and algos in those sectors. And so that's why I said at the beginning, what you don't own to me is easier to figure out than what you do want to own. And so I think that, to your point, commodities, you want to own that. And also like on energy.
I think I'm going to try and put it
while
on,
they've
guys.
done good year to date.
I think I'm going to try and put this
on a 1-year
on.
number, they're still lagging. And so if you think
Make
about,
sure
like you guys rebalance
if you're
quarterly, right,
seeing
from
this,
momentum, but a lot of the big factor-based momentum models only.
For whatever reason, if anybody sees this later on, make sure the stream is all the way live. Like, slide the thing forward. Just make sure that the stream is live and that it's not, behind an hour, a half hour like yesterday. It felt like that could have happened to somebody. Just so you know when I enter, you should be able to look at my charts and see, oh, wait, mine don't look like that. Like, I'm way behind. He's way ahead of me. I need to fast forward the stream. All right, so this is a break above here. We're coming into the area right now. It's like, do we do it? I think, I want to. Man, I'm so frustrated that I didn't take Baba today. Let's be. I think we gotta. I think we can do it. I think this is about to be game one, guys. Let me go through the options real quick. I haven't done that. Just give me 1 second. You know, that's up to you guys. If you guys want to take that rejection up here, keep your stops tight. You know, this is not something that I would look to be getting into, like, look for a home run, okay? Looking for 145, right? It's about $1.50. Just looking for a move back down. You know, maybe we do test 144, but we'll see. Just let me look at these. First I gotta look at the options and make sure it's even worth it, because it may not be worth it. They may not. You know, they may look at the Greeks and it not pay.
Listen, so let me succinctly say this. I said earlier, folks, the market is not in a fatal condition, but it's reacting to marginal data today that we got, which is on the negative. So there's going to be some profit taking, and we're seeing it, and some names that were up earlier are down now.
Both Steves are right, Leisman and Weiss, in that obviously the risks are elevated the longer inflation remains elevated.
If you want to scare me.
Yeah, those 160 puts just keep creeping up on Tesla. That's all. That's all I wanted to look at.
Rethink to what degree you get scared if you think that rates are going to remain at this level at least for a longer period of time than you thought. You were expecting at least some rate cuts, maybe one. But if it is, in fact, the Weissian none or pushed into 2025, you can't tell me you don't need to rethink anything. You can't have it both ways.
On the margins. Yes, that's what I'm saying. And that's why I woke up this morning. I was ready to buy. New data came in. I changed my mind based on that new data. Now, to the
I felt the same way.
Scott, some stocks are going to labor under higher for longer interest rates, like discretionary spend, like airlines, autos, casinos, all those things. It's going to be harder for the consumer to spend if credit card rates stay where they are. But this is one piece of marginal data today. I already went through what the real earnings are doing for the average consumer. And as long as those weekly jobless claims continue to come in strong, by the way, Atlanta Fed GDP still at 2.4%, updated today. So it's not a fatal condition. It is a condition where today you just sit back, you be patient.
Bryn's not just sitting back and doing nothing. So you sold a stock, and it's AbbVie. Yep. And I want to do that before we go to break. Tell us why you sold it. I think you've owned this for a while, right?
Yeah, like close to 2 years. Close to 2 years.
Why was today the time to sell that?
So in November, I think it got to 132, 133. It was at 180. It was like, this year has been a wonderful year for AbbVie. They made two big acquisitions in the fourth quarter, close to $20 billion. The market loved that. And it went to 180. I sold it at 178. And I just felt like it had a really good run. And I'm glad I did. I think that this quarter, April 26th, their earnings come out. Earnings estimates are down 5.6% year over year. I do want to see also one of the reasons. It's a big company with a high market cap. I do want to see how they absorb these acquisitions. And so I just took my profits. Wonderful company, happy to own it. But I moved on and went and I put the proceeds into CALS and JEPQ, which are more diversified in sort of an individual name, and I can sit with them until I find another name I want to own.
All right, so we got to move in there. I thought we had a pretty good debate on where we stand today relative to CPI, stocks, rates, and everything else. Up next, more committee stocks on the move today. We'll get trades on Roblox and Taiwan Semi, Delta Airlines, news on all. We're back in 2.
These options are really expensive, guys.
Report podcast? What are you waiting for?
In my opinion.
Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
Yeah, I think just feels like Taiwan, it just feels like they're a bit expensive because of the move that it's made. And they may be pricing in a decent move already. Like, what? Today's Wednesday at lunchtime, right? A 145 move, right? They want $1.11 to $1.14. Okay, 145. So if we look on average, I already know, I have it written down. TSM usually only moves like on a regular day, like these past couple days here. You know, yesterday it moved, what is this, 142.88, so we'll say 143. And that high is at 148.20. So I'll say, since I took off that one, I'll say 148.50. All right, so 143. Am I correct there? Yeah, 143. So that's a $5 move. That's a pretty big move there yesterday. The day before that, 42.77, and that's from high to low. It's 146. 2, 3, 4, 5, 6. So that's $4. So we have a $5, $4, and then today high to low right now 145. We'll say 145. And again, I'm stretching it a little bit more. 45 to 148. 145 to 148. It's $3. So that's $3. Okay, $3. They're trying to charge me $1. The stock is at 146.60, okay? They're trying to charge me $1 for something that moves. It's already moved. But tomorrow, they're trying to charge me for something that can move from high to low. We'll say tomorrow, because I don't think this thing moves today. I think it might just sit right around here in this area. Maybe you get a little bit of movement because of the Fed minutes with the overall markets having, an influence on it. But I feel like, even it's just been sitting in this range. For my puts to go to 145 and, or no, where am I looking to go to? 143, 144. I mean, I guess it's not bad. They're pricing in $1 move. I just think it's expensive. Because you're going to make or lose 30% for every dollar, roughly, not exactly, but I don't know. I just think that's expensive. And I think that it's expensive because it's had a lot of volume. There's been a lot of news with it. It's been making these runs, so the volatility is going to be higher. I think that it should be like 80 cents, 80 to 85 cents right now. Today's almost over with. We're halfway through the day. So if I'm paying $1, our high is 148.50, and if I think we can get $3 to $4, let's just say $3. 148.50. We'll say 148, 47, 46, 48, 47, 46, 45. So that's $3. 350, 140, 350. Okay, that actually makes sense to get down here to like 144. So let's see. Look at that low volume bounce. I might put this on. I just think it's a little expensive here. Just my opinion. The 145 is for $1. If it gives you follow through, take profit if you decide to do it. I don't think I'm going to do it because, I'm not giving back anything that I made today. It's just got to be there. I don't know. I don't know if that makes sense. I just think that it's expensive. I do. You may say it's got $3 left. They're charging $1 for a $2-3 move. I don't know. I think it is. That's all. So we'll see if these options go up or if they go down. I think these options are going to start going down. It's 12:30, so you have a half hour till 1 o'clock. You'll probably get a little jump down by like 1:30, 1 o'clock on the options. I don't know. It depends. Just take notice to them if you want. I don't know. So I just think that it's expensive. That's all I can say. For me to pay $1, Delta is 30. So you got to understand you're going to make or lose 30 cents from that dollar. Pretty much 30%, 33% for every dollar it goes against you. So 50%, you're going to lose 15%. From 146, a bounce back to VWAP, like this bounce back from 146 to 147, that just, you know, somebody could be getting hurt here. Not hurt, but, you know, these options are going to go down. So we'll see. I don't know. Maybe they are priced right. I mean, I got to say, you know, I will say that I think that they are priced right. I just think that the stock moves too slow to be saying, you know, for them to be $1. Because for me to be in the money, I need to be at 144, not 145. If I'm paying $1 for a 145 put, okay, and we get to 145, well, I'm down what I paid. So I need to get I need that movement, what I paid, and more to be profitable, right? By Friday. So if you're at 148.50 down to 144, 145, that's a $3, $4, $5 move. That's already the ATR. So, and you're paying $1. So you got to think, you know, your break-even price, this is why I think it's expensive. That's your break-even price, not here. And when do you do it? Do you do it later today? Do you do it tomorrow? Do you start going in that direction? So that's why I felt like, you know, the trade for me, if I traded Taiwan Semiconductors, was just like the other days where, you know, you gotta look to get that bounce early, to get the momentum. We'll see where these things are. If they get cheap enough by tomorrow or Friday, SMCI is picking back up, I think. I think I seen that on the watch list, SMCI. This thing is having a really nice day today, so we'll keep our eyes on this. You know, the closer we get to the end of the week, my cat's calling me. You know, they'll get cheap. We'll see if we can't maybe take a play on the semiconductors. I'm coming, Abby. So that's that. I don't know. So like right now, Tesla consolidating. So good job not taking that trade. You know, it almost reeled me in, but I just said no. Just let me hold on. Let me let this thing consolidate and figure out what it wants to do. Alibaba's moving very nicely. So yeah, I'm gonna go feed her and I'll be right back, guys.
CNBC.
All right, welcome back. Let's do some calls of the day now. We start with that one right there. It's Albemarle. Stock's under a little bit of pressure today, even though it got upgraded. Bryn at Bank of America to buy from neutral. Price target goes to 156 from 137. They cite improving lithium prices. What do we think here?
I think it's a great call. So you got to buy, if you're going to buy commodities or be in commodities, you kind of got to buy when there's blood in the street. Not when everyone's loving them. There's been blood in the street with Albemarle, SQM as well. This stock has been basing out around 120, 130 for the past few months. So
level 2, by the way, is for the SPY. Okay, 513.60. This level 2 and time and sales. Time and sales, or not time and sales. This is the options, but this is the level 2 on the left-hand side for anybody that's curious.
ALB?
Maybe.
Okay, you
maybe a little natural gas as well.
Really?
Right, Jimmy?
All right.
He's not paying attention.
Don't wake him up. He's
thinking about General Motors, which is my next stock.
Jeez.
Price target to 46 from 43 at Morgan Stanley. It's Adam Jonas. says the EV slowdown's positive for GM.
Well, it is. Sorry I chuckled there because Adam Jonas has a love-hate relationship with this stock. I mean, he has an outperform rating on it. He wants to like it, but when you read his verbiage, he just hates it. I don't understand it. I mean, I don't understand it because it trades at around 5 times earnings. Earnings estimates going up. And Mr. Jonas, if you're watching, I'm just teasing you a little bit. I appreciate your support of the company. Internal combustion engine vehicles are selling like crazy. People need them. The pricing has come down a little bit, but it's still highly profitable for GM. And when they report, I want to see what their share count is after that massive accelerated share repurchase.
Hello?
Jimmy's on the board of GM now.
Okay, I'll tell him.
I do understand. I do understand
the support.
Look at
He's
that.
on GM's board.
Look at
I
that.
do
What a guy.
understand love-hate relationships, by the way.
Broadcom added to UBS's top picks list. Joe, you on that?
Absolutely. It's a core holding in terms of generative AI at a reasonable valuation. And TSM is telegraphing an environment where we're seeing the recovery coming out of COVID for smartphones, for laptops, for other areas of the chip makers. And I think that bodes well for Broadcom, which has a much more diversified set of products.
But also benefits from AI, too. And that's
of course it benefits for it. And that's the reason why I believe it's a core holding. But there's other areas of the business that are now rising, and that's evidenced today by TSM.
Okay, so Disney's price target goes to 140 from 125 at Argus, reiterated by, I'm sure you appreciate the support of the company very much, as you articulated through General Motors. I don't know the name of the analyst at Argus, but, you know, you can reach out on your spare time. What do you think?
Thank you. Take the call. Look, I think what's important here to note about Disney is at the current multiple, you're now, if you're a long shareholder, you're expecting earnings outperformance, okay? The proxy battle's behind us. Now it's time to execute on the business plan. As I've been saying for quite some time, the biggest lever is DTC. It's Disney Plus. It's controlling costs so that the earnings there, which we're going to start getting in less than 6 months, come in bigger than expected.
All right, ServiceNow, price target 900 from 885 at Jefferies, reiterated by Joe.
Jimmy, you like a trailing profit margin of 78%?
I do.
That'd be pretty good for GM, wouldn't it? Well, that's what ServiceNow is doing. They're delivering revenue growth of 25%. They're part of the AI story as it relates to software itself. Cash on hand continues to grow now at $2 billion, another core holding.
Okay, so we are going to take a quick break. When we come back, Mike Santoli has his midday word. We're watching 1245 too. And Barkin, and if we may hear from Leisman too on what they have to say about the CPI and their own map for interest rate cuts. And don't miss, by the way, CNBC's first ever Changemakers event. That's in New York City. It's all about women in leadership who are transforming the business world. For details, you can scan the QR code or visit CNBC. Changemakers, halftime's back after this.
and make it count.
All right, welcome back. Our senior markets commentator, Mike Santoli, joining us now with his midday word. Can't wait to hear it. What's on your mind?
Well, first of all, just in terms of the short-term tactical stuff, it's at least interesting that for half the day, the S&P 500 is trying to make this 5150 area matter. That was where we closed last Thursday. After that drop, that's a 2% decline off the highs. It would seem a give back of the rally if that somehow ends up being where. But it is doing it the hard way, which is the handful of stocks. You have most of the cyclical stuff and most of the rate sensitives are down. So I know it's true, and it's easy to say if the economy hangs in there, who needs rate cuts? But the stocks aren't really acting like comfortable in the assumption that indefinitely at these yield levels, things like consumer cyclicals can hang in there, and therefore the consumer can hold up. So we have the suspense that's been prolonged for another couple of months, assuming it goes through PPI tomorrow, in terms of where we're going to sit in terms of this equilibrium between inflation, growth, and asset price.
Your point is obviously well taken. The key word, of course, that you used, indefinitely. It goes to what Weiss was saying earlier. All right, yeah, we don't need rate cuts today, but if we start putting them off forever, we may have a problem.
Yeah, I just think inevitably the market is going to start to go through the what-if scenario. If that will have been 1 year peak rates. That's a very long stretch for the Fed. It's happened to be a little bit longer at times, but not much. And so you inevitably have this idea of like, really where and can we punctuate or not? So I'm not alarmist about it. This market is just doing very normal things right now. You're playing with house money, but it does make it a little bit of a trickier setup.
Yeah, no, always measured, Mike. You are. I'll see you on Closing Bell for more of your insights then. That's Mike Santoli, our senior markets commentator. Coming up, we're standing by for the first Fed reaction to today's CPI print. Goolsbee, Barkin, we said they're speaking in about 30 seconds from now. We'll try and have those headlines for you, too, when we come back.
My bad. Sorry, guys. Take a little break. Gonna eat this little sausage. See what we got going on here. Just give me just a couple minutes.
Done.
Gold rally more than 10% to start the year. Up its forecast for gold and copper. Let's kick these around. All right, Bryn. So gold remains one of the been on a run. They're saying $2,500 an ounce. Copper goes to. So you've got Freeport, obviously, is one way to play this, which is what you own, but you also own the uranium miners and BHP. But what are your sort of broader actionable thoughts for our viewers on this?
So I think gold, first of all, you have twofold here. You have, number one, you have the Chinese have been for the past couple of years and Russia buying gold. You also have, if rates stay at this level, by the end of this year, December 2024, the annual interest on our debt is going to be $1.6 trillion. So I think that is a macro play that people like Stan Druckenmiller, et cetera, are moving into gold. I think that from an actionable item, gold is very overbought right now. I like BHP here. It's iron ore and copper. I think it's a derivative adjacent play to China, as well as when iron ore firms up, you have an undervalued company that has a little over 5% dividend as well.
Okay. Joe?
Freeport-McMoRan gives you a little bit of everything. The free cash flow generation is increasing, the exposure to copper, limited supply, and then the gold revenues as well. I mentioned yesterday Tech Resources. That's another way to play it. It's reasonably valued. You can look at a company like Ivanhoe. Ivanhoe is a little bit more rich in valuation. I agree with Bryn on BHP. That's another way to play it as well.
Weiss, you playing this at all? You've never, as long as I've known you and you've been on this program, this is not a knock at all. Just it's a fact.
Yeah.
You have not liked gold, right? Because you said you can't value it. Right? You've made that case.
Yeah, I don't know how. It's an emotional buy. It's an emotional sell.
Sure, but there are times where it works, and maybe we're obviously in one of those times for whatever.
Exactly, but I know if I come in, that's going to be the end of the time it works. So
like most everything else.
So they don't get mad at me. I'm not going in.
It's kind of like when you walk into a restaurant, everybody is like, all right, we're out. Check, please. Night's over.
How is that different, though, than your buy in Bitcoin?
Because
good question, Joe T.
It is. It is
question.
A very softball question, thank you.
Okay.
Because I'm betting on the momentum in marketing from BlackRock, from Fidelity, from tons of other firms that are bringing people in. So I'm betting on the marketing strength. Bitcoin just happens to be the vehicle I'm using to play their marketing strength. Okay. Period. There's no business use case. For gold, I've seen
you got news coming out on Paramount right now about 3 of the CEOs stepping down on the news of that takeover from yesterday. Abby, baby, come on. Just sit down here.
Down and up and down. So, if I can't do bottoms-up analysis on it, I'm not going to do it.
You don't like the marketing, the late-night commercials on gold?
No.
Touche.
No,
if I can't do bottoms-up analysis on it. Okay. All right. Jimmy.
She's just crying because I fed her and she don't understand that it's inflation, and I'm not going to waste money on just opening new cans every day for her. She's good. She has what she needs, and she just being a little punk. I just opened it a couple hours ago. Her wet food is fun. Oh, I know. Use your tail to just knock everything off the desk and throw a fit.
Never heard that before.
Never ends. All right,
we're back. We're talking about metals. What are you going to talk about?
She's so funny. Are you okay? I know what you want, and I'm sorry.
I mean, everything's going up.
Just lay down here. You have food. Let's just take a nap. Come on.
Okay.
I'm going to eat my lunch real quick. Man, it's warm where I'm at. It's a nice day out. Yeah, so Paramount, you got some news there with the CEO's talks about stepping down. We can look and see if it came out here. It would be really cool if, see, like this. Like, they're trying to get you to click on stuff, but like independent, like they're trying to get you to click on things, but like reporting like individual news, like Paramount, maybe they haven't got it. Maybe I could start it, but I'd be busy. I already have so much shit doing that. I don't know. I don't think it's for Twitter. I mess with Anthony Scaramucci all the time. I compare him and you know, jokingly to Jordan Belfort. I say, hey, it's Jordan Belfort's twin. But on the bright side, if you don't have to eat or pay car insurance, everything's, and that's true. That's true. Car insurance is crazy right now. For anybody that hasn't had a locked-in rate, or just trying to get it now, oh man, I feel bad for you. I really do. I mean, some of the prices they're talking about, it wouldn't surprise me if people just start going without insurance in this thing. There's no way you can ask somebody to pay $300 some a month for nearly a car payment on just a basic vehicle, not brand new, not old, like a 2018, I'm talking like a Nissan Sentima, or not a Sentima, or like a just like, you know, your average 4-door little like Civic Nissan car type Honda Accord. Insurance is crazy right now, and the stock prices aren't showing it, but I really do think that it's gotten to the point where some people are just going to be like, yeah, I'm good. I'm not paying. It's just not, the risk to reward there, it's just not worth it. Especially people that have vehicles that are paid off, and they want to try to charge them $300 to $400 for basic insurance. You know, you could start to see more and more people without insurance. And I don't know how I got on this, but Kramer was saying the same exact thing. Oh, that's how. Guy Adami. If you don't have to eat or pay car insurance, everything is fine. He's right. Yeah, it's a little bit of a slow day for me too, but remember, we have FOMC minutes. We still have these minutes that's going to bring some volatility. The message remains the same. Buyer beware. Seek verification. To this day, not a single marketer has taken me up on my offer. I don't understand. For those that always ask, call me out, then conveniently went MIA on our 100K bet. I want to do it. It's okay to prove their track record.
Thankfully, she's on Redfin. They update the listings every 2 minutes. And with so many options, she's bound to find exactly what she wants.
This one's just right.
CPI and what he thinks it now means for the future of rate cuts and Christina moving too. All right, let's do some final trades. Steve, I'm going to go to you first. The 2 year is out of the way. hope you'll join me on Closing Bell today as we take you through this final stretch, and it could be an interesting one. Josh Brown's going to be with me here on set. Jan Hatzius, too. Chief economist, Goldman Sachs, get his first take on today's CPI and what he thinks it now means for the future of rate cuts, and Christina Hooper, too. All right, let's do some final trades. Steve Weiss, I'm going to go to you first.
Look, the 2-year.
I'm going to get you out of the way early.
Like, do you guys want to do this? Yeah, I'm with you, Basic. It's a slow day, but like I said, I think we have some volatility coming up. Like, not even like a Peter swinging contest, or, you know, maybe bragging rights, maybe a friendly bet, but for entertainment. If anybody wants to, you know, I would like to do, I've been wanting to do like a competition like live where we can make a video of it. Like whether it's live, that's cool, or not live, even just like record it.
You think that area specifically is at risk at this point?
Have it going on and people don't know, just have it recorded. Like right now, like maybe just with me trading and stuff, maybe I'll call out some trades, but I have some other things going on. Vice versa. You know, if anybody wants to do something like that.
So, I mean, it's not just an NVIDIA story. Obviously, you could put up a
so
chart of since the bottom, or certainly since, you know,
I forgot the
March,
ticker
and it's
on
been
that.
A massive run for a lot of those names. Sprint Talkington, good to
What's
see you
it
back
doing?
here.
Was it like M something? Was it Wave?
It is just at its 50.
No, MRIN. Moderna.
I think we have legs
I heard
to
it on
run
the scanner too.
Somebody asked me for the ticker of the Joe T.
Was thinking about Moderna. Moderna went ham yesterday, and that's what this MRIN kind of made me think about.
At any rate, what's your final trade?
Well,
Or no,
obviously,
it sold
it's all
off
stable. You
actually.
see that one area
Or was
to
it the
avoid
day
those
before?
regional
Yeah,
benchmark
look, the
and
day
stuff up
before.
here.
This thing just ripped.
Thank you, Scott, and welcome to The Exchange. I'm Deirdre Bosa, in for Kelly Evans, and here is what's ahead on our show. March CPI coming in hotter than expected. Yields are jumping, stocks are falling, and so is the probability for a June rate cut. But our market guest sees a lot of opportunities in both stocks and bonds. He's here to tell us where. Plus, NVIDIA is defying gravity, up nearly 2% amid today's market sell-off. Our trader says what's going on is very strange, and he's here with how he is positioning. And Google unveiling a new chip and calling out the competition. You do not want to miss my exclusive interview with Google Cloud CEO Thomas Kurian. It is some of the strongest language we've heard from a Google executive in the AI race yet. But we begin with the markets and Dom Chu with the numbers. Dom.
All right, Dee, it's not a good day for the bulls out there. It's red across the screen, but we are, dare I say it, off the session lows. And here's what I mean. If you take a look at the Dow Industrials, we're down 430 points. Roughly about 1% declines there. 38,455 is the last trade. The S&P 500, broader measure of large caps, 5160 is the last trade there, down roughly 50 points. Again, 1% declines. And to give you an idea of the range, it's been down all day, but even at the highs, we were down 31 points and down roughly 65 at the lows. There is your range. So again, tilting a little bit more towards the downside, but off the worst levels of the session for now. We'll see if that sticks. And the NASDAQ composite, the tech-heavier index, maybe thanks in no small part to NVIDIA's outperformance today, is actually outperforming the rest of the indices, only off roughly 0.75%, 135 points to the downside, 16,169. If you want to look at the rate picture,
damn, that was
the big
good.
Story. The 2-year note yield is seen as more of a proxy versus other parts of the yield curve on the bond market for that Fed interest rate hiker tighten model here. If you take a look over here, we did reach at one point the highest levels going all the way back to November of last year for that benchmark 2-year note yield. So the Treasury complex and rates very much a big focus. Speaking of that, the high-yield bond market, junk bonds, are not as levered to that rate story as investment-grade bonds are. But take a look at this ETF that tracks the high-yield bond market. It's been trading in a range for pretty much all year long. But today we are testing the lower end of that range. So even with the rate picture, high yield is starting to see a little bit of stress. We'll see if these levels hold right now for junk debt. And then if you're looking for another place that's economically sensitive, check out what's happening with small cap stocks. This is the ETF that tracks the Russell 2000 small cap ETF. I've put up there this blue line, which represents the 50-day moving average price, an indicator of trend and momentum. Right now, trading just beneath it. We've tested it before over the course of the past several months, so we'll see if these levels hold. Watch small caps, watch junk debt. D, I'll send things back over to you.
Yeah, today's action raises questions for some of those smaller caps. Dom, thank you very much. Let's get straight to that report that moved the markets and the rate cut probabilities. Steve Leisman has the headlines from this morning's CPI print. Steve, they're shifting yet again.
Yeah, this hot CPI report, dudes, are getting a pretty cool reception in stocks and bonds where the chance of that near-term rate cut slipping away. If you want to look at this from a holiday standpoint, the market once had thought we'd get a first rate cut before Memorial Day. It's now only confident, and maybe less so than it was before, in a cut sometime after Labor Day. The June probability slipping 58% before the CPI number down to 20. July below 50%. September, well, I call that in play at 66%, down from darn near confidence at 92%. The January 2025 Fed Fund contract rose a sharp 25 basis points. That's almost precisely removing one rate cut from the 2024 outlook. Had been at 3. It's now
He's playing with you, basic.
Actually under 50 basis points.
He's saying, why would you think I'd be in that, man? That thing is getting hammered right now. It's consolidating. I would assume.
Before that,
I
it
think.
priced in as much as 150
if I'm right.
basis points. Of course, there are musings that if this continues, not only would the Fed not.
Eddie. Okay, yeah, that's what I say. I would assume he's probably not. He's probably just joshing. Probably just messing with you.
Because the Fed generally views itself as restrictive. The current 5.3%
it's been a little.
rate is, call it 280 basis points higher than the median long run or future rate of 2.6%. All that is to say, the Fed could and maybe even should cut where it is right now, but it won't in the face of stalling inflation.
I think I might do it. I think I might actually have a cigarette during the day for the first time in a long time. So I'll be back. We have 1 hour until,
right, and Steve, that had been
or an hour and a half until Fed minutes.
February had some seasonal effects, but today's CPI number makes that case harder to make,
Let me go
right?
through the news real quick.
There was one of the comments, one of the analysts out there said, you need 2 dots to draw a line, and you need 3 dots to draw a trend. Well, we got that third dot today. That's the third trend.
There was just an auction too, so be,
pretty much.
Just know that that's going on right now.
But look, if you look at last year,
for any trades that you guys may have or not have on.
2023, you'll see it was high, it came
so
down,
yeah, the
it's
10-year
high
note
now,
auction just went off.
down as the year goes by.
I wonder if that's what are the markets doing anything? Yeah, look, that's where that sell-off came from out of nowhere. Try to. All right, the risk of a recession is being greater. Why is this? I knew it. I knew it. Once I seen that it was the 10-year today, I'm like, this is why the markets aren't doing anything. Oh, you're kidding me. This was it. What's Tesla doing?
We
Oh,
tried
no.
to auction off 39 billion tens, and do keep in mind this is a reopening.
This is
the second time we're
I'm
adding.
gonna let him talk.
Issue. And each time,
I'm gonna try and get it in real quick.
Gets a smidge weaker, so I gave this auction a D, and maybe that was kind because 39 billion tens came off at 4.5.
This is saying that they think we're, with Powell not cutting rates, this is a sign that we will have we're the probability of a minor recession is greater. That's what's going on here. The yield is higher because there's more risk because they think the Fed's doing too much too long. That's exactly what it is. The risk of debts being paid later in time is a lot more riskier.
All the metrics were just nasty. 2.34 bid to cover.
Yeah, bro. Once I started, I can't hop off, bro.
61.8 on index.
UVXY, it's just so liquid. That's the best thing about it. It's liquid.
Weakest since November of 21. And if you look at the dealers, 24%. The 10 auction average is 15%.
I can't believe I didn't know that this was coming out.
Cleaning up a good chunk of the buffet on their
at
own.
1 o'clock. I did not. I can't believe I didn't know this.
Since November of
That's crazy.
22. So no
Look,
matter which
right
way
at the
you go
indicator
on this,
too. Look,
the
right at that
metrics, the
514
pricing,
level.
the actual marketplace,
Man,
or the
look at
fact
that.
yields pop.
That's
I
crazy.
thought it could go either way. Sometimes big
Wow.
sell-offs are
That
looked at
is
as
a beautiful
concession
setup.
when you're a buyer, but this
On a
time,
15-minute
it was more
chart
about the fear of rates going
that
even
says
higher.
sell,
Your
sell,
take?
sell, sell, sell.
That's having an immediate impact on equities. Thank you, Rick. We're seeing the Dow at session lows off by about 550 points. The S&P 500 is off by about 1 1/3 of a
I wonder if we can get a
percentage
bounce in
point,
the
and
markets
Nasdaq
off of the
still
Fed
holding up, but
minutes.
Down again
I
at
think we
session
can
lows.
if they give us
Let's move on.
insight.
One of my next
If they give us insight more so onto where they think they might want to be, which I don't know if they will, but if they talk about, like if they give any type of numbers or mentioned any type of numbers, like 6.5 trillion, 7 trillion, 7.5 for their balance sheet reduction to end and to start being there's a word for it. I still don't have the word in my mind. Like when the Fed does something, like when the Fed adds liquidity or brings down rate, they're being it starts with a C maybe. Shit, I just had the freaking word and then it left. What I wanted, this is gonna bug me. I want to know what this word is. Let me see here. Let's see if I can Google it. Word for the Fed helping the markets. No, not honestly. No. No, not that. Fed. Are you okay?
There's inflation, but the other side of this is the jobs data and the economy, kind of proof that higher rates aren't actually.
Oh my gosh. Do you guys know the word? Like when the Fed is being the Fed is being supportive of the markets. There's a word for it. With like when they're adding liquidity or bringing down rates. Not easing. Man, once I hear it, I'm going to go off and I'm going to say it. Whether it's like 6 months from now, a year from now. The Fed is being... See support.
Markets are at session lows, and they've been pretty resilient so far to rising bond yields. Has the character of the market changed?
We'll see if it's in the FOMC minutes. Man, that word, I can't think of it. Well, that's what I'm thinking. Well, I don't know, but yes. That's what I'm saying, basic, that I wonder if we test that initial morning low, and then the FOMC minutes help us bounce. I mean, even if we still go down further, we still need to bounce back to test the 20-day. Something. One of these levels we need to test. So right now we just tested this. Not supportive. Fed is being not conducive. That's not it either. Damn it. I just want to know this word. It's like a specific word they use for when the Fed is being, when they're helping out the market. Man, I wonder, like, what is to come, like, seriously. Because it's only, like, if we do not go up from here, like, forget about the 50-day. It's going to come to a... I'm coming, Abby. Hold on, baby. Hold on. She is so funny because I see the door going, like, she's like pushing harder and harder trying to open the door. It goes and it shuts, and then she goes out further and tries to hold it. She opens doors, cabinets, everything. Yeah, I want to see if we get a bounce too, though, because I wonder if the FOMC minutes show more signs that the Fed is going to, start easing. Because right now the bond market just said, hey, we think the Fed's going to do too much. If this is the case, that they're not going to start cutting rates, okay, we're going to help them cut. We'll do it for them. Right? Because we're going to, we're not dumb. We're the smart guys. We know that if they continue with this, more and more people are going to lose jobs, and their debts aren't going to get paid if they don't have a job. Or get paid in the manner that they're being paid right now. It's just risk in the future, like the probability of a recession and risk of the future Yeah. So, that's all. I know it sounded real stupid. That sounded. We are all now dumber for hearing what you just said. But you guys know what I'm saying. Man, I really want to know that word. I do. I want to know that word. I really want to know that word. Once I hear it, guys, I'm going to go off. I'm going to be like, that's it. They said it. That's the word. All right, I'm going to put this back real quick. I'm going to step out. I'm going to grab, I'm just going to grab something to drink. I have a water. I'm going to grab a Red Bull. I'm going to go back over the charts. I'm going to get ready for these FOMC minutes. These FOMC minutes come out at 2:30. All right, they come out at 2:30. There's a nice reversal. Keep an eye on VWAP. You see how, like, it was, we made VWAP support. And it hasn't really made it resistance both times. Like, what I mean by that is that it didn't get to it or it went past it. Like you see here, right? If we look right here, you can see we just kind of went up. Okay, yeah, we touched it, and then we broke through it, but then completely reversed it, made it resistance. All right, you did that a few times. You made it support, so not support, you broke it, resistance. Couldn't act as resistance, support. Support broke, tried to regain, blah, blah, blah. Point is do we rally back to VWAP, scalp long, possible scalp long to get back to the opening price if there's enough there, right? So that the markets, like the SPY, for instance, gets back to where it opened at in front of the Fed minutes. I really think that these Fed minutes, guys, are probably the only Fed minutes I've cared about in a long time. For the simple fact that nobody talked about the Fed being done with balance sheet runoff. I mean, Powell brought that up for a reason. They're done. And it's not ironic that when we look at the chart, Fed, or no, let's go to Fred. Fred, no, we won't go to Fred. We'll go to Fed. Balance sheet. Balance sheet. Fed balance sheet. Fed balance sheet. You see this previous high here from 2021? We're right on it. We're pretty much right at the thing. So, I think this right here is our low. And that's why he brought up talking about balance sheet runoff, because here around like 7, maybe 6.5, but they it's weird that they do things like these charts as well, where, you know, they would make this support. It's just, if you look at all the charts, they kind of just look like unemployment. They put a 50-day moving average on unemployment. You know, it's okay, that's cool. Like, literally, they chart everything. So that's what I think. I think, you know, they're going to start possibly easing. You can see right here, you have that double top, right? We have this double top here. And what happens? You rally, and you end up, like, making it support, and you bounce off of it. You never look back. Man, you ran that thing off. And look, that's funny because they did not. Okay, it did not pull back. Alright. That's wild. So they reduced the balance sheet going into the end of Trump's administration. I mean, I knew this, but like, to the amount? I didn't know. That's crazy where we came to. It's so wild. So yeah, let's see what happens here. I'll be right back. Yeah, that's what I was saying, man. You know, if the Fed, that's a sign there that, okay, the Fed doesn't want to cut. We all know the repercussions for that. Because we want to act like we don't know, or you know, we want to act like we haven't done this before and think that just because everything is fine, we don't think the Fed should cut. We have maximum employment. There's just no reason to cut. Okay, so what are you implying? Not you guys, but when we hear that on CNBC, they brought it up 4 or 5 different times today. What are we implying, that they need to wait until something goes wrong? Like, you can cut and cut slowly. You don't have to just say, all right, 4.5. We're doing a 75 basis point cut. Do a 20, 25. Do a 25. Maybe wait a month or two. Do another 25. You start to see more pick up again. Tomorrow we still get we get the initial jobless claim. So, guys, I think this week is actually a big week. I do. I came in the week thinking that. We're here now. We're in the thick of it. It's happening. Get your levels ready. Make sure you have a plan. All right. Because labor market, Europe, interest rate decision, PPI tomorrow, and then that's about it. And then we get like Michigan consumer sentiment, stuff like that. It can move the markets, give us a little volatility, but it's just, it's exciting. It's sometimes, it kind of sucks to go like 2 to 3 weeks without news in the overall markets. So core, so we have PPI, interest rate decision, deposit facility rate, press conference. I cannot believe I missed that 10-year auction. I can't believe I did not see that. I can't believe I didn't see it. Like this morning, yesterday. I may have seen it and I just didn't really remember, because can't just let the 10-year go. 10s, 30s. You want to watch those. All right. Yeah, so that's about all we have for Friday. Export prices, import, 5-year. These inflation expectations are they're showing a slowdown. I don't know how they do these. I don't know how they all work, but if it's just, how do I say this? I don't know. I'm going to get rid of this and I'll be right back because I want to get ready for these Fed minutes. That's all. I appreciate all of you guys, man. I hope you guys are having a good day. Again, if anybody's new here, welcome. Don't be afraid to say hello. Say hello to everybody else that's in chat. We're one big happy family here. If somebody says something that upsets you and that's the only time we hear from you, then just got to stab them. No, I'm just playing. So yeah, there you go. Basic. You said it. You called it right there. Great job. Nice job. I was looking for the reversal too, but I didn't think it would happen that quick. Hold on. Hold up. Are we saying? Okay. Hold on. I mean, Bitcoin's bouncing too, so that's so weird. Like, they can't tell me that. Shift. Why is it doing this? Oh, control. It's a nice bull flag. Let me be super clear. We have over 1 million drivers on the platform in the last year, which is amazing, really significant part of the economy, actually. And they make, by the way, about $30 an hour after their expenses. That's sort of after, gas. They make $30 an hour. I don't know. I want to hear this. Damn, this 10 years just still climbing. Oh, come on. Yeah, this thing may start to pull back. I would assume. I think it would be really difficult to keep grinding like this. You're getting a bit of divergence too, so I got to be honest. I think yields are going to start pulling back, guys. I think so. I think this was the nail in the head, the nail in the coffin. I think that's it. Yields are going to, or should, within the next month, next week, the week after, slowly start to pull back again. I'm not sure why my charts look like this. Like I'm wondering if it's something I'm doing wrong here. But I have like the 2-year and stuff. Like come on, man. I gotta get rid of this bowl. Like the Dixie, right? Okay, there we go. So we can see, it's just weird that I don't have any lines on that 10-year chart is what I meant to say. Hard for me to believe that I haven't like tried to figure something out. Man, this looks like seriously just like a bull flag, and it looks like it's trying to break out right now. Like, you can't tell me that doesn't look like a breakout, pull back, and they just went long the dollar. Look at that. Look at that setup, man. So if that's a failed breakout, let's all hope that it is. Because I want the dollar to go lower. I don't care. Because if the dollar does go higher, that's more volatility. That'll mean that earnings are going to start to come in a little bit worse. Not good. That in and of itself will create volatility. But do I want volatility over some of the biggest companies not making much money? I don't know. They'll be okay for a year. Can we get like one more? Can we get like another 2021, 2022? Can I just get one more? And then go off to a regular market? That's all I'm asking. It was a nice SPY bounce, bro. That was a sick bounce. Bitcoin bounced as well. Really nice reversal on Bitcoin. That could have been our indicator too. There. I'll be right back. I'm getting rid of this bowl so I can get to work.
And again today, I told the president that now is the time to demonstrate the true values that Japan and the United States can offer as global partners, that we must together fulfill our responsibilities to create a world where human dignity is upheld, and that Japan will always stand firm with the United States. Stand firm with the United States. I explained that strategy, Japan is determined possession of counter-strike capabilities, increase our defense budget, and other initiatives, and was reassured by President Biden of his strong support for such efforts. In such context, we confirmed again the urgency to further bolster the deterrence and response capabilities of our alliance and concurred on reinforcing our security and defense cooperation to increase
I will be watching
interoperability
15
between the
or
US forces and our
51350 on the
self-defense
spy.
forces, including the
Sorry for
improvement
yelling.
of our respective
I'm just gonna go smoke real
command
quick,
and
or I'm just
control
gonna grab. I got my
frameworks.
Red Bull here. It's game time.
We will be discussing
Let's
the
let's
specifics
finish the day
as
off
we
strong.
plan for the next Japan-US 2+2. The President and I went on to discuss various specific challenges faced by the international community. First, we confirmed that unilateral attempts to change status quo by force or coercion is absolutely unacceptable.
What is going
wherever
on?
It may be.
Man, this dude,
And that we will
UVXY
continue
with
to
this
respond
volatility. You're right,
resolutely
basic.
against such action through
This is
cooperation
crazy.
with allies and like-minded nations. From such perspective, we agreed that our two countries will continue to respond to challenges concerning China through close coordination. At the same time, we confirmed the importance of continuing our dialogue with China and cooperating with China on common challenges. We also underscored the importance of peace and stability in the Taiwan Straits and confirmed our position to encourage peaceful resolution of the cross-straits issue. The situation in North Korea, including nuclear and missiles development, was brought up as well. We welcomed the progress seen in many areas of cooperation based on the outcome of the Japan-US ROK summit last August and concurred to coordinate even more closely as we face serious concerns. President Biden once again demonstrated his strong support towards the immediate resolution of the abduction issue. We reaffirmed the importance of realizing a free and open Indo-Pacific based on the rule of law.
To me, it looks like the
and concurred to maintain close collaboration through various opportunities, including the Japan-US.
It looks to me, guys, look at the daily chart here on the SPY, and it looks like we just went up, tested the low of Fed Day, and just made that resistance, and making this area here just like double top. And that prior support level right here, you guys can see, look, down, up, down, up, down, up. We rally, okay? Resistance, resistance. I mean, you gapped up, rallied, then rejected, but you know, so it comes down, support, support. Oh my God! All right, you try to bounce, and then you pull back, and what do you do next? You come up to that rejection level up here at this. It's like, it's not a double top, but it is like a double top. Because you can see, look, support, you rallied off of it yesterday. 514. You rallied it off of it yesterday. And now we just went up and made this area resistance. So we'll see. We'll see what happens. I think we'll see. We'll see what happens. I don't know where UVXY is right now, but you know, I don't know if. Oh my gosh. If it's. Listen. Missile strike.
U.S. and allies believe major missile and drone strikes by Iran and its proxies against military and government targets in Israel are imminent. Civilian facilities not expected to be targeted.
Okay, so they're saying that they think Iran. Now again, this is a report from Bloomberg that they think it is very close to time for that Iraq is going to, start with these bombs. Abby, baby, you got food? Please, just let me be. Come here. Come on. You're okay. You're okay. Please. You keep yelling, trying to yell over me. Come here, baby. You're okay. It's okay. You're fine. So I was wondering why the market reversed there. I wonder if that was it. I'm really curious if that was why the market reversed. Come on, Abby. Please, baby. Just lay right here. I don't know why you're being real difficult with me today. I don't know why. Come on, baby. There you go. I know. It's warm, baby. I know. Just lay down. Come on, baby. Nice.
You're also looking at cross-border traffic, specifically moving freight from Mexico as part of nearshoring into the U.S. Looking at the latest figures, in February, a 13% rise in cross-border freight movement from Mexico. You also, in this liquidation purchase, you got a service center near the Mexican border. Talk to me about reshoring and your business when it comes to that.
I can't have anything on my desk without her ripping it off. What happened to the sound? Are you okay? That was a big jolt. Are you okay? Turkey.
Friends, which was launched by my initiative. Lastly, in order to further strengthen the people-to-people bond, which is the cornerstone of our unwavering Japan-US relationship, we affirm to further promote people-to-people exchanges. As the outcome of our meeting today, we will issue the joint statement titled The Global Partners for the Future. This is the expression of the determination of Japan and the United States to maintain and strengthen a free and open international order based on the rule of law that underpins the peace, stability, and prosperity of the international community and states the guiding principles. With our partnership, we will defend the future of Japan and the United States, the Indo-Pacific, and the world, and make that future all the more prosperous.
Thank you. Now we'll take a few questions. Jordan Fabian of Bloomberg.
Thank you, Mr. President. Last month, you predicted the Federal Reserve would cut interest rates thanks to falling inflation. But today, data showed that inflation rose more than expected for the third straight month. So how concerned are you about the fight against inflation stalling? And do you stand by your prediction for a rate cut?
Well, I do stand by my prediction that before the year is out to be a rate cut. This may delay it a month or so. I'm not sure of that. We don't know what the Fed is going to do for certain.
Common sense.
But look, we have dramatically
summertime.
reduced inflation from 9% down to close to 3%. We're in a situation where we're better situated than we were when we took office, where inflation was skyrocketing.
That's exactly what I mean.
And we have a plan to deal with it, whereas the opposition, my opposition, talks about two things. They just want to cut taxes for the wealthy.
That's so funny. He had to bring up Trump. But no, he's saying.
And
you
so
know,
I think.
So why? Okay, I guess I just go over it and then it. Because I did not click it. Anyway, they're going to be cutting by the summertime. For anybody that comes on CNBC and says that the Fed does not have to cut, that's the stupidest thing I've ever heard. What do you want? You want things to just happen? You want them to cut late, like they will lose policy real late? Then you yelled at the Fed because why didn't you raise rates? Why weren't you raising rates? You were late. I could have did a better job. A lot of talking in the back, you know, about these people. So far, they've done their job.
We hope these discussions will unfold in directions that would be positive for both sides. Japan believes that appropriate procedures based on law is being implemented by the U.S. government. Japan is the largest investor to the United States. Japanese businesses employ close to 1 million workers in the United States, and investment from Japan to the U.S. can only increase upwards in the months and years to come. And we wish to cement this win-win relationship. Thank you.
I stand by my commitment to American workers. I'm a man of my word. I'm going to keep it. And with regard to that, I stand by our commitment to our alliance. This is exactly what we're doing, a strong alliance as well.
U.S. steel hitting a high of 42.25.
Prime Minister's
All right,
microphone, please.
There was something here on X. I don't know what happened, but X is popping off right now.
Kyodo News.
Looks like a buy trigger, though, if you ask me.
To both Prime Minister Kishida and President
I don't know
Biden.
if you can hear me or not, guys, but over the YouTube. But
at the summit, you confirmed your strong objections against unilateral attempts to change status quo by force or coercion
I don't know.
by China and agreed on reinforcing response capabilities. Under current circumstances, should Japan and the United States bolster defense capabilities, China may become more preoccupied in military expansion and intensify its coercive behavior. That is the risk of dilemma. In order to avoid divide and expand. Avoid the divide, how should Japan and U.S. respond? Let me then take that question first. At this summit, we confirmed that the United States and Japan will resolutely defend and bolster a free and open international order based on the rule of law, and that Japan and the United States as global partners shall work together for that purpose. On challenges concerning China, including the point you raised on objecting to unilateral attempts to change status quo by force or coercion, we concurred that Japan and the United States as global partners shall work in close coordination. And also, as I said previously, we will continue our dialogue with China, and we will cooperate with China in tackling common challenges. And the President and I confirmed the importance of such dialogue as well. Based on the solid trust with our ally, the United States, we will continue to call on China to fulfill its responsibilities as a major power.
I wish I'd have held that Roku.
Japan's policy.
It sounds like somebody's talking behind them, doesn't
which
it?
I have consistently embraced.
Or that's actually him. That's him.
Promote the mutual strategic relationship we have with China, and establish a constructive and stable Japan-China relationship through efforts by both sides.
I want to see what Roku I had.
That has been my consistent position that I have upheld. We will continue to seek close communication with China at all levels.
Orders.
That's it for me.
First of all, we keep improving our lines of communications with one another. That's the United States and China. I've recently spoken at length with President Xi, and we've agreed that we would, number one, have personal contact with one another whenever we wanted to discuss anything, so there'd be nothing slips between, as they say, between the cup and the lip.
It is really
so
nice
we know
out
exactly
here.
what the other team is thinking. Number one.
DC,
And so we had a
where I'm
long
at,
discussion last,
area.
almost 2 weeks ago now. And the best way to reduce the chances of miscalculation and misunderstanding. That's number one. Number two, in our alliance we have with Japan is a purely defensive in nature. It's a defensive alliance. And the things we discussed today improve our cooperation and are purely about defense and readiness. It's not aimed at any one nation or a threat to the region, and it doesn't have anything to do with conflict. And so this
It's
is
strictly
about restoring
defensive.
Stability in the region.
Not
and
conflict.
I think we have a chance of doing that.
Defensive? You fuck around, you're gonna find out. Not
Third,
conflict.
next question. Who I
Look,
call
I'm not.
next? Hang on a second. I got my
Don't
list.
come out the woodworks and attack me now.
Hang on. I apologize.
You know.
Aurelia of AFP.
Thank you. My first question would go to both of you, Mr. President and Mr. Prime Minister. Is there a
Yes,
path for
we
Japan
absolutely
to
should
become
be
a full
together.
member
Absolutely.
of AUKUS?
I don't disagree
and
with
I
that.
would have a second question for you, Mr. President. You're now saying that Benjamin
Oh,
Netanyahu is making a mistake in
I was
Gaza.
checking Roku. What
What are you
happened?
willing to do to
Bro.
make him change his strategy? And would you consider
I got so scared that I thought my
conditioning
phone just
military
like
aid to
literally
Israel?
not like
Thank you.
died. Like died.
Thank you. Your question about AUKUS, I will respond. Our country, we want to contribute to the peace and stability of the region, and therefore we have consistently supported AUKUS. Having said that, the participants of AUKUS, US, UK, Australia, with such countries by bilateral relationship or on multilateral occasions, we have established various relationships. But for Japan to have a direct cooperation with AUKUS, nothing has been decided at this moment. Going forward with US, UK, or with
So
Australia,
these things are
with
still
such
up.
countries in bilateral or
Over
multilateral
100%,
frameworks,
and it's just
we will
a lot of time's
continue
been sucked out of it.
our
They were 90 cents
cooperation.
this morning.
So
up here.
that will continue to be considered.
That's crazy.
At
I should have
the
kept it on.
moment, about the relationship between Japan and
Dude,
AUKUS,
ton of
that's
winning trades, man. That's crazy.
With
Just
regard to
the analysis is on
my
point.
discussions
On
with
point.
Netanyahu, Prime Minister Netanyahu, as well as our relationship with Israel. I have been very blunt and straightforward with the Prime Minister as well as his war cabinet as well as the cabinet. And the fact of the matter is that Bibi and I had a long discussion. He agreed to do several things that related to, number one, getting more aid, both food and medicine.
So it does
into
look like the
Gaza,
spy is going to
and
just like
reducing
sit
significantly
right
the
around
troops
where we opened up at today
civilian
for the Fed
casualties
minutes.
in any action taken in the region.
Let's see if we
And
get a
thus
little bounce
far,
here.
And it's tied to the hostages. There are a number of hostages that are being held by Hamas. And just yesterday, we're meeting with the Vice President, our National Security Advisor before that. And they're American hostages as well. And they know how committed we are, the whole team, to getting their loved ones home. We're not going to stop until we do. The new proposal on the table, Bill Burns led the effort for us. We're grateful for his work. There's a now up to Hamas. They need to move on the proposal that's been made. And as I said, we'll get these hostages home where they belong, but also bring back a 6-week ceasefire that we need now. And the fact is that they're getting in somewhere in the last 3 days.
It
over 100
really
trucks. It's
feels
not
like
enough,
there's a lot
but
of
needs to
small
be
caps
more,
popping
and
off
one
right
more
now.
opening that
There's a
has to
lot
take
going
place in
on.
the north. So we'll see what he does in terms of meeting the commitments he made to me.
Something selling tumors. It was given Monday or something.
Mr. Shimizu, please.
I don't know what the float is. This
Thank
thing
you.
could go. That's
Shimizu
some
of
serious
NHK.
news.
I ask the question to both of you. As Prime Minister Kishida mentioned, the abduction issue of North Korea, I believe, was discussed. Prime Minister, you have expressed your wish to have a direct engagement with Kim Jong-un, but they say that abduction is already resolved, which means that they are refusing. During the meeting, what did you tell President Biden about the outlook of a summit? And
that's a good one.
What engagement did you ask President Biden? President Biden, my question, what did you hear from Prime Minister Kishida?
He
and
said,
what is your observation and feeling?
I want you to tell me everything
with the nuclear
because
missile issues.
I
What
think
is your
you're playing
position?
with us.
Do you support early summit between Japan and North Korea? Thank you. First of all, if I may start.
Look. The Japan guy had to get in.
My summit meeting with President Biden.
That was a good question.
About North Korea, including the missile and nuclear issues we have discussed, and regarding the increasingly worrying situation, we have agreed to continue a close coordination. And on top of that, we concurred that the window of a discussion with North Korea is open, and we discussed that Japan, US, and ROK will continue to work closely together. I also asked for the continued understanding and cooperation for the immediate resolution of the abduction issue, and President Biden once again gave myself a very strong assurance. Regarding the recent announcement by North Korea, I will refrain from commenting on each and every announcement by North Korea, but as I have been mentioning repeatedly, based on
Kava's down 7%.
Establishment of a meaningful relation between Japan and North Korea is in the interest of both Japan and North Korea, and that it would be hugely beneficial to the peace and stability of the region.
So be careful.
My policy is
Meta Platform announces next-gen AI
for a summit meeting with North Korea to resolve various issues, and will advance high-level consultation directly under my instruction, and that remains unchanged. That is my response.
We did discuss this issue, and we both agreed that DPRK must also address the serious human rights and humanitarian concerns of the international community, including the immediate resolution of the abduction issue. But you know, the Prime Minister has just spoken to the potential what his plans may mean, but I welcome the opportunity, we welcome the opportunity of our allies to initiate dialogue with the Democratic Republic of Korea. So I've said many times, we're open to dialogue ourselves at any time.
It's about time.
So I have faith
Y'all didn't want to give them a chance.
Japan. I have faith in the Prime
This is
Minister,
what we need. And I think they're seeing that.
with them is a good thing.
The same stuff I get yelled about with North Korea and stuff, and about how, you know, at least the last administration tried to go over and do peace. Look, now that is what he's saying.
Everybody holler at once?
We're trying to do the good dialogue. We're not just going to consider you an enemy. That's what we need. And I think they're realizing that. So they want the votes.
Elect me.
And they
I'm
should.
in the
See?
20th century. 21st century.
He's starting to sound
Not
a little.
back then. They weren't even a state.
Sound a
I
little.
find-
You know what?
Thank you. Thank you all very much. Thank you.
I'm hungry.
The war in Ukraine comes to an end by the House leader allowing a vote. There's overwhelming support for Ukraine among the majority of Democrats and Republicans. There should be a vote now.
Yo, I want to hear that. She made a comment about banter or something. He said, "That's funny. That's funny." He said, "Fuck." He said, "You forget who I am? I come over there and you up right now, and not a damn thing gonna happen because I'm the president." I'm just kidding. That wasn't funny, but it's true. He talked right back at her. He said, "Banner my you know what." Okay, come on. want to hear what he said.
Not back then. They weren't even a state. I find.
So how does the war?
By the house, the war in Ukraine comes on by the house.
Listen, I'm going to turn it up. So watch your speakers. I want to hear what he said. Shit.
President Biden said there is no ban on LNG
To Japan. To Japan.
Oh, okay. Ah. All right. Well, that's cool. Same old song and dance. Odell Prez. Let's see here. So look, Meta actually is setting up kind of interesting, guys. Oddly, I think I went to go long Meta. Oh shit. We need a near-term pullback though. Shit, I can't get this chart the way I want it. Yeah, look at that little cup and handle that it has. Now we just got to make sure we do our work and make sure that this is what we see and don't get played. All right, let's not play ourselves here. Guys, I got to be honest. I felt like that was the entry right there. I think I do want to go. Oh my gosh, bro, come on, not again. Oh my goodness. Guys, I'm gonna say this right now. I like Meta. Meta does look good. Meta is looking really bullish right now, and it's actually up on the day. It's up 0.7%, while everything else is down on top of it. It's a nice recovery here. Let's see here. Let's go look and see what the options are. I think you're going to try to get a rally here, like right now, into the end of, into the high a day. It just would not surprise me. Look, it's doing it right now. Like, why every single time, as soon as I bring it up, it tries to happen. But I think that it's going to go up here and literally go right around this area, maybe a little bit higher. Let's pull it back a little bit. What I'm getting at is, like, I would like to see it's consolidating, so it's not going to pull back. You know, the consolidation is the pullback in a scenario like this. Okay? So therefore, the more time that runs off the clock, you start seeing candles like this. People are getting a little, they're like, okay, I can't take enough. Like, it's going higher. I realize it. They just realized it. They're covering their short, possibly. That, you know, people are, you know, buying it. They're hoping that it goes higher, or they're covering their short position, whatever it is. But I kind of like this. I would like to try and get it tested at 531.50, 530 area. I haven't traded Meta in a long time. I have not traded Meta in a long time. It's crazy that this is even at $500 and some dollars. Back in the days of trading it at like 2 something, 1 something, this thing's at $500. Unbelievable. I really did myself a disservice by not picking up Meta shares. I really did. Guys, you guys could have got this nearly at the IPO price, in that, like, just above that area, and you're up to $500. $500. Okay, never mind. 17 after, yeah, never mind. I take that back. But still, that level there, man, that's crazy. Oh my God, it's 2 o'clock.
Disappointing to Fed officials. Officials saw high immigration fueling demand for housing.
Oh my gosh.
Forecast on higher immigration. Prepare a slower pace of Treasury runoff fairly soon.
See, look, they reiterated balance sheet runoff very soon, it said.
FOMC meeting minutes.
Oh my gosh. I can't believe this, guys. I'm so sorry. I didn't realize the time. January, February, March, April.
S&P futures now at
I don't understand. Okay, April 10th, PDF. All right, so let's go through this real quick.
Fed minutes.
All right, so developments of the financial market. First review developments in the financial over the intervening period of U.S. financial conditions had eased modestly since the January FOMC meeting, with higher equity prices more than offsetting increases in interest rates. Nominal Treasury yields had risen over the intermittent period. At shorter maturities, most of the increase was attributed to a raise in inflation compensation, prompted by indications that the decline in inflation was proceeding somewhat more slowly than markets in recent months had been expecting. Sorry, that sounded like a weird sentence. In contrast, at longer maturities, much of the increase in the U.S. Treasuries was due to a rise in real rates, reflecting solid labor market readings and stronger than expected data in the economic activity. The manager turned next to policy rate expectations. An estimate of the expected federal funds rate path derived from futures prices shifted up significantly over the intermittent period. The model federal funds rate path implied by options priced at had also risen, but by substantially less than the futures implied path. The move up in futures implied a path reflected in a part of some shift in expectations toward policy rate cuts beginning later in the year and accumulating to a smaller rate reduction in 2024 than previously assessed. Okay. Investors also appear to have considerably lower the perceived probability of the more substantial rate cuts than in their baseline expectations. So that means they've kind of cut their stuff. This lowering was evident in significantly more concentrated probability distributions for the federal funds rate over coming quarters. The changes in policy rate expectations over their intermittent period occurred in the wake of stronger economic data. Perceptions that disinflation might be proceeding more slowly. Staff addressed that over the intermittent period. The federal funds rate the federal funds rate continued to be insensitive to day-by-day changes to the supply of reserves. The outcome, together with various other indicators of reserve conditions, supported the conclusion that reserves remained abundant. The manager noted that there were nevertheless significant uncertainty about the demand for reserves, and that under the current pace of the runoff Federal Reserve securities portfolio, stabilization into the on RRP balance would all else equal cause reserves to start declining at a rapid rate. By anonymous vote, the committee ratified the domestic transactions over their intermittent period. There were no intervention operations in foreign currencies for the system's account during the intermittent period. If I had $1 for every time they type intermittent period. Anyway, considerations for slowing the pace of balance sheet reduction. This is what we want to see. Participants began to discuss related to slowing the pace of the balance sheet runoff, consistent with committee's plan for reducing the size of the Federal Reserve's balance sheet. Announced in May 2022, those plans indicated that in order to ensure a smooth transition, the committee intends to slow and then stop the decline of the size of the balance sheet. when reserve balances are somewhat above the level it judges to be consistent with ample reserves. All right, which is important. That's very important right there. All right, so let's go back and look. All right, so we're getting a little bit of volume. Okay, so here we go. Be consistent with ample reserves. Since balance sheet runoff began in June 2022, the Federal Reserve's total security holdings had declined roughly $1.5 trillion in light of the ongoing sizable decline in the balance sheet and the prospect of more rapid decline in reserves balance. Participants agreed that their discussions at this meeting would help inform the committee's future decision regarding how and when to slow the pace of the runoff. No decisions about the adjusting pace of balance sheet runoff were made at the meeting. The participants discussed was preceded by staff presentations. I want to see the presentations. The staff reviewed the 2017-2019 balance sheet runoff. So take that for what it is. I'm going to read this slow so you guys can understand what it is. If you guys can't see it, let me know. I'll pull it in a little bit more. The staff reviewed the 2017-2019 balance sheet runoff episode and the lessons learned from that experience, including the importance of monitoring money market conditions in light of uncertainty surrounding the level of reserves consistent with operating in an ample reserve regime. The staff presented a set of simulations in which the current monthly pace of securities runoff was reduced to illustrate how the choice of when to start slowing the pace in runoff could affect the path for the balance sheet and the reserves balances. See, I knew it. Right there. The staff presented a set of simulations in which the current monthly pace of securities runoff was reduced. To illustrate. Not, let's go more into this. Let me, describe some of the things that she was doing. Like, what were the formulas and what was the amount? What did it look like? How long was it? How much? Okay. That was all given. So far, we have nothing. We have nothing. But we do have 2017 to 2019. We do have that. Okay. So we'll take that for what it is. Maybe we'll look at it at a percentage-wise, see how much of a percentage gain that we are from now, from then, and we'll try to, let's say they ran off, I don't know, we'll have to look, just say 3% over 2 years, and if we've, from a balance sheet that's exceeded 10%, then we'll do the same. If we went 20, we'll say, okay, we'll take, make it to, cut it in half, make it to 10, do the 3. So, because that's what the Fed's doing. They're looking at then, so I'll talk about that more later on. The simulation showed how various options for when the slow pace of the runoff could affect duration. Oh my God. Yes, right here. Let me let her. All right, so each level expected phases on the transition to ample level of reserves. So that sucks. They did not shed light on that at all, which stinks. They could have done so. We got 2017, 2019. I'll read more into it. So look, we're just flat right now. We're not moving. So I'll go back to it. All right, so participants observed that balance sheet runoff was proceeded smoothly. Nevertheless, taking into account the experience around the end of 2017-2019 balance sheet runoff episode, participants broadly assessed it would be appropriate to take a cautious approach to further runoff. The vast majority of the participants thus judged it would be prudent to begin showing the pace of runoff fairly soon. Maybe we'll get at the next meeting the amount and when. The vast majority of participants thus judged it would be prudent to begin slowing the pace of the runoff fairly soon. Most of these participants noted that despite significant balance sheet reduction, reserve balances had remained elevated because of the decline in usage of the ONRRP facility had shifted Federal Reserve liabilities towards reserves. However, with the extent of Future declines on RRP take up becoming more limited. Further balance sheet runoff will likely translate more directly into declines in the reserve balance, potentially at a rapid pace. In light of the uncertainty regarding the levels of the reserves consistent with the operating in an ample reserves regime, slowing the pace of the balance sheet runoff sooner rather than later would help facilitate a smooth transition from abundant to ample reserves balances. Slower runoff would give the committee more time to assess market conditions. As the balance sheet continues to shrink, it would allow banks in short-term funding markets more generally additional time to adjust to lower levels of reserves, thus reducing the probability that money market experience undue stress that could require an early end to runoff. Therefore, the decision to slow the pace of runoff... decision to slow the pace of runoff does not mean that the balance sheet will ultimately shrink by less than it would otherwise. Hold on. I'll have to read that again. Rather, a slower pace of runoff would facilitate ongoing declines in security holdings. A slower pace... Oh, this is not good. Consistent with reaching ample reserves, a few participants, however, indicated that they prefer to continue with the current pace of the balance sheet runoff until market indicators began to show signs that reserves are approaching an ample level. All participants emphasized that the importance of communicating that a decision to slow the pace of runoff would have no implications for the stance of monetary policy, as it would mean implementing one of the transitional steps previously announced in the committee's balance sheet plans. Oh, man. In their discussion regarding how to adjust the pace of runoff, participants generally favored reducing the monthly pace of runoff by roughly half of the recent overall pace. Okay, we got some insight. With redemptions of agency debt and agencies' mortgage-backed securities, MBSs, expected to continue to run well below the current monthly cap, participants saw little need to adjust this cap, which also would be consistent with the committee's intention to hold primarily Treasury securities in the longer run. Accordingly, participants generally prefer to maintain the existing cap on agency MBS and adjust the redemption cap on U.S. Treasury securities to slow the pace of the balance sheet runoff. Participants also shared their initial perspectives on the longer-term aspect of balance sheet runoff policy beyond more immediate issues concerning the slowing pace of the runoff. Although they saw current levels of reserves as abundant, participants emphasized the underlying uncertainty about the level of reserves consistent with operating in an ample reserve regime. They noted various price and quantity metrics that they saw as important real-time indicators of conditions in long-term funding markets that could provide signals that reserves are approaching a level somewhat above ample. Some participants also mentioned the importance of both the discount window and the standing repo facility as liquidity backstops as reserves decline. Many participants commented on aspects of the composition of the Federal Reserve security holdings, including the appropriate longer run maturity, composition of the system open market committee account portfolio, and options to achieve in the longer run a portfolio that consists primarily of Treasury securities. I knew that was one. Staff review of the economic situation. Okay, this bottom right, okay, you go to page 4. In my opinion, page 4, this whole area at the bottom right of page 4 gives you this whole area right here. This is the kicker. I'll go back over it in depth. Let's see if the market's selling off. It's hanging out. They're still reading it. Conditions for slowing the pace of the balance sheet reduction. Participants began a discussion related to showing the pace of balance sheet runoff. Wait, no, we already read that. Okay. Staff review the economic situation. So you're going to get insight on what they feel about the economic situation, like things in general that are going on. The information available at the time of March 19th, meeting, March 19th to March 20th, meeting suggests that the U.S. real gross domestic product, GDP, was expanding at a solid rate. in the first quarter. Although slower than its robust fourth quarter pace, labor market conditions remained strong in recent months. CPI, as measured by the 12-month change in the price index for personal consumption expenditures, PCE, continued to trend down, though it remained above 2%. Labor demand. Why are they bringing up CPI when they say, oh, we don't watch CPI? We don't care about CPI. Labor demand and supply appeared to continue to move into better balance. Although recent indicators were mixed, the total non-farm payroll employment increased at a faster average monthly pace over January and February than in the fourth quarter. Wow, that's actually pretty crazy. So Christmas, October, Halloween, Thanksgiving, the rate of turnover on non-farm payroll was bigger January and February than in the fourth quarter. That's pretty crazy. For calls of people working. You have a reason for people to be working Christmas, Thanksgiving, Halloween. In contrast, unemployment rate edged up to 3.9% in February, while the labor force participation rate to employment population ratio were essentially unchanged. The unemployment rate for African Americans increased, and the rate for Hispanics was unchanged. Both rates were higher than those for Asians and for whites. The private sector job openings rate and the quits rate were little changed in January, and both rates were far below their year earlier levels. The 12-month change in average hourly earnings for all employees was essentially the ongoing energy shock. Hold on. Inflation and the ongoing repercussions. Okay, yeah, so right here. Employees was essentially the same in February as it is the end of last year, and it remained well below the level of a year ago. The wage growth tracker constructed by the Federal Reserve Bank of Atlanta was lower than the past 2 months than the reading last year. CPI continued to decline, but recent progress was uneven. Total PCE prices increased 2.5% over the past 12 months, ending January, while core PCE price inflation, which excludes changes in the energy prices and many consumer food prices, was 2.9% over the same period. Both of those 12-month measures continued to trend down. Although the month-over-month readings for January had moved up, the trimmed mean measure of 12-month PCE price inflation constructed by the Federal Reserve Bank of Dallas was 3.2% in January, lower than its level a year earlier. So they're seeing a decline in the formula they use for PCE that you guys don't see or get talked about on CNBC over the last 12 months. So that's a good sign. But then why are we being... Okay, so I want to know when... is this the order in which things had taken place? Because if they're talking like this and bringing up those facts, then why are they talking about this the way that they're talking about this? This is as in the balance sheet runoff. Okay, so over the last 12 months ending in February, the consumer price index increased 3.2% and core CPI rose 3.8%, both 12-month measures, probably they're just throwing numbers out there. Have firmed a bit. So let's see what they say. Recent indicators suggested that real GDP was increasing at a solid pace for the first quarter, although more slowly than its robust fourth quarter rate. Incoming data pointed to some slowing in PCE growth, and expenditures declined in January, and the components of retail sales data used in estimate PCE were soft in February. January's readings on orders and shipments of non-defense capital goods, excluding aircraft and non-residential construction. This is why I brought up aircraft and the tariffs a couple days ago when y'all were yelling at me. So business fixed investment. So in contrast, starts and permits for single-family homes in January and February pointed to a modest pickup in residential investment growth. Real exports of goods stepped down in January relative to December, following a rapid growth last quarter. By contrast, real goods imports picked up in January as higher import capital goods, automotive products more than offset lower imports for consumer goods. Guys, I'm sorry I'm trying to hurry up because I'm trying to get back to the market. So I have an idea what's going on. And have a reason why the market does what it may or may not do going into the afternoon. It's only 2:19 right now. So as goods and services imports expanded more than exports, which increased only slightly. Okay. In contrast, strong U.S. GDP growth in fourth quarter, economic growth in foreign economies was generally weak amid tight monetary policy, the erosion in real household incomes from high inflation, and the ongoing repercussions of the 2022 energy shock in Europe. More recently, Purchasing Managers Index in Europe through February and other indicators provided tentative signs of some firming in the region's economic activity. They have interest rate decision tomorrow. Christine Lagarde is her name. That is Europe's Powell. In China, economic data for January and February were somewhat mixed, although exports, investment, and industrial production were strong. Household demand remained depressed amid China's ongoing property sector slump. On the other hand, some economies in emerging Asia performed well, in part reflecting strong demand for leading-edge semiconductors. I was about to say Taiwan Semiconductors. Literally about to say that. And they just came out today saying how well they were doing. Foreign headline inflation picked up early in the year as downward pressure from previous energy prices waned, and some emerging markets economies, EMEs, experienced renewed food price pressures due to adverse weather. I noticed they're doing the same with my girl's cat food. Most major foreign central banks, when I say my girl, I mean my little girl and my cat, Abby. Most major foreign central banks kept their policy rates unchanged over the intermeeting period and emphasized the need for greater confidence in inflation that was falling back to target before easing policy. All right, staff review of the financial situation. Over the intermeeting period, the market implied a path for federal funds rate through 2024, increased markedly. I don't even know what the hell that is. Markedly. I don't know. Reversing the declines that had occurred since late last year, consistent with the increase in the implied policy rate path. Intermediate and longer-term Treasury yields moved up over the period, with larger increases concentrated at shorter maturities. Most of the increase in short-term Treasury yields were attributed to a rise in near-term inflation compensation. Market-based measures. Look at that gap right there. That's what I was telling y'all right here. That big gap. That's what Tesla and crew did. This is how, when they hand it out, they can find out who got what paper, and they can locate, okay, this was released early. It was you. Jan, we told you not to send it out early. Stop leaking that shit. You pretty much signed this paper because you got the 3 spaces past the sentence. This is how they locate if people were to send this out early. Their name's on this with this type of space. Everyone has a different paper. This is what I was talking about a few days ago. All right, this is how they find people that try to backstab. Anyway, market-based measures of near-term interest rate uncertainty for shorter-term yields remain elevated by historical standards, in part reflecting investors' continued uncertainty about path of policy rates. Despite the rise in interest rates, broad stock price indexes increased notably amid upbeat corporation earnings reports, particularly for the largest firms. Yield spreads on investment-grade corporate bonds were little changed, and those on speculative-grade bonds narrowed slightly. The 1-month option implied volatility on the S&P. They probably read this already. Look, it's already starting to go down. They probably just got to the financial part. Okay. Oh man. Okay. Okay. So here we go. Look. We got Bank of Japan. Changes in foreign. So that's the other thing we cannot forget is the BOJ, the Bank of Japan, and their. They have not had positive interest rates in years. Okay. They're about to change. Things are about to change. All right. There is no arbitrage like that. This makes it harder. There is arbitrage, but it's a lot harder when you can't just go to Japan, where you can't throw Japan in the mix. Okay, so changes in foreign financial asset prices over the intermeeting period were largely driven by spillovers from U.S. financial markets. Risk appetite generally improved, leading to increases in foreign equity indexes and a narrowing for EME credit spreads. Short-term yields in the AFE were also boosted by less accommodative. That might have been the word, accommodative. Is the Fed being accommodative? I think that's the word I was looking for a bit ago, earlier today. That's it, guys. Accommodative, I think. Then expected communications drew up central bank officials' longer-term AFE yields and the broad dollar index were a little changed. All right. As at its meeting on March 19th, the BOJ exited negative interest rate policy and increased its overnight policy rate from negative 0.1% to a range of 2.1%. Not 2, but 2 to the 0.1% range. All right, this policy rate hike was the first by the Bank of Japan in 17 years. The Bank of Japan also ended its yield curve control policy, but indicated that it would continue bond purchases. The changes were widely expected and market reactions were limited. Conditions in U.S. short-term funding markets remained stable over the intermediate period. Usage of on RRP facility continued to decline. However, the decline in average take-up was less than two previous periods, suggesting that a rate of decline could be slowing. The continuing in on RRP wake-up primarily reflected money market funds, MMFs, ongoing reallocation to assets to Treasury bills amid continued bill issuance and relative attractive bill yields. There's a difference between bonds, bills, and the name of them is different for each year. From like a 1 to 2, a 2 to 5, a 5 to 30. Okay, that's just what it is. I'll have to show you guys that stuff later. Conditions in U.S. short-term, I don't know if you guys knew that or not, right? You buy a 2-year, you're like, yo, can I get that 2-year bond? They're like, I can give you a 2-year bill. Anyway, conditions in the U.S. short-term funding markets remain stable over the intervening period. Usage of continued to decline. However, the decline in average take-up was less than two previous periods, suggesting the rate of decline could be slowing. Okay, FOMC meeting. CMB's, MBS's credit continued to be available to most businesses, households, and municipalities. We know this because financial conditions are eased. Okay, that's why I look at that financial condition chart. Large non-financial corporations continue to find credit generally accessible. Capital market financing was robust during the intermeeting period, while commercial and industrial loan balances expanded modestly. For small firms, loan originations were stable despite the tightening of credit standards. Credit standards never got tighter. What are you guys talking about? That is a lie. That is a lie. They got a hair tighter, but they are still negative. Okay? It's true. And I'll show you guys. Right here, January to February. Or January to March. They're just pretty much unchanged. So don't say that it got tighter. Because it hasn't. Maybe, you know what? I mean, I feel like there's more. Oh my gosh. Bro. What is going on here? Dude. There we go. Good deal. Oh my gosh. Oh my goodness. Oh my goodness. That site's hard to use. Anyway. Credit continued to be available. Staff economic outlook. Okay. The economic projection prepared by the staff for the March meeting was stronger than the January forecast. The upward revision of forecast preliminary reflected the staff's incorporation of higher projected path for population due to a boost from immigration. The lagged effects from earlier monetary policy actions through their continued contribution to tight financial and credit conditions were still expected to hold output growth in 2024 below the staff's estimate of potential growth. As those policy effects waned, output was expected to rise in line with the potential 2025, 2026 The unemployment rate was forecasted to remain roughly flat over the next several years. PCE, total and core PCE price inflation were both projected to edge down 2024, ending the year around 2%. So the Fed thinks 2.5% year end as demand and supply product and labor market continue to move into better balance. By 2026, total and core PCE inflation were expected to be close to 2%, if not flat. Pretty much. They left out the flat part, but the staff viewed uncertainty around the baseline projections as close to average over the past 20 years. As uncertainty was judged to have diminished substantially over the past year, risk around inflation forecasts were soon. I have not seen anything right here. Okay, so look right here. Maybe it's right here about like things going on from developments domestically or abroad, and unexpected persistent inflation dynamics could materialize. The risk around the forecast for economic activity were viewed as skewed too little to the downside, as many substantial setbacks in reducing inflation might lead to a tightening of financial conditions that would slow the pace of economic activity by more than the staff anticipated in their baseline forecast. So keep an eye on financial conditions. Seriously, that right there is telling you to pay attention to it, because it starts tightening up and it starts heading higher and they start tightening. You're going to start seeing that lag effect. All right, participants' views on current conditions and the economic outlook. In conjunction with the FOMC meeting, participants submitted their projections of the most likely outcomes for real GDP growth, unemployment rate, and inflation, blah, blah, blah. Okay, so here we go. It should be 2%. I don't really care what their projections are. Okay. Like we kind of get the... I don't need to know what they're... I'll have to read this again. Okay, committee policy actions. Standing government repurchase agreement. Man, this is so much. I'm going to have to read it later. Page it. Why is this one so... Adjustment region field. All right, so my biggest takeaway is balance sheet runoff. They mentioned Bank of Japan. All right, they mentioned Bank of Japan. But page 4, bottom right, go back and read it. Just read this section, okay? Developments in financial markets and open market operations. That's not it. Considerations. This is the section right here. It's on page, I think it starts page 3. No, page 4. Considerations for slowing the pace of balance sheet reduction. Probably one of the most important things I wanted to hear about today, because it's the first time it's been mentioned since the last time they mentioned it, which has been a while ago. And the last time they mentioned it, they were talking about tightening. Now they're talking about stopping. So this whole thing here is just, I would say page 4 on the right hand side. Participants observed, let me look at the markets real quick. Okay, so we're all right. Participants observed that balance sheet runoff was proceeding smoothly. Nevertheless, taking into the account the experience around the end of 2017-2019 balance sheet runoff episode, participants broadly assessed it would be appropriate to take a cautious approach to further runoff. We need to relax a little bit in case we start getting liquidity issues and we over tighten. That's what that sentence is saying. The vast majority of participants thus judged it would be prudent to begin slowing the pace of runoff fairly soon. Most of these participants noted that despite significant balance sheet reduction, reserve balances had remained elevated because the decline in usage of the ONRRP facility had shifted federal funds liabilities towards reserves. However, with the extent of future declines on RRP take-up becoming more limited, further balance sheet runoff will likely translate more directly into declines in reserve balances, potentially at a rapid pace. In light of the uncertainty regarding the level of reserves consistent with operating in an ample reserves regime, slowing the pace of balance sheet sooner than later would help facilitate a smooth transition from abundant to ample reserve balances. Slower runoff would give committee more time to assess market conditions as the balance sheet continues to shrink. It would allow, so they're pretty much taking money from one place, putting it in another, and then taking that money from that place and just putting it right back in that place. That's it. They just going from, I'm going to take my money from Tasty Trade, and I'm going to put it into Thinkorswim or whatever. I don't know. Okay? So that's really all that's saying. So it would allow banks and in short-term funding markets more generally additional time to adjust to the lower level of reserves, thus reducing the probability that the money market experience undue stress that could require an early end to runoff. Therefore, so they're talking about the liquidity. There could start to be problems, and we want to, that's what we don't want. Therefore, the decision to slow the pace of runoff does not mean that the balance sheet will ultimately shrink by less than it would otherwise. Why would it shrink if you're stopping? Rather, a slower pace of runoff would facilitate ongoing declines in securities holdings consistent with reaching ample reserves. A few participants, however, indicated that they preferred to continue with the current pace of balance sheet runoff until market indicators began to show signs that reserves are approaching an ample level. All participants emphasized that importance of communicating that a decision to slow the pace of runoff would have no implications for the stance of monetary policy, as it would mean implementing one of the transitional steps previously announced in the committee's balance sheet plans. Gets bigger. That's what I'm just saying. In their discussions regarding how to adjust the pace of runoff, participants generally favored reducing the monthly pace of runoff by roughly half from the recent overall pace, with redemptions of agency debt and agency mortgage-backed securities expected to continue to run well below current monthly cap. Participants saw little need to adjust this cap, which also would be consistent with the committee's intention to hold primarily treasuries securities in the longer run. Accordingly, participants generally preferred to maintain the existing cap on the agency MBS and adjust the redemption cap on the U.S. Treasury securities to slow the pace of balance sheet runoff. Participants also shared their initial perspectives on longer-term aspects of balance sheet policy beyond more immediate issues concerning slowing the pace of runoff. Although they saw the current level of reserves as abundant, participants emphasized the underlying uncertainty about the level of reserves consistent with the operating in an ample reserve regime. They noted various price of quantity metrics that they saw as important real-time indicators of conditions in short-term funding markets that could provide signals that reserves are approaching a level somewhat above ample. We got to start, guys. That's what that's saying. Some are saying that. Some participants also mentioned the importance of both the discount window and the standing repo facility as liquidity backstops as reserves decline. Many participants commented on aspects of the composition of the Federal Reserve securities holdings, including the approach longer run maturity composite of the system open market I don't know what to do with my hands. System open market account portfolio and options to achieve in the longer run a portfolio that is consistent or that consists primarily of Treasury securities. There's something going on here. So this is probably what led it to it. Was this here? All right. They brought up 2017. Okay. They brought up 2017 to 2019. Participants began a discussion related to slowing the pace of the balance sheet runoff. I wish I could have heard this discussion. Consistent with committee's plans for reducing the size of the federal balance sheet announced in May 2022. Those plans indicated that in order to ensure... See what I mean? It's been a long time since we've had this talk. This was the last time we got to talk where it's like we're going to start tightening up the balance sheet. We're going to start selling. All right? Not selling, but we're going to let it just run off. Just run off right into my pocket, and you ain't getting it back. All right. Those plans indicated that in order to ensure a smooth transition, The committee intends to slow and then stop the decline in the size of the balance sheet when reserve balances are somewhat above level it judges to be consistent with ample reserves. Since balance sheet runoff began in June 2022, the Federal Reserve's total securities holdings had declined roughly $1.5 trillion. In light of the ongoing sizable decline in the balance sheet and the prospect of a more rapid decline in reserve balances, participants agreed that their discussions at this meeting would help inform the committee's future decision regarding how and when to slow the pace of the runoff. No decision about adjusting the pace of balance sheet runoff were made at the meeting. Wait. No decisions about adjusting the pace of the balance sheet runoff were made at the meeting. Okay. The participants' discussion was preceded by staff presentations. The staff reviewed 2017-2019 balance sheet runoff episode, and the lessons learned from that experience, including the importance of monitoring money market conditions in light of uncertainty surrounding the level of reserves, consistent with operating of simulations in which the current monthly pace of the securities runoff was reduced to illustrate how the choice of when to start slowing the pace of runoff could affect the path for the balance sheet and reserve balances. Simulations showed how previous options for when to slow the pace of runoff would affect the duration. So I wish I could have seen these. Man, I hope I'm not getting sick, guys. I really do. I hope I'm not getting sick. All right, so let's go back to the markets. I'll go back and look at this in a little bit. I think, it's tough. I mean, I don't know. I wish we could have got a little bit more insight in that. Maybe I have to read it again. Maybe I'm going to have to, I don't know. All right. You guys know we live off the likes. I appreciate and love all of y'all. I appreciate everything. I'm going to give you guys my thoughts on this and what the market's doing. We want to watch. We're coming into Power Hour right now. Let me pull up the SPY. I don't know if I want to trade the SPY. I want to see how we close, okay? I got two thoughts here. If anybody's new here, welcome. Please hit that like button, subscribe. We do this for free. It shows that you guys appreciate it. Secondly, we get to 1,000 subscribers. I'm doing a really cool giveaway, and I can't wait to do that. I really can't. So the faster we get there, the faster I can. I'm thinking about 5 people, okay? Actually, I'm thinking about 5 people. It's a goal of mine to get there. And remember, we are all flawed. You know, we're all not perfect, but, you know, we will, and what I feel like I try to do, and I thought about it yesterday, and I keep it in my mind, is that we need to learn not, damn it, what did I can't even remember now. I said it earlier. We don't, holy cow, I'm having a brain whatchamacallit now. So this is exactly what I wanted to see here. How do we come into this close now? I don't know. What I'm trying to say is that, you know, that's it. We don't live in the past. We learn from the past. We don't live in the past. We learn from the past. Okay. So with that said, whether that's, you could use it for all kinds of things. You know, excuse me for the, you know, I was rushed this morning. I've been doing a lot of work. So excuse me for the way, you know, I'm not, you know, my appearance right now. But let's see what happens here. Are we going to close this candle red, and or are they going to hold this market up? Two thoughts. Are we going to close it just about flat? Number one, to see what PPI and what Europe does. Do we get these no rate cuts from Europe? The labor numbers tomorrow. Today's Wednesday, correct? Today's the 10th. So tomorrow, here's the thing. We have some decent data coming out tomorrow. Again, it's an action-packed 2 days. So be prepared for either a gap down, well, at least from like the 9:30 standpoint. You know, we could easily start to get another sell-off tomorrow, or we could kind of take this back. I can tell you guys right now, if for some reason Christine Lagarde, which I do not think she does, if she does start to hint, you know, I feel like she is just going to do what Powell does and what the U.S. does, ultimately. From everything that's going on in Japan to around the world, do they start to cut? Like, how bad is Europe? Like, how bad is that region? Does she feel that they need to cut a little bit or mention cutting coming up very soon, kind of like Powell hinted at? That's one. Two, they don't cut. Does the market, and we have the labor market numbers that come in still low, right? And the market's like, okay, you know, we think you guys are going to over-tighten. Does the market start to price in an over-tightening with everything we got today and what we're going to get tomorrow? That's the question. So it is up to you to come up with a strategy, or come in the day with no positions on, okay? Now, if something happens, don't be like, damn, I should have did this. Damn, I should have did that. Put yourself, you know, we did it yesterday. I'm not going to do it today because yesterday I felt like the setup, and I mentioned it yesterday, that the trade was to the downside, not the upside, in my opinion. So therefore, I wanted to have access to the downside and make sure that you're able to put the whatever type of thing you're going to do, make sure you do it correctly, right? If you're wanting to grab puts, make sure you're grabbing them on the highs, not the lows, and you get a rip right off the bell, and you could have grabbed them a lot cheaper. Are you going to play dailies? Are you going to look for Friday to give yourself more time? Are you going to look for next week? Are you going to say, well, I personally think, and I want to have access to the downside, so maybe the downside I go out till Friday, but the calls I go out till next Friday, or vice versa, right? Because if it works, you know, obviously you're hedged in more way than one, and that whether it's short term down or upside is going to pay you far more, and you still have time on that down or upside, if you guys know what I'm saying. Maybe I didn't say that clear enough. All right, what I'm saying, let's just say, for instance, maybe I'm like, man, I really think we come in by 9:30, that market opens, and I think we got a big downside. Me personally, I would say, okay, that VWAP projection, I would have taken that. Let's say not right now because it's still a little bit early. Just it's not even 3 o'clock yet. But what I would do, let's say if I wanted to capture downside, me personally, I would say, okay, I'm going to spend a little money on calls. Now, where do I want to buy the calls? Do I want to get it out of the indexes? Do I want to get it out of like Apple, Microsoft, Google? Google's nice and strong. And how does the price of those options and the delta of those options and the Greeks, right? What they tell you that it's going to be at, if it goes up $1, $2, $3, down $2, $3, where's that option going to be at in accordance to the volatility? If I think I want to give capture to the downside, maybe I take half of the position size, maybe a little less than half of the position size, like a quarter, and I buy calls out next week where I have time that if the market does pull back, I still have time. Okay. Second, the downside. Do I just take, 3/4, a little bit less than half of the position, like more so to the downside and short term? Okay. Kind of like a calendar spread, but we're buying instead. Like a calendar spread, but we're buying instead. Okay. So, there's a lot of different ways. Just use your imagination. I can do a video on different techniques and understanding the cycles, right? Like right now, what's going on? Energy and gold. So if you believe in upside, what does that mean for gold? Does that just... Or if we really get downside, we know when things get cracking, they get cracking and everything gets taken down. When in a real bear market, nothing stands a chance for the most part. Let's go run through the markets real quick and see if we can't make something happen. Let's see if we can't make something happen, rapping. Apple is flat. That's a good sign. I expected Apple to, the way it looked this morning, it was literally like just hurting, ready for some downside. But I feel like you have a lot of people taking the opportunity now to stuff a little bit and start to build a position back again in Apple. Okay? I think, it's your safe money. I don't know if they're going to have any new product. Like, you got to think, they just brought out their new product that they haven't had. It was, everybody was talking about it. They were pretty much sold out. And the stock is still down. When was it? February, March, when they released it? They talked about it for about a year or so. But, excuse me, I'm sorry. So that's Apple. I would think about trying to take some in the long term. That's up to you though. I'm not telling you to do anything. Okay, so here we go. Just slow grind down for Tesla, unfortunately. We've been trying to get it, guys. Let's see, because I looked at the next week 160 puts. Let's see where they're at. They're at 126, okay, from 80, it was like 90 cents, right? 90 cents to $1. So you'd be up like 20% right now. I don't know more or less if it paid you more or less anytime during the day. I would imagine I'm short hit maybe 130, 134, 132. But that's that. So... no support here. You have not made this level support. I want to see if we can try to get a reversal on Tesla down here, but it is fairly weak. It is fairly weak right now. Don't try to front run a move. I mean, you can, but you just have to understand the consequences to that. So that's a failed hold of that 20-day. All right, I seriously think we're going to test this range again. But we'll see. This is an area right here that that very well could lead to a hold and get a bounce off of here, but then you got to worry about rejecting that 20-day. So, Rick Reeder. Oh, I thought he was on CNBC. He's a BlackRock. Whatchamacallit. He manages fixed income.
Expected CPI, the major averages under significant pressure.
I'm going to scan the markets. If you guys have questions, post them down below. We're going to see if we can't give ourselves a nice shot here to make something happen.
They moved even higher midday after a bond auction. So
Questions, you guys have questions, anything, you guys want to talk about anything, throw it in the chat. You know, thoughts. I want to know your thoughts on FOMC, on the minutes, I mean. And, you know, what are your guys' thoughts going into tomorrow? The labor numbers, the, you know, rate hike decision, and things as such.
Rick Reeder,
things of sort.
Tweeting earlier, this was definitely a setback. That's the word he used. Does it change your view on the market? Does it change the game for the Bulls?
I'm not one of these I told you so people, but I told you we were going to play this game cut off, cut on. Today is a decidedly cut off day. It's exactly what you would expect to see if you think that we're set back from 3 down to 2, from June down to July. That's exactly what's playing out on your screen. This is what I would tell you. You got small caps being hurt the worst. Again, textbook for a cutoff day. The IWM is down 3%. The S&P is down 1%. Value underperforming growth. By the way, one of the only green stocks on my screen right now. NVIDIA, not a value stock. I don't know if you knew that. But the value stocks are taking it on the chin. And then you think about why.
Look, Taiwan Semiconductor still going down. Down, down, baby. No spinning around. Now let that go.
Small cap side, consider 40% of debt held by Russell companies is floating rate versus.
What was it, like $1? $1 something? See, I don't know which ones we were looking at. I'm not sure if they even went up because it's moving so slow. Alibaba.
None of these rate panics have been a lasting hurdle for the S&P 500. We tend to process these things over 48 to 36 hours, and we will be back to the original game we were playing, and I think what you're seeing today is counter trend. The number one debate now, as silly as it sounds, is June versus July. The number two debate is 2 versus 3 in 2024. So let's say they go in July and they can't go in June. When's the next opportunity? They're not going to go in September, too political, can't do it in front of the election. So you get July, December. Those are your two cuts for 24. If that's a reason to not buy any of the stocks that you want to buy, I can't figure out that connection. So I think for the allocator that's watching this action, I think you're looking at an opportunity to get long, not to panic because you're getting slightly less relief on the interest rate side.
Okay, so you then don't think that today marks some kind of game changer for a rally that started at the end of October, has set new records.
I think it's going to mean downside. I don't know what Josh is talking about.
Along the way, the greater trend is.
Did he read the Fed minutes?
If you're one of these people who piled into semis in the last 2 weeks, forgetting that they're cyclical, it's certainly every single component of the SMH is down today, except NVIDIA. So yes, if you chase the momentum trade because you thought rate hikes were going to continue to fuel it, maybe it's a game changer for you. I think most people have not been playing that game. I think for most people, they're in a good position. They're looking at the rest of their portfolio. Some of it's very rate sensitive, some of it isn't, and they're just fine on a day like today. And I don't think, materially, anyone would really say, like, oh, my whole investing outlook for the next year has now changed.
But if your investing outlook for the next few months was, I'm going to ride the broadening trade because that's been working. You have a number of big name stocks within a broad group of sectors that have been hitting new highs. Do I need to rethink?
S&P is still at 22 times earnings, so yeah, I don't know. Looks like a nice rejection could be happening right now on Amazon, and it could start right now. See if we break VWAP right now. See if we break VWAP on Amazon. I don't know. I mean, it's not going to... I don't know if it gives you like a crazy continuation. It's at yesterday's close, but just an idea. Long-term pullback to that 181.
Well, earnings
180.50 area, 180,
That's the thing
180,
that's gonna remind
181.
people, oh yeah, this rally was not predicated on the Fed getting easier. This rally was predicated on the fact that last quarter, finally, we returned to nominal earnings growth after 3 straight quarters of earnings decline. And this quarter that we're in right now is supposed to be the second quarter continuing that trend. That's why I'm long. I want to be in the market for the fundamentals. Not look, how insane is it?
He makes a good point.
You're upset today
Kinda.
because the economy is too good for the Fed to rescue it? What are we
Right
doing?
here.
What are we even talking about? So I think if your mentality is, I want to make a quick 5% on a Fed rate cut, I don't speak that language. That's not what I do.
No, but it does increase if they have to stay higher for longer and we get even fewer rate cuts than some are now talking about, it does increase the risk, does it not, of a Fed mistake? And that's legit and serious.
What's the bigger risk of a Fed mistake, though? What if they cut too early and the next CPI print is 3.8? To me, that's a bigger risk. Look, the bigger risk I think that the Fed could make right now, the bigger mistake, is to undo a lot of what they've accomplished, which frankly is not that much, but whatever. Look, if they were to see inflation seriously spike. So look, a lot of economists today are bending themselves into pretzels to try to explain why this print we got is actually not that hot. So they're saying, well, if you just think about it, X apparel, X food, X healthcare, X car insurance, it's not that bad. The reality is it's not great. So to me, the bigger risk is not the Fed staying where it is. The bigger risk is the Fed moving too early and starting to cut.
Okay, so
I don't see it the same way.
I hear you. If there's an umbrella line that would say it's keep your eye on the ball. Keep your eye on the ball that the economy's good, earnings are going to be decent, and the Fed's still going to cut. It may not cut on your timeline of what you once thought, but cuts are still coming. And just
I can't believe that I missed that.
You're going to want to be a player rather
Or
than
not missed it, but didn't take it.
glove out and go sit in the dugout.
I think that's exactly right, Scott. And I would also say 70 or 80% of the audience listening to this are people that are making ongoing investments. They're contributing to 401ks, they're adding to IRAs, they're putting new money into the market. If the reason you get to buy the stock that you've been wanting to buy down 10% from its high or 15% of its high is because the labor market is too good, if that's the reason that you get to make that next investment, that's a great reason. That's an unbelievable reason to get a discount. It's way better than the alternative.
But do I worry about, you mentioned the chips. Let's take NVIDIA out of the conversation.
It's a crowded trade.
Do I
It's a
worry
crowded
about
trade.
AMD? Do I worry about some of these other names?
Yeah, it's a really crowded trade. There's a lot of expectations already built into these stocks. People have been treating them as though it's some sort of unending secular growth story as far as the eye can
I was like, what the hell?
This, endless data
Getting tired, gang. I gotta pump it up. Pump it up. Yeah, it is trading in a channel. That's why I was saying, there's 2 reasons. Let's see how we close. See what they do in the last 15, 20 minutes of the market. I think really the decision is going to be made with PPI, European Central Rate decision, and the labor market numbers, the unemployment rate. See if it shows us that we have a consistent, we're making stride to what the Fed wants, that the Fed has not talked about for a while, because they don't want to get clipped and put on TikTok that we need the labor market to soften. They said it, but they haven't said it in a while. That is what they need and want.
I absolutely do. And Josh, I pulled a few muscles bending myself into a pretzel today. But truly, I mean, if you look at this, first of all, we have to look at
I'm still just browsing right now.
other data we've received.
See what happens here. That Tesla trade would have worked out. Would have put a little money in our pocket, but I just, when you have a green trade, you want the setup to be good for you to take it. I couldn't put that Tesla trade on because I've already been paid, and if in case there was a run back up to 174, 175, then I would have said, okay, yeah, now I want to get short because that's my game plan. 175, 175, 174, even 178 short at those levels. So yeah, I had to just let it go. Just had to learn to let it go. Oh man, guys, I'm getting tired. I need a Red Bull to keep me down. I'm reading. Fuck. I can't wait to take a shower, get a haircut. I don't think I'm going to get a haircut today, but it's coming this weekend. All right, let's keep moving. Keep looking around these markets. Reddit broke that level, by the way, guys, just so you guys know.
There's a risk-off vibe to the market with good reason. I get the overreaction. It will take PCE to probably turn this around.
So let me ask you this. Okay, so we can come to agreement that, well, the economy is really strong, therefore you don't need any rate cuts. And you don't really need one in June as long as you still think you're going to get one perhaps in July, as Josh suggested, and maybe another one into the winter. But how long is the market going to be patient enough to wait around for? What happens if July then is off the table? Is that the point of no return for the rally? I mean, at some point you have to believe that the market's going to throw its hands up in the air and say, you know what, maybe we're not going to get any. And that's going to be a problem.
So historically, what we've seen is that a lot of the rally in the stock markets occurs after the last rate hike. It's not predicated on the first rate cut. Certainly that helps.
Oh my gosh, the mic wasn't on.
There can be a significant amount of distance between.
I'm looking. Is this a Head and Shoulders? Possibly. It's not good looking. It's not like ideal, but I mean it's got what you want to see for the most part out of one, outside of this volume increasing on the bell here from Tuesday or Monday, I mean. So I am looking to see if we can get a rejection here. Maybe take Coinbase short. Maybe.
Twice without material damage.
Sorry about
in some
that.
areas of the stock market that start to scream, hey, actually, this is now the real risk, not undoing the progress, but taking us over the cliff. Where do you stand on that debate?
So I really do believe that we have seen an enormous amount of volatility in expectations around rates, and we'll continue to see that.
You think that'll
and that's
continue?
okay, because I think that really markets have been driven largely by expectations around the Fed. Not so much whether or not we'll actually see some kind of dramatic sell-off, but movements on a day-to-day basis change because of expectations around when the first rate cut will occur. I think that can continue. Markets have learned to tolerate that, and we can come back from big sell-offs.
But it can't work both ways, though, can it? If the part of the reason why the market rallied from October was on the expectation
I got crackers in my mouth. Crackers out of cracker.
So if now cuts are pushed off to, further than we thought, how can we not have some sort of market reaction to that unless...
Yeah, that's not going to be good for gold or energy. It's not going to help out gold at all. Good eye.
At the end of this, by the time the Fed actually cuts rates, we might feel like ping pong balls.
We have PPI tomorrow. What do you want to see there to confirm that you're right?
Well, I don't have high hopes for PPI, and I don't think it's that important a data point, but I'd like to see it in line with expectations.
Maybe after today it's not, all that important because maybe the market is voting on
No,
part
it
of the
is.
sell-off is
It
figuring
is.
that tomorrow's not going to be a great one either. But what about the idea that if now we need to rethink at
That's
least
true.
the level of where rates are going to be for a little while, because we're not going to get the cuts when we thought. You know, Jonathan Krinsky at BTIG is talking about the idea of long
I
duration
knew it.
assets.
Look at
like
Baba.
people struggle in this kind of environment.
See if it pulls back and tries to make a rally here, guys.
I thought rates were going to continue to come down.
All right, I might try and go long Baba real quick.
Well, it depends on what your time horizon. It depends on what your time horizon is.
I should have
Recall
shorted
there was
this.
a period this winter
I wouldn't have had
where
to go long
we
right now.
saw, longer duration asset classes, investment grade bonds, have relatively poor performance compared to high yield bonds because they had shorter duration and there were expectations that the Fed wasn't going to move as quickly, wasn't going to move as much. That can easily happen again in a relatively short period of time. It just depends what your time horizon is. If you can tolerate weakness for a couple of months, then I don't think it's an issue.
How would you address that same point from Krinsky today?
So I wanted to ask a question building on that, because you hear a lot about there being this market-wide vote that the soft landing is the way that this year ends, and there's a lot of complacency in markets right now.
I think I might trade this going into tomorrow, guys.
At the high end,
Hopefully it's not too
historically.
high, though.
You have credit spreads at near record tights, which is extraordinary given how many rate hikes we've had, plus the shrinking of the Fed's balance sheet at a rate that we've never seen before. You couple those with these ideas of there being structural forces. Jamie Dimon wrote an entire section of his letter, structural reasons for higher for longer, that really the Fed is not even in control over. Ongoing fiscal spending, the remilitarization of countries around the world, restructuring global trade, lack of investment in energy infrastructure. Each one of these feeds into longer-term, structurally higher inflation or rates or both. So what would you say to the person that says, let me get this straight, peak valuations, you want me to buy, and we think 1 or 2 rate cuts are going to matter relative to these huge forces out there.
Yeah.
The Fed can't do anything about it.
You make a great point, but what I would argue...
I wonder. Oh no, I was about to say though, it always feels like there's a party going on at the Nasdaq when you hear the background noises.
to come down.
See, it feels like a place I'd love to work at.
Forces against the idea that rates will be higher over the long term.
Not because
And I
it
would
looks like a
argue
party,
AI,
you know.
We haven't
just
seen all these
saying.
AI
Probably
stocks go up for
disinflationary.
nothing.
Yeah,
Exactly.
I agree with you.
Absolutely. So I think it's too much to say that all the forces are pushing rates higher over the long term. There are some powerful countervailing forces as well.
So you flagged, Josh, a stock that jumps out to you as one of the best in the market today, that being Delta. Do you want to address it? I don't think you own it.
I'm not long the stock. It hit my list of best stocks in the market, coincided with an earnings beat. Delta is arguably going through the best few quarters in the company's history right now, as are most companies involved in consumer and or business travel. Basically, what this speaks to is more than just the strength of the travel market. This is an economy-wide phenomenon about the consumer. And we're not saying the word resilient consumer. This is not resilience. This is something else. I would argue the consumer is absolutely unbridled in a way that I can't remember a time that was comparable.
I agree with him here.
Late 1990s. Do you see it that way? A and B.
I think the 90s were a little bit stronger.
Anywhere to go from here.
People could actually make it, but...
Well, I think we can stay relatively static, right? The consumer has been, I would argue, very resilient. I don't want to say, over the top, but there has been a strength there that has been driven by very low unemployment. And I think that strength continues because we're likely to continue to see relatively low employment and improved real wage growth. And so that tells me that we're likely to see consumers continue to spend. They'll be selective in what they spend, and certainly there's going to be some component of households that are coming under more pressure. But in general, where we've seen a lot of the wage growth is lower income households over the last several years. This is a much better picture.
So how are we getting rate cuts if what you say is continues?
Because we've seen progress on disinflation. We do not need to see economic weakness to get rate cuts.
Okay.
We are in very restrictive monetary policy territory, and the Fed admits that.
We're going to leave it there. Christina, thank you.
Thank you.
Josh Brownell, thanks to you as well. Let's send it to Christina Partsenevelos now for a look at the biggest names moving into the close. Christina.
Let's look at Roblox. It's looking for some help with its ads. According to the Wall Street Journal, the online
Oh,
gaming
Roblox.
company hired
I haven't heard
ad
that
tech
one in a
firm
while.
Hubmatic to help with sales of video ads on.
I'm looking for 74.50 area. If we can get that on Alibaba to go short. All right, 74.50 on Alibaba. Short. That's what I'm looking for.
Deckers, though, the worst S&P 500 performer right now, down about almost 7% on a Truist downgrade. The analysts are concerned about demand falling at the footwear company, specifically calling out weakness with the Hoka sneaker brand.
Christina, thank you. See you soon. We're just getting started. Up next, Goldman Sachs' Jan Hatzius is with us for his first reaction to today's hotter than expected inflation read. He'll tell us what it means for the market's rate cut expectations, for his own as well, for the economy, for everything. Join me next at Post 9 after the break.
I think it's time. I think I need to put it on right now and not eat this cracker, but put that damn foot on. Oh my gosh. Come on, bro. Give me the damn peanut butter and the salt and the cracker. Does it? The guild? Guild as in Gilead or guild as in guild? Yeah. Yep. I think Gilead had its shot and it just never performed. Just wasn't just like Novavax and Vax. That was a fun stock to trade. It sat down at $4. Think about that. This is why, you always sell. You don't just buy and hold long term. This thing was $300 some. It's back down to $4. I hope the CEO took advantage of that. They had to have known that, they were going to get blasted. Or not blasted, if it didn't work, that,
We're back. Goldman Sachs now pushing back its rate cut forecast after this morning's hot CPI print. Here with his first take on the data is the man behind that call, Jan Hatzius, chief economist and head of global investment.
Keep an eye out for solar names. They've been rallying.
We thought it was going to be a low 0.3, and it ended up being 0.4. There's also some read-through into the core PCE numbers, which ultimately are going to matter more. We'll learn more about that tomorrow morning with the PPI numbers, but we've also lifted that to 29 basis points. And since it was already, I think, a little bit cuspy whether they would cut in June, with this, it seems less likely. Could still happen, but it's not my expectation.
Okay, so you were at 3 cuts. Now you're at 2 cuts. What makes you so sure 2 is right? That's the right number now?
Well, we're never sure. As I said, I think it's possible that they cut in June and you could still get 3 cuts. I think that certainly could happen. But likewise, it's also possible that it moves back further. I mean, it's always very dependent on how the data come in. I think it tells you a lot more about the Fed than it tells you necessarily about the underlying adjustment in the economy. The disinflation, I still think a lot of the trends are improving, and you can see that in the labor market as well. But for the timing of Fed cuts, these numbers do matter.
What if the disinflation case is suddenly becoming harder to make? And it's going to be much stickier for much longer than any of us thought it would be. Are you entertaining that possibility?
I think that's less likely because for that I'd look not just at the CPI or PCE numbers, but I also look at, for example, the adjustment in the labor market, the fact that job openings have been trending down, the fact that quits have been coming down, the fact that wage growth continues to come down. All of that to me says we are disinflating, but it is taking longer. And I think the reason why it's taking longer is that some of these lagging categories in service inflation in particular, things like, for example, auto insurance and healthcare costs, they've got a longer tail than we anticipated.
So July seems to be now your base case. Is that fair to say?
That's right. July is the first cut in our new forecast.
So the PCE now becomes ever more important. What's your read through from today, what we might get tomorrow? Oh, by the way, before you even answer that question, does this make you now worried about what's going to happen tomorrow, or is it a foregone conclusion at this point that PPI is not going to be great either?
If he read
It's not
the
a foregone
FOMC, he shouldn't be worried about it.
Not that closely
Right.
related month on month. PPI will be another input into the PCE number. What they really care about is PCE.
Sure.
Most of the information for PCE comes in today's number, and then a smaller amount of information comes in tomorrow's number.
Oh, well, that means to PCE I need to worry about then. If that's the Fed's most preferred measure, and I get more data from today's CPI into the PCE, that's, I guess, the principal reason why June would be pushed off.
Exactly. And that's why we pushed it off, because we now have a higher expectation for PCE and probably too high for them to cut in June.
What about this notion that some have raised, Jamie Dimon included, that the market just got well over its skis? My words, not his. On the idea that we're going to pull this off, that we're going to have a soft landing, that we're 70 to 80% voting from a market standpoint, and that's just way too optimistic. What do you think?
I'm still very optimistic about a soft landing. I'm optimistic that the economy remains very resilient and that growth continues to be pretty good, maybe even more than pretty good. We're at close to 3% GDP growth for this year. And I also am optimistic that we are rebalancing the labor market and we will bring down inflation over time. For me, none of those things have changed. However, what has changed is the timing of the Fed adjusting, because that's going to depend a lot more on the month-on-month inflation news, which has clearly been disappointing.
As much as the idea of cuts gets pushed out, does the idea of a possible Fed mistake go up? How would you address that?
I think there's always the possibility of a Fed mistake, and of course they change their views in light of new information.
He addressed it
But
on
I don't
FOMC
think
meeting. The
likelihood
last meeting.
that they're going to make a mistake is necessarily higher now than it was in the past. If you look at, what's been happening over the last several months, they've been moving in a more hawkish direction. They've been delaying the cuts, but that's been in response to data. That's what you're supposed to do.
You feel like we're at the point also within the Fed itself that we're going to have more of a fracture as it relates to when you get the first cut and just the overall idea of cuts, that we've been in unanimity from the beginning here, and now we may have a changing road and some diverging paths. What do you think?
Well, there has been, I think, a reasonable range of views, and you saw it at the March FOMC meeting where you had basically 10 people with 3 cuts or more, and 9 with 2 cuts or less. So that's what I meant by it was already sort of cuspy. And yeah, I mean, there is a range of views, and it's clearly greater than it was a couple of years ago when they all thought inflation is much worse than we thought, and so we have to hike aggressively, and there was a lot of unity.
Do you think there's a chance also, lastly, of proactive, if you want to call it, move?
I think we're going to have to
give the market a nod.
I'm going to have to wait until tomorrow to try to get Alibaba. It's already 3:30. It's just not giving me what I wanted. You know, I need a bounce, and it's not giving it to us just yet. Maybe we can take that trade right into the close. We'll have to see. I just think it's not giving us the trade yet. I mean, 74.50 is pretty close to where we are. You know, it is what it is, I guess. I was hoping to be able to get a small little rally, and then shift. You know, see if we can't get a little downside going here. But you know, you gotta watch. These things can trade funny at times, so you gotta watch out. But yeah, if I get into anything, I'll let you guys know. I'm sitting here watching Baba to see if I can do something. All right, we got just a couple more minutes. Hang in there. Hang in there.
looks like me.
Welcome back. We're still deep in the red as we head towards the close. We're off the lows, though, after that hotter than expected consumer inflation read, raising doubts now about when the Fed might cut rates. Joining me now, Post 9 with her Fed playbook is Citi Research Global Head Lucy Baldwin. Nice to see you.
Thanks for having me.
All right. So how, if at all, did this morning's shocker for many impact your outlook?
It wasn't a game changer from our perspective. So, yes, it was a hotter reading than the consensus expected and slightly hotter than we expected. But as we look into how that translates to core PCE, which, of course, is the key Fed measure.
That's right.
For us, it's not actually so material in the sense that a number of the categories that were hotter this time don't really translate. So, of course, we'll see what the PPI print brings. But for us, we're still sticking with our call that we're going to get a cut in June, and that will be the first of a number of cuts this year. And we're still expecting 125 basis points of cuts this year in total.
Okay, so we're getting cuts. Does that mean you're bullish stocks?
It actually does mean we're bullish stocks, but not super bullish. So I would say it's sort of constructive with some caveats. So our Goldilocks scenario that we've been talking about this year for stocks is 5,700. But really, for that to come through.
That's a really nice bounce on Tesla real quick. See, now they're starting to just run this stuff back. I was really curious how we were going to close it. I'm like, yeah, let's watch that last 20 minutes to that last 15 to 20 minutes and see what they do going into tomorrow, because I still think Tesla's got some downside, but I am curious right now. Man, I want that 174 test real bad, bro. I want that test real bad. I want that 174 again. I'm really upset she gave us 175, guys, and I was a little too slow. Tomorrow, my goal is going to be literally just stick to the pre-market game plan. Nice. Yeah, I haven't done that yet. I haven't driven a tank either. My pops and his friend, they bought a tank. And it'd be cool to like drive it and stuff, and I haven't. But yeah, dude, awesome, bro. You have a great night, Basic. Have a great day, bro. I had a really good day today. Yeah, tomorrow's another day. A lot more volatility to come. All right, I'll be on in the morning. We'll have the levels. We'll stick to it. Stick to the script. I mean, that's all. And we'll see what type of moves, what type of news we have. Remember, airlines, we still have banks like JP Morgan and stuff. We have earnings Friday. So earnings are kicking off. We had Delta Airlines today. And yeah, so I'll see you tomorrow, bro. Yeah, man, you have a great rest of your night, bro. And anyone else that's out there and y'all are listening, I hope y'all have a wonderful night. I'm not going nowhere just yet. It's not time for me to clock out yet. Okay, my boss is gonna yell at me, talking about, oh, you just gonna leave right when shit is about to get busy. You gonna leave, huh? Okay. I see you. So I don't want to make the boss man mad. Let's see here. I don't even know what I'm going to do this afternoon, outside of what I kind of do every day. I think I'm going to really work hard. Not work hard, but obviously work hard. That's a fucking given. But excuse my language. I'm really trying to work on these pictures and how I'm going to get these pictures into the book. And I'm like, trying to figure out what is the best way to do that, along with like having arrows and like things to say, hey, bada bing, bada boom, so maybe I need to ask the psychiatrist. I'm just playing. Don't take it so hard. It's just a joke, man. I'm just playing. Y'all are probably like, what the hell is he talking about? Yesterday was fun. No, it wasn't fun. It was just, it got a little chaotic. In here. Things happen when you sit and look at a monitor for 8 hours straight and talk to yourself. It can get a little spicy. That's all I'm gonna say. But yeah, 20-day, man. 20-day moving average. Here's what I think. Here's my opinion on Tesla. I'm really curious if they try to do the same thing that they did today. Just slowly grind it, and they do it so slow that your puts do not pay. I think that happens. It wouldn't surprise me, at least. At least it would not surprise me. We'll see. I need to look at semiconductors, AMD. I mean, not really, but... So, Reddit, I was wanting to short Reddit here on the break of this level. Was waiting for like a month, you know, trying to pick my spot because, you know, they opened up options and, whoa, dude. Sorry, this scanner, it's just being a little weird. All right, let's actually look at the scanner and see what we have here that's making highs and all that fun stuff. And MNDR, wouldn't put it past him. Let's give a funny thought. If Powell called, let's see here, dude, what is going on? Okay. All right, let's do it. ALPN. That's popping off right now. Oh, snap. Oh, snap.
The Bond Report is brought to you by PIMCO, a global leader in active fixed income. The windows come down. The shoes go off.
Has ICCT keep trying to go? It does. It might be an after hours. Yeah. Bro, it's just been these dollar names. That's crazy. So you got the 200-day sitting right there. If you can break above it, if you can just test it, test the waters, break above it, you got some room. I would... God, I wish I could just say, here, let me help you. Not that, I might buy it. Hold on.
Has your advisor created a portfolio based only on your age and risk tolerance? That's simply not good enough. At Creative Planning, our private wealth managers learn about you first. Don't settle for a standard portfolio. Book your free meeting today at creativeplanning.com.
It's got room to $1.80. Risk to reward at that point, you know, is it worth it? You know. SPY is so flat, but they're holding this thing up, man. And I mean, the volume's to the downside. I just think, you know, it's been a tiring day. It's been exhausting the past couple of days. Yeah, they're talking about Kava. I was looking at. What an exhausting day.
Separately, though, Kava topped Yelp's list of fastest growing retail brands based on net new locations and consumer searches on its platform. Crazy feta dip, anyone? That's my favorite. Good RX.
I have not been to Kava yet.
Who upgraded the telemedicine service firm to overweight with a price target of $9. Shares are trading just at about $7 right now. They like the strong subscriber growth and the increase in downloads, which I think is a positive sign for future growth. Shares are up about 3.5%. Scott.
All right, Christine, appreciate that. Christine, parts of Neville is still ahead. A home builder headache.
I'm gonna have to stand up, guys. Keep falling asleep looking at the screen. I'm tired. All right. Let's go back to Baba.
Based on net new locations and consumer searches on its platform. Crazy feta dip, anyone? That's my fave. Good RX also getting some love from analysts at KeyBank, who upgraded the telemedicine service firm to overweight with a price target of $9. Shares are trading just at about $7 right now. They like the strong subscriber growth and the increase in downloads, which I think is a positive sign for future growth. Shares are up about 3.5%. Scott.
All right, Christina, appreciate that. Christina Parts-Neville is still ahead. A home builder headache. Housing stocks coming under pressure today. That space having one of its worst days of the year. We're going to break down what's driving the move lower. Rates are obviously
I have not even looked at what was going on as far as like the heat map in the overall markets. Let's see. Yeah, guys, I think we're going to stay here for the last 10 minutes, see how the day closes. I probably won't put anything on. I'll let Baba go. You know, I wanted to try and, this morning it was a short idea on the pop. I just didn't take it. I should have just put it on and kind of just even went smaller. You don't have to go full position size every time, but I felt really, really strong about that pullback, and that pullback gave you over 100%. Those options went from 20 cents to like 46 cents in like 10 minutes. I'm like, oh snap, I had no idea. So that's that. Oh look, hasty trade. Look, I have only said that word once, and then look, all the stuff's coming up. So, it's so funny. Don't be putting freaking cookies up on my shiz. That's how computers go bad, y'all. I mean, it's a lot of reasons, with time and stuff, and it's a device. But, I don't know. I don't even know why I said that. I'm just saying, in case you guys didn't know. Because I never really knew. But once I looked into it, I'm like, oh shit. Because the needle, it's like a little needle thing on the hard drive, and it prints on the hard drive, and boop. It gives you a little tattoo. And they follow you around. So, just trust the people you let tattoo your computer. And you and yourself. Alright? They have a motive, I promise. Man, everything is red except for Nvidia, Alibaba, and Walmart. So we're going to go play our video games, and we're going to buy the cheap stuff, and we got our Walmart. We can still eat. We might even be able to buy a tent. That's so funny. And the energy is really high right now. That's so funny. Like, everything is red except for Nvidia, Walmart, and Baba. Oh, GE. I don't know how GE is still green. We're not going to need it, according to this thing. According to this chart, it's doomsday. Just play your video games. Go get some snacks from Walmart. And if you don't have a computer or anything, go order it off of Baba. And remember, bust bus, I don't know, tickets. I don't know what they're called. I don't use the bus. I have my own vehicles. Gas is up, so it's not, transportation's a little bit more expensive. I don't know. I'm going crazy, that's all. Oh, and look, you got one bank to deposit your money for crypto to buy the stuff off of Baba. Or to buy it off of whatever, internet game or whatever you got going on. That's so funny. Coinbase. Fucking Bitco, HSBC, Nvidia, Baba, and Walmart. That's all we need. That's all we need. Again, it's just a joke. Freaking Michael Saylor. No, I'm still holding, bro. Oh. You still holding from 2019? No, I'm just kidding. I'm just kidding. I think Michael Saylor did just sell. I just seen MSTR somewhere here. I don't know. Let me not talk anymore because I'm really tired, guys. I'm really tired. Alright, so there goes, is that Baba? It is. There's Baba. See if we can't get, see, it still needs to bounce. This is, man, I feel like it still needs to, like, let's see, 15 minutes. Let me see what we got here.
You know, technology can't answer those questions, but RIAs can. And when you're supported by someone who's faced them too, it's much easier. It's more than tech, more than service. What matters is having a custodial service provider who gets you and treats RIAs like they treat you.
All right.
That's trade deal.
Let's keep it moving. Let's go. Gotta wake up. I wonder how the how MSOS has been doing. I know there for a little bit it was trying to pop up. Oh, sell off at the end of the day. Funny, funny, funny honey. Honey smells funny. Let's go. Oh shit. About to bust it up. Let's go. Come on, let's go. What do we got? We got 5 minutes. 5 minutes.
Yeah, it didn't ever get all that disorderly. The good news is, and this has been the case for a while, this has not been an acutely Fed-dependent market. Now, it's been part of the story that we were going to get rate cuts, but the market's sort of showing you here there's other things going on. What I do think has changed to a degree with the inflation number is a month ago we were living in a world without trade-offs. Okay, there were no trade-offs between a good economy and what the Fed was going to be able to do on easing.
Sorry, I didn't mean to breathe so loud in the mic, but
And Diana Olick on home builders heading for their worst day since October. Mike, I'll begin with you. John, we're off the worst levels, and we do have some nibbling in some of these mega caps like Meta, Nvidia, and Amazon.
Yeah, it didn't ever get all that disorderly. The good news is, and this has been the case for a while, this has not been an acutely Fed-dependent market. Now, it's been part of the story that we were going to get rate cuts, but the market's sort of showing you here there's other things going on. What I do think has changed to a degree with the inflation number is a month ago we were living in a world without trade-offs. Okay, there were no trade-offs between a good economy and what the Fed was going to be able to do on easing. They were going to be easing into record high stock market and a 3% GDP, and it was going to be great because inflation was going to be taking care of itself. Now you might need a new theory of the case. You need to revise your theory of the case, and the risk is not in the here and now.
They're talking about Alibaba right now on CNBC.
The risk is that the Fed has to say, you know, we thought we could get lucky. We thought we didn't.
Why?
Have to
When did
really
he
sell
stop
off
being the
growth in
CEO?
services sector to get inflation where it wants to be. Maybe we were wrong about that. That's going to take a
He
while
disappeared
for them
from
to come to
public
a
life.
conclusion, but it just,
This is why you
it's
can't
a more
invest in this
complicated
stuff.
story, one that does involve trade-offs in a market, and you know I've been on pullback patrol since we were under 5,100. Okay, so we're still above that right now. So we needed a grab on some excuse to let out some of the pressure, and we've done it. In 4 weeks, we've gone sideways in a somewhat constructive way.
All right, come back to you in a moment. Deirdre Bose is following why Alibaba shares are higher during this sell-off today, Dee.
Well, put simply, Jack Ma is back, or at least he's writing memos to Alibaba staff, and that's about as much as we've got over the last few years. Investors are taking this as a positive signal. The charismatic founder is no longer persona non grata and may even come back to help in this turnaround. The stock really tells the entire story here. November 2020, that is when Jack Ma all but disappeared from public life, and regulators began going after Ant Group first and then affiliate Alibaba. Billions of dollars in value wiped out since then. Baba's loss, though, has been e-commerce rival Pinduoduo's gain. Look at how PDD has outperformed over the last 12 months and, by the way, managed to do what Alibaba could not, break into the U.S. market with Temu. This year, however, look at what's happened, a bit of a turnaround here. There's more optimism around Alibaba's story, and part of that has to do with Jack Ma, still one of the most recognizable Chinese business leaders ever. And remember that the CEO, Daniel Zhang, stepped down, so Alibaba coming in at just the right moment, Jack Ma coming in at just the right moment could be positive, but I will say we haven't heard a whole lot yet, so this could be premature.
All right, I got 1 minute to figure out if I'm going to put this on or not.
Happening in the home builders today, ground zero of sorts for this move higher in rates and this, inflation print this morning.
Yeah, you said it, Scott. The average rate on the 30-year fix jumped nearly 1/4 percentage rate point following this morning's hotter than expected CPI. We are now at the highest level since the end of November. The home builders, of course, are taking it on the chin. The home construction ETF ITB falling below its 50-day moving average, down over 3% on the day, but still up about 6% year to date, and a whopping 57% year over year. It includes not just home builders, but home remodeling names like Lowe's, Home Depot, and Sherwin-Williams. And of course, mortgage names like Rocket and United Wholesale Mortgage. Rocket down over 10% on the day. And let's not forget the REITs, of course, having a particularly rough day across all sectors. Boston Properties, Avalon Bay, and Digital Realty, just to name a few. REITs are particularly rate sensitive.
20 seconds, guys. So it's now or never right there. Bang. You're going to take it? Take it. If not,
Diana, thank you.
hang it up.
Following that story for us
I'm
today.
really
Back to
thinking
you, got
about
less
it.
than 90 seconds to go.
The
So
options
market's
never
gonna be
went down.
patient, right? It's going to have to be more patient than it thought. And the question is, for how long can that last?
Yes. Well, we're going to get a little bit of a clue. Honestly, we keep pointing to the PPI number tomorrow. I think there is a sense in there that the market
Oh my
recognizes
God, that hurts so bad. All right, guys, I love you all. Have a great day. If you guys need me, hit me up on Twitter, X. Donate to the stream. If you guys, are making any money, let me know. Hit that like button. Subscribe if you haven't done so. We're doing a giveaway. We are doing a giveaway. If you want half the donation to go to the giveaway, we'll do that too. All right. Want you guys have a great night. We still got a lot of volatility coming up on the way. I want to thank all of you all for being here. Share this with a friend. Share with a friend. I'm going to get through this week, clean myself up, start promoting a little bit. Hopefully we can get some more people on here, get a real group going, and really start breaking bricks down, okay? I'm just really, at the end of the day, I'm very thankful that the analysis has been spot on. Today with Tesla, again, back to back to back to back. All you got to do, I give you guys the analysis. Just put yourself there, put it on, let it work. Baba Short, you would have found yourself, if you took the expiration that I told you guys that I was looking at, the expiration I was looking at, you'd have had 100% just on VWAP to the 100-day move. So, but I love you guys. Please hit that like button. Please share this. Have a great night. We'll either meet back tonight or tomorrow. And let's finish the week off strong. I'm going to be really looking to be able to just attack a few different names. See what news we get. Baba's going to be on the list. And a few others. Have a great night. I love you guys. Hit that like button, subscribe. Peace out.